So, good morning, everyone. Welcome to our annual PQ Magazine and LSBU Business School Conference. We are in our 6th year, which is incredibly exciting. So today's conference is called Accountants Are the New Innovators. Don't be left behind. And as Sarah has just been saying, we like to be very innovative at LSBU. We're very proud of the partnerships that we have formed and the external bodies that we're working with. You'll see that I'm joined on screen by a number of faces who you're going to meet over the course of today, as well as many more. So do stay tuned, use the link to dip in and out of the day and the sessions that interest you, and we'll also be recording this event so you can share with anyone who might be interested in watching later. Please do your support can help us bring the conversations that take place today to a much wider audience. So just to take you through a bit of virtual housekeeping before I hand over to Sarah for a more formal welcome. You were in Zoom webinar, which means we can't see or hear you, but you can communicate in a number of ways. There's the chat box, and it's great to see you making use of that already. Please continue to do so to share your introductions. Continue to let us know who you are, what you do, and where you're joining us from. In the absence of seeing you face to face, wonderful knowing who our audience are. You can also share your thoughts and comments on Twitter, and I'll pop the hashtag and Twitter handles in the chat box shortly. There's also the Q&A box. Please reserve your questions for the Q&A box. If you pop them in the chat box, they can get a bit lost in the conversation. So pop your questions in the Q&A box, let us know who they're for, and we have factored in Q&A time during each session today. You can also upvote on the questions you most want answered by clicking the little thumbs up symbol, and that boosts them to the top. You'll see that closed captionings are enabled, and we do enable those in the interest of accessibility and inclusivity. And to enable those, you just click on CC Show Captions in the bottom function bar. And if you click on the little up arrow next to that, you can change the settings on your own end, which is great. So I'll be in the background if you have any questions at all. I'm going to hand over to my wonderful colleague, Sarah Moore-Williams, Dean of LSBU Business School. Sarah, over to you.
Thank you, Neil, and good morning, everyone. I can see we've got people from all over the world, and it's an absolute pleasure for me to welcome you to the LSBU and PQ Magazine Conference for 2022. This is the 6th year of running this conference, and we are so proud of being in this space at this time, partnering with Graham and PQ to really provide state-of-the-art updates to you all with regards to accountancy, innovation, and really addressing global issues and global challenges from through an accounting lens. So it's a very exciting conference for us, and we love delivering it every year. And I'd like to thank Neil and all my colleagues, especially Usha, for working with the team to provide this opportunity for us all to get together as a community of practice. LSBU has been in business since 1892, serving the local community, upskilling the local community to enable them to find employment, relevant employment in the local community. And what we're very good at is moving with the times. That is still our mission today. But rather than teaching skills from 1892, we now teach subjects such as accountancy, HR, marketing, but particularly digital innovation and enterprise that runs through the core of all our teaching. And that for us is the backbone of delivering skills for a much improved future as a global economy and as a global community. If we do not deliver on innovation, how are we ever going to move forward? If we do not grasp those digital skills, how are we going to be able to be players in the global community of the future and have impact? So that is why this topic of innovation and accountancy is so important to us today. I'm a qualified accountant. I qualified 30 years ago. When I qualified, it was all about the nuts and bolts of bookkeeping, financial reporting, taxation, and audit. Now the profession has completely changed. The understanding of that is almost given. And what we need to do now is to ensure that as accountants, our skills are developed as consultants, as business strategists, supporting and playing a key role on boards, advising and moving businesses forward. So innovation and supporting innovation within industry is so key to an accountant's role now. So that's why we're so excited to be running this conference today. And it's my absolute pleasure to see Richard Murphy and Lord Prem Sikka on this panel together this morning. A fantastic, fantastic collaboration of minds and opinions to really kickstart this day. So without further ado, I am going to stop talking and I'm going to hand over to my good friend, I'd like to say now, and colleague, Graham. Over to you, Graham.
Thank you, Sarah. Morning, everyone. Welcome to our latest, our 6th in a series. And this year, hopefully it will be just as entertaining. We're going to kick off soon, but I wanted to talk about, I started accountancy journalism in about 1984. I had a typewriter. There was a phone, but not a smartphone on my desk. And if you talked about something in the cloud, it was something about your head's in the cloud. And computers, I think, were in huge basements. And the world is a very, very different place. 30 years on, now we could be looking at air taxis, we could be looking at drones dropping stuff outside our homes, and driverless cars. The world is going to be changing really, really quickly, and we need to make sure that you understand how it's going to change and how it's going to affect you. And there's lots of things happening. Governments now having huge influence. Things like making tax digital is something that they're pushed through. Now they're, Prem and Richard might say it's not gone all wonderfully well, or it has. But you can now go online and you can see your own tax account. You can see exactly how much pension you're going to get, which can be really depressing, and when you're actually going to receive that from the state. So everything is changing. Everything is very new, and I think we've got used to change being prevalent in our lives all the time now. But change and innovation, I think, are two different things, and I think it's the innovators who are going to really help us change things. It's a bit like the terrible things about the climate. I am one of those who's hoping that the human race is clever enough to try and solve some of these problems, rather than just allowing everything to die. So I'm optimist rather than pessimist. So I'm hoping we're going to have a great day, and I don't need to talk because there's a man here who can talk for England, so we might as well have him. It's a good friend of mine. It's Professor Prem Sikka. I knew him first as just old Professor Prem, but I recently came and visited you, didn't I, Prem, at the House of Lords, and I was really interested. He told me he had been visiting a lot of pawn shops, and I got a bit shocked, but of course it's PAWN shops he was visiting, because he wanted to find out really how the cost of living crisis was affecting people right down at real base level. People were bringing in toasters just so they could feed their children, and he's also a big campaigner of pensioners' rights. But that means he hasn't been talking enough about accountancy, and we need him to talk about accountancy, and I think it's really important we listen. Okay, so Prem, your subject today is accountants are the new innovators, don't be left behind. You have 30 minutes. I'd like you to finish in 25 so we could really have some Q&As from people, because it's very rarely that we get to actually, question you and interrogate in the same way that you interrogate everyone else. And it'd be just a wonderful opportunity. So without further ado, ladies and gentlemen, our first speaker today, Lord Sikka.
Well, good morning, everyone, and thank you, Graham, and thank you to the London South Bank University for organising this event. As everyone knows, accountants have always been innovators. John D. Rockefeller was actually an accountant, became the richest man in America. Many people may not know that bubblegum was actually invented by an accountant. Walter Deemer was an accountant who came up with the idea of a bubblegum, and the only dye he could find in his house was pink. And that is why to this very day, bubblegum tends to be pink. But I'm actually interested in a very different kind of innovation. It is not really about technology or the use of technology. I'm interested in innovations in transparency, innovations in accountability. And the biggest innovation of all that I'm looking for accountants, which they need if they want to survive in the world, is that of self-reflection, which has been in very short supply because much of accounting education focuses on technical stuff, but very little about critiquing it. And that actually is a problem. But accountants have all, as I said earlier, have been very, very successful, and they have become the world's most successful trade union of all time. True, accountancy bodies don't directly negotiate wages or working conditions with employers, but unlike any other trade union, they have actually secured state-guaranteed markets for their members. So there are no state-guaranteed markets for engineers, scientists, mathematicians, information technology experts, designers, and many others, but there are state-guaranteed markets for individuals belonging to a select few professional accountancy bodies. These individuals enjoy statutory monopoly of insolvency and audit markets, and inevitably a career in accountancy is prized, which means that there is also a social cost, which means graduates are not going into other industries, and many other industries are being starved of skilled labor. So have accountants or those who facilitate accountancy practices reflected upon the consequences of this, and I think they should. Now, we live in a world where companies, limited liability companies, local authorities, hospitals, schools, universities, all have to have an audit. Even though the audit might not deliver anything of value, they still have to have it. And of course, accounting is embedded within capitalist enterprises where it watches over capital for the benefit of absent shareholders. And all kinds of technological developments are brought to bear on watching over those economic surpluses and how they are carved up. But nevertheless, it is the monopoly of the external audit which has provided a springboard for selling all kinds of other services by accounting firms. The cult of consultancy is now well established in the UK, and big accounting firms are also leaders in this. Consultancy is highly profitable and results in employment of even more accountants. So by way of reflection, ask yourself, what kind of a future does a country have when it has 400,000 professionally qualified accountants? Because that is how many there are in the UK. That is the highest number per capita in the world. But that has not really given us good corporate governance, good auditing, good financial statements, any freedom from fraud, fiddles, or tax avoidance. And indeed, under the logic of accounting, accountants may use all kinds of technological software and other devices, but under the logic of accounting, short-termism has become deeply ingrained. And the UK invests less than 20% of its GDP into productive assets, which then has created an economic crisis and also results in low productivity. UK languishes near the bottom of the European League in terms of investment in productive assets. And when I speak to people in big accounting firms, they tell us that about 25% of the accountants they employ are engaged in tax planning, which is a euphemism for saying, well, we are here to help you to reduce your tax bills. Accounting firms obviously compete against each other, which gives them a spur for technical innovation. They will try to reduce the labor content, use more perhaps software, artificial intelligence, and other devices in order to reduce their costs and be profitable. But many scandals show us that often technology is no substitute for human judgments, human endeavors. Whenever we look at any of the accounting scandals, whether at BHS, Carillion, London Capital and Finance, Patisserie Valerie, it shows us that accountants and the auditors often did not reflect upon the kind of techniques they were using. They did not reflect upon the consequences of what they were doing. So again, that is something that concerns me a great deal, and I would like to see educational innovations. I would like to see innovations in the way accountants are taught and the way they engage in their practices. Now, of course, as I said, firms compete to win more clients, but is that the end of it? At the end, they also have to ask themselves whether what they are doing is socially useful. Over the years, accountants have shown considerable ingenuity in adapting existing technologies. Note the words I use, adapting. They've not necessarily been innovating new technologies, they adapt them. And this adaptation has deep roots. If you look at the accounting history, accounting ratios were widely used in financial analysis in the 18th century, often by people who are fairly illiterate, but they developed simple rules of thumb that if your assets were twice as much as compared to your liabilities, then they thought, well, the business was okay, and they would lend money to that business. And that led to a kind of a mythical establishment in the accounting literature that you needed a working capital ratio of 2 to 1, which just remains mythical. But these myths have become part of accounting education. Those ratios are not necessarily that useful. And besides, the ratio of 2 to 1 was established in the era of deflation. We are living in inflationary time. How good are these accounting ratios in inflationary times? And should anybody really be using them as textbooks actually talk about them? With the emergence of industrial revolution, engineers were very interested in measuring depreciation, but they had an entirely different approach compared to accounting. They viewed a machine or an automobile as a stock of hours of use. For example, a car may have a useful life of 100,000 miles, but with each mile of driving, it becomes difficult to extract the remainder of the miles, or if you like, the stock of miles. And that then depends upon regular repair, maintenance, and the extent of that increases as the cars get older. And eventually a position is reached where the cost of maintaining and repair far exceeds the value of the miles which may be locked in the car. At that point, you say the car ought to be ditched or to be replaced. Engineers were incredibly methodical and were really interested in establishing an optimal life of assets. Accountants stole the ideas from engineers about depreciation, but did not adopt the engineer's logic. If you look at any accounting textbook and look at the discussion of how do you estimate the optimal life, well, I'm afraid the optimal life is just plucked out of thin air. And frequently depreciation has just become a tool for creative accounting. And of course, that leads to other kind of problems. So accountants were adapting other people's ideas, something they continue to do to this day. Cost accounting, or what some people would now call management accounting, was a product of a 19th century approach to what some people call the scientific management. Josiah Wedgwood, running potteries factories in the Midlands, which is part of England, was a pioneer of this. But these kind of approaches were not really led by accountants. They were all developed by people from other disciplines. Cost accounting received a major boost during the First World War. The state needed arms, ammunition, machines, and industrial goods, so it promoted a cost-plus system of contracting. And whenever you talk about cost-plus system of contracting, well, you're opening yourself up to abuses. And what the entrepreneurs did, they allocated their overheads in such a way that the government contracts appear to be more costly, hence more profits. And they also invented fictitious and dubious costs as well. At that point, cost accounting was dominated by females because it was not considered to be an important job, and women were poorly paid, and they did actually cost accounting. So government appointed inspectors to go and examine these records. Suddenly, cost accounting became incredibly important, and increasingly senior positions in cost accounting were taken up by men. And in 1919, the Institute of Cost and Works Accountants was formed. So again, this is an idea borrowed from other disciplines, and the Institute of Cost and Works eventually became Chartered Institute of Management Accountants, and in 2017, it morphed into the Association of International Certified Professional Accountants. A lot of the accounting practices that we have today date back to 17th and 18th centuries. Accountants have simply not reflected upon them. A good example is goodwill. And in the early days, accountants, what we now call accountants, essentially worked for law firms specializing in bankruptcy. Accountants acted as bailiffs. Bailiffs would go around to take possession of people's assets that never looked at the complementarity of assets. It's a bit like visiting somebody's house to possess an asset, and you can get hold of one shoe. Well, accountants would come back and say, well, what is this one shoe worth? Well, that is worth £1. Next day, they visit that house again and grab the other shoe. Well, that other shoe is now worth another £1, but somebody said, I am willing to pay for the pair, let us say £50. Accountants never developed the idea that they need to have to value the whole. So they said, well, £50 is what you are willing to pay. The separate value of the assets is £1 each, that is £2, the other £48 is goodwill. And that is a crazy logic. It goes back to 17th, 18th century. And here we are in the 21st century. It still survives. Accountants have never, ever taken the trouble to learn how to value assets which are complementary. And that continues to dog financial reporting. And indeed, goodwill was at the heart of the Carillion scandal, which we had a few years ago. Even in the 1960s, accountants frowned upon the use of discounted cash flows and present values, though economists long advocated them. Eventually, that resistance was broken, and today, discounted cash flows form the backbone of many accounting standards. For example, those relating to pensions, leasing, financial instruments, and so on. So again, I can remember going into teaching in 1979, and a bunch of us decided that we should teach about information technology. We had external advisors. These were people who worked in industry and commerce, and they were accountants. We consulted them, and they all advised us not to teach information technology because it was just a fad and it would disappear. Well, we disagreed with them, and as they say, the rest is now history. People may also associate accounting and accountability and transparency with the accounting, and accountability and transparency may be associated, but accountants have actually not been very keen on it at all, particularly when it relates to audits. Resolutions to appoint or reappoint auditors at company AGMs are hardly ever accompanied by any meaningful information. There is no sight of audit tender or audit contract. No information is provided about the composition of the audit team or the time budget. There is no list of questions which the auditors asked, no sight of any management representation, and audit files remain completely secret. This secrecy obstructs auditor accountability. How can we hold somebody to account? After all, that is the main claim of accountants, that they hold others to account. But there has been virtually no innovation in auditor accountability. Over the years, accountancy bodies have also resisted disclosures in financial statements. And often the state and public opinion had to override their resistance. So just to give you a few examples, which may surprise some of you. In 1925, the Green Committee took evidence to reform company law, and it recommended that companies should publish the profit and loss account, which we all take for granted now. The ICAW opposed such reforms, and it said, and I quote, "A profit and loss account is more likely to do harm than good." Shareholders have the remedy to a large extent in their own hands. They can and do ask questions at the general meetings. The business done by limited companies on the whole is transacted by directors and managers who are honest, and if in some cases they disclose in the published accounts less than some people desire, the absence of detail is in most cases wise. So see how professional bodies resist disclosures. Give you another example about the consolidated accounts. And this is what the ICAW told this parliamentary committee. It is considered undesirable to prescribe by legislation any rule for dealing with the accounts of holding companies with their subsidiaries. In the opinion of the council, the form of balance sheet should at present be left to the directors and the shareholders. To prepare a consolidated balance sheet would not show the true position of the company. Again, these may represent the flavors of the time, but we are all shaped by history, and I'll come to more recent examples in a moment. Secret reserves were, which were really a precursor to what many people subsequently called creative accounting, were the norm. Matters came to a head in the 1930 Royal Mail Steam Packet Company case, and in this case, the auditor of the company was charged with aiding the publication of false accounts. The president of the ICAW was called as a witness, and he defended the use of secret reserves. And the ICAW said, secret reserves or inner reserves are in certain cases desirable and in many cases essential. If business carried on by joint stock companies are to be successful in the future, as in the past, too much disclosure should not be insisted. Well, there we are. After the Second World War, there was a push to put replacement costs in the balance sheets of companies. And the ICAW said, and I quote, fixed assets should not be written up. In the 1960s, mergers and acquisitions accelerated, and there was a disclosure. There was a call that companies should publish their turnover. And the ICAW said that disclosure of sales data is, and I quote, likely to be misleading or harmful to the company. In 1989, I personally became involved with disclosures about fees paid to auditors for non-auditing services. I was advisor to the Labour Party, which piloted the Companies Act 1989, and that act made it compulsory for companies to disclose the fees paid to auditors for non-audit services. There was no end of opposition from the ICAW on that. So for the best part of 20th century, accountancy firms and professional bodies have opposed any association between audit and fraud detection, something which the judges had to overrule them. They also opposed duty for regulators to supervise audit firms and prepare reports on the quality of audits, as actually happens. So basically, accountancy firms and bodies have been highly partisan. Does not seem to suggest that they reflect on what is in the public interest, and they seem to be promoting their own interests. And that is evident from scandals. So just one last example. In 2016, I was invited by the House of Commons Work and Pensions Committee to help investigate the collapse of BHS, which was a big retailer in the UK. I began my investigation and came across many strange things, which have subsequently been publicly documented. For example, at BHS, the audit partner from PricewaterhouseCoopers was only timetabled to spend 2 hours to do an audit, 31 hours on consultancy. The audit team was under the control of somebody with only 1 year's post-qualification experience, and it was fairly evident that audit was really botched, as the regulator subsequently concluded. The audit report was backdated by the audit partner to keep the directors happy. So I asked the question again, where is self-reflection? That is what we need to innovate on. Technology is simply a means of achieving something. But if we don't self-reflect on what the profession is about, how we serve the stakeholders, how we serve the general public, that kind of a profession will not really get public respect or will not easily survive in the future. So I pause there. Thank you very much.
Graham,
thanks for that, Prem. Neil, do we have any questions for Prem? People, please do ask Prem questions. It's a rare thing for us to do. We can ask him any questions you like, really. Perhaps while we're waiting, I'll ask you one. Quite a long time ago, when we were talking, you talked about maybe accountants should be looking at philosophy as well. It's something that you thought they should be learning. Is that right? Is that something you still believe, Prem?
Yeah, I think people often talk, I mean, accounting has rules and techniques, but those rules and techniques don't fall out of thin air. They're constituted by politics, constituted by social arrangements. And unless you understand this thing called society, it is very difficult, to see how accounting succeeds or how it fails. So with that in sort of mind, I have always argued that accountancy education should be grounded in social sciences, which would include philosophies, even sociology, politics, liberal arts, if you like, generally. Otherwise, you can't relate accounting to social issues and problems. While we are waiting, if I just give you a quick illustration. So in accounting logic, we say payment of wages is a cost. Yeah, payment of tax is a cost. Now, what that means is, if something is a cost, it is a burden. All burdens must be reduced. So accounting then becomes a motor for reducing wages and creating poverty. It becomes a motor for tax avoidance because it is seen as a burden. And then accounting tells you, well, dividends are a reward. And that means you enrich a small section of the population. So, and all this is locked up in shareholder-centric model of corporate governance. Alternative models are available. They can be developed. They can be taught. We can completely change our practices. But none of this seems to form any part of professional education. So when people are looking around and saying, why are so many people poor? Why are taxes being avoided? And my first response is, have you looked at the logic of accounting, what it is doing? So accounting from this perspective, the perspective I just mentioned, seems incapable of serving broader social interests. And this is what I'm saying, we can all get besotted with adoption of technology, but really that is important. But the more important thing is, what do accountants do?
But haven't the professional bodies now taken ethics to a much? They actually include ethics now much more in their syllabuses. They are trying to address the ideas of skepticism and the way that they actually work in audit. I mean, they have recognised that there might have been some issues. Surely some of the things they're doing, they're moving in the right direction.
I'm glad to hear that, and I'm sure they are innovating in education. Well, this is one reason why I went through some of the kind of things they opposed in the past, and they're still opposing. So the question to ask yourself is, if accountancy bodies themselves are incapable of ethical conduct and serving the broader public interest, then what kind of education system are they designing? So there are big questions about their own conduct.
And we have the FRC as well, Prem, and they're being changed. They're going to be much more proactive in looking at audit and how audits work. I mean, it looks like, you know, that even the government have recognised that change needs to happen, and it's now introducing some really key moves in this area, isn't it?
I think again, you know, that is all in the mix, and that is welcome. But again, you know, I mean, is the FRC pushing for public availability of audit files, audit contracts, audit tenders, composition of the audit teams, the time budget? It's not doing any of those things, and one of the possible reasons it is a problem not just with FRC but with regulators generally. I did a project a few years ago on UK regulatory bodies, and I visited many of them, and I asked the question, what is your main purpose? Without fail, we are here to serve the public and public interest. And the next question was, where is the public on your board structures? How many representatives of the stakeholders have you got? So whichever regulatory body you look at, they are dominated by the industry they are concerned with. How many people who lost their pension at Silent Night debacle, or lost their savings in Debenhams or Carillion, are sitting on the FRC? None of them. So if you want regulators to serve the broader public interest, you've got to have broader world views on regulatory bodies. And that just does not, that has not happened. And even on accountancy bodies, you often get, you know, you often get like-minded people. They bring in non-executive directors at companies, and regulatory bodies will have some consumer panels, but with no real power. So what I'm saying is we need to change these things. And of course, accountancy bodies do want their members to be technically competent, and people do need to be technically competent. Nothing wrong with being technically competent, nothing wrong with teaching techniques. But what I'm saying is we also need to reflect on what those techniques do, what their consequences are.
I'm going to jump in with one question before, because we're quickly need to move on. But Natalie asked, what do you think about accountants being proactive strategically and technically?
Well, accountants have to be proactive, but I think, you know, what many colleges and universities do, they teach. In my mind, there is a difference between teaching and learning. Learning comes out of reflection. Learning comes out of thinking about the consequences. A lot of teaching is saying, well, this is what you need to know, folks. This is IAS 39 or this IFRS or that is what you need to know. I can pick up most auditing books and you will hardly find any discussion of auditing scandals. And what do they actually tell us? They're completely obliterated from the textbooks and hardly ever get any mention in exams. So certainly you need to be proactive. That is where the future lies, because that is how we, you know, how we engage in lifelong learning.
Okay, Prem. Neil, I think that's Prem's time, isn't it?
It is. Thank you so much. We hope to see you again soon. And there are some other comments in the chat box that you might like to take a look at. So thank you so much.
Thank you, Lord Sikka, for your time.
Thank you. Our next session is how can accountants ensure they are innovators first and accountants second? Professor Richard Murphy, over to you.
Well, thank you and good morning, and how to follow Prem. I should add that Prem and I have known each other for 20 years and indeed worked together. And what I want to talk about is, you know, building on what Prem has had to say there. I don't want to duplicate, although I do want to pick up one particular theme, and that is about the profession itself. I have been challenging the Institute of Chartered Accountants over the issue of the £55 million that it has been enriched by as a result of fines paid by firms as a consequence of their failure to undertake audits properly over the last few years. And the response I've got has been exceptionally weak. I was staggered to discover that when I got my membership renewal for this year, it has gone down by about £250. Because I've been given the membership of the Institute's various technical bodies free of charge for the first time, for which I used to pay. And apparently this is because the Institute has decided out of the goodness of its heart to give it to me. But frankly, they're desperately trying to find a way to justify keeping this money, which is, in my opinion, ill-gotten. Why should I, as a chartered accountant, benefit from the failure of other chartered accountants at cost to society? The Institute really does need to improve its ethics and its transparency. The statement that it gave me on this was politely disingenuous. Avoiding the issue. I asked for support data, I was denied it all. So we do still have a major ethical problem in our profession, starting right from the top, and let's not pretend otherwise. But get back to this theme of accountants as innovators. I do genuinely believe that accountants are innovators, and I think I probably tried to evidence that. I actually have just put a link in the chat box to something that I wrote in January 2003. It was a draft accounting standard. I am probably the only man on earth who's ever written a draft accounting standard to celebrate his youngest son sleeping through the night. That gives you some indication of how badly my son slept. But during the course of his first few months of life, I actually went to a conference in Jersey in 2002 and met Prem and another chap, John Christensen. And the discussion focused upon how can we stop transfer pricing abuse by multinational companies, particularly through tax havens, which we knew was a massive technical problem, which was being promoted as a way to reduce the tax bills of large companies by the biggest firms of accountants, and which we thought should be exposed and stopped. And I said in direct response to this question that, oh, that was easy to solve. All we had to do was ask multinational companies to publish a profit and loss account and a limited balance sheet for every single country in which they operated, and some extra information like number of employees in that location. And by doing a simple series of ratios, and it really is a simple series of ratios, we'll be able to work out which companies were over allocating their profits to countries with low or no taxes. In other words, they were likely to be participating in transfer pricing abuse. I'm happy to say that that is now the law in 90 countries around the world. And as a result, I can probably, with Prem's assistance, because Prem did actually publish that first draft accounting standard, which I thought was written with an audience of two, Prem and John, but which subsequently gained a rather larger audience and became part of the OECD's base erosion and profit shifting program in 2015, hence why it's the law in around 90 countries around the world now, almost exactly in the way that I first wrote it. I can honestly say that's probably makes me the only accountant in the world who's thought up their own accounting standard and seen it become law, albeit for tax purposes only in most countries, although Australia has just made it public. That was an accountant thinking innovatively. And I think that's incredibly important, because what it demonstrates and what I try to demonstrate and what I try to talk about when I teach and in my academic work is think about what isn't there. As accountants, we are amazingly good at learning what the rules are. We're amazingly good at making sure the books balance. We're amazingly good at counting what is before us or what the rules say might be before us. And of course, nobody has ever yet spotted goodwill in the real world, because there is no such thing as goodwill that in a way that we can recognize it, as Prem has pointed out. And there are lots of problems with goodwill accounting, which I could explore, but I won't right now. But the point I'm making is that we are very good at looking at what's required of us. What we're very poor at, by and large, and I say this based upon a lot of experience as both a practicing accountant, as a campaigner, and now as an academic, is looking at what accountancy isn't asking or telling us. And I think that's the big weakness inside accountancy. And here I would, in a sense, echo what Prem says, self-reflection. What I did when I thought up country-by-country reporting was simply reflect on what was missing from accounts which would solve this problem. And it was very obvious. It was simply information by country. Now, we had segment reporting in 2002. It was then the early version by country. We then got, of course, IFRS 8 later on, which reduced the value of segment reporting. And country-by-country reporting was vehemently opposed by the IFRS In fact, they said this looks as though it might deal with transfer pricing abuse, and we don't want to go there, which was an extraordinary comment to be made in public by a member of the IFRS board. But that's what they said. And what I was doing was simply saying, with this simple information, there are in fact only 7 variables published per country. We can solve an international problem, which is costing developing countries in particular vast quantities of tax revenues that are not being paid to them and which they are entitled to receive. Now, the point was, I simply thought about what was missing. And my problem whenever I talk to most accountants is they're very good about thinking about what is inside what I call the calculable space. And the calculable space is what we can work out based upon the rules that we're presented with or the laws that we work within. So within the Companies Acts, within IFRS, within FRS 102, if that is what you're involved with, and so on. And it's not always that easy to apply those. I mean, I know full well I'm involved at the moment, and the only sort of accounting work I still really do is managing disputes between taxpayers and the revenue on how accounting standards could be interpreted for taxation purposes. And I will be finishing a letter to the revenue on that very question today, where I think they've got FRS 102 horribly wrong, and unfairly wrong for this particular situation. So I understand, that this is a real live running issue to get the rules right. And I'm not disputing the importance of getting those rules right. But the point is that most of us in accountancy don't work on accounting just in terms of statutory compliance disclosure. Most of us work in companies. Most of us are actually asking, what do accounts mean for the organizations we're working for, or the clients we're working with, or the society that we're responsible to, however we view our role. And therefore, to look beyond that calculable space, to imagine what it is that we don't know, which has not been calculated, but which is nonetheless really important to us, is where innovation should be taking place. Now, that can mean that we think about things in a different way. Prem just mentioned the point about wages or costs. Suppose we didn't balance accounts on profit, a nebulous concept again in its own right, because profit is an epiphenomenon. You can't see profit. You can't count profit. Profit is the consequence of other actions. It's actually the consequence of a job well done, as I used to teach lots and lots of my clients in my accounting firm. You can't profit maximize. And this is where I would disagree with economists, because you can't profit maximize. All you can do is supply services that people want to buy at a price that covers your costs. And as a result, you will make a profit as accountants would define it, but not actually as economists would. The two definitions, economics and accountancy, are quite different. The point is, you can't maximize profits. It's nebulous. But suppose you talked about just looking at the organization as to what is the value added by each employee. Suppose you balanced on wages and said, should we be trying to increase the reward to all the people who work here? Because if we did, would we have a happier, more committed, better trained, better motivated, better resourced, in terms of providing them with the support they need, workforce who will actually deliver, as a consequence, more for the benefit of those we're selling to, and as a consequence, we might make profit. Suppose you thought about profit in the terms of actually keeping employees happy as an epiphenomena of keeping employees happy, and if you restated the accounts in that way. Now, that might be really quite innovative and useful. It might also help solve a lot of labour disputes, because people might then understand the relevant contributions that each party is making. Now, my point is that is possible, but only if we expand the calculable space. The calculable space at the moment focuses upon profit. IFRS accounting, and as a result, UK financial reporting standards, all say that the purpose of accounting is to provide shareholders with the information on whether they wish to provide capital to the company, and the same for other suppliers of capital. It's a completely ludicrous claim to make, because shareholders have a particular relationship with the company in the 99% of companies in the UK, in the sense that they are normally the directors as well. So they don't need accounts to tell them that information. Therefore, the accounts produced under FRS standards or FRC standards are meaningless in supplying that information. And third-party suppliers of capital can always ask for additional information over and above and beyond the information supplied by FRC accountants. So why don't we rethink what accounts are for? And in fact, with my colleague Adam Lever at Sheffield, we made a lot of submissions to the government's review on the future of auditing a couple of years ago, all of which has died because we've had so many business secretaries since that we don't know where the reform of auditing might be going. But we made the point that actually there wasn't a point of reforming auditing until we got accounting right. And accounting wasn't right because accounting wasn't meeting the need of society. Suppose we simply met all the needs of society. Suppose we imagined that we were going to meet the needs, not just of shareholders and suppliers of capital, but of society at large. So do we genuinely know about not just the emissions that companies make, its impact upon climate change, but the cost of eliminating those emissions? I have now written another accounting standard, which is called Sustainable Cost Accounting. And that standard, published in March this year to happily coincide with the publication of the first draft exposure drafts from the International Sustainability Standards Board, says we can actually always put the cost of climate change on the balance sheet of a company, not by measuring the cost of climate change, but by measuring the cost of eliminating a company's impact on climate change. Literally, how much will it cost to get rid of carbon in its systems? We could do that. We could also provide the information in a format that tax authorities need. Country by country reporting would clearly assist this. It was designed to assist tax authorities to eliminate a particular form of tax abuse, but there are other forms of tax abuse where information would be of great benefit. We should be providing information, better information, to assist the workforce of companies. They want to know about pay gaps. They want to know about gender pay gaps. They want to know about ethnic pay gaps, and they are real, and they're a real consequence. Why are some people paid more, apparently, than others in an organization? Why don't we have this information? Why don't we have what we used to have at one time? Literally, number of employees by pay band, split by, say, £10,000 units, maybe £5,000 units below £50,000. Why can't we know about better information about pensions? Why is it acceptable to have a company with a pension deficit and yet not show that it might be insolvent as a consequence because it cannot meet the claim of its creditor, the shareholder, the pension fund holder, who is a worker? Is there enough information in accounts for the creditors or the debtors? Are, for example, deposits paid held in ring-fenced accounts, secured safely away from other assets so that the obligations the company has taken on to supply, for which it's taken a prepayment, will be honoured? Particularly relevant, for example, in the case of Made.com, just gone bust, where a large number of people have paid deposits and will see nothing as a result. They have bluntly been defrauded of their money. Should accountants and should accounting be able to answer that question and provide the assurance that people need on a question as basic as that? Creditor protection. Should creditors get the information they need on payment dates? None of these things are being asked in accounting, but they will be asked in your organizations. And I believe that wherever you are in accounting, what you should be anticipating is, what are the questions that people can reasonably ask of this pile of technical information that you've been responsible for producing, which they probably, frankly, don't understand. However many courses on finance for non-financial managers they've gone on, and I'm not dissing courses of finance for non-financial managers, run as many of them as you can, South Bank, because they are of benefit to people. But can you relate the information you prepared to the question those people will reasonably ask? And I think that that's where accountants show an extraordinary lack of imagination. And it's actually reflected in many of the comments that Prem makes. Let's hide the data away. Let's make it ours. Don't ask us. We just say, well, it balances. That's harder. That's easier than it used to be, by the way. Once upon a time, making your trial balance was sometimes quite difficult. I do remember going on an audit in about 1981, and the accounts were entirely manually prepared, including the consolidation. And there was an entry on what was called the extended trial balance, prepared by hand on 16-column analysis paper for those who are old enough to remember the stuff. And it was called TMIB. And I wondered what TMIB was, and it had a B on the end, so I assumed it was a bank balance. So I said, what's this balance then? And they said, oh, no, that just stands for to make it balance. The balance sheet didn't balance. So they put in a number, which they didn't know what it was, to make it balance. This was a large company, by the way. It no longer exists. It's been bought out a long time ago. But at the time, it was a quota company. And TMIB was an entry on the trial balance for the consolidation. Now, the point I'm making is that, yes, we can technically balance things, and we can comply with the standards because we have, in many cases, software to help us do that. But that doesn't answer the questions of accounts. What are accounts even for? What are they saying? Who are the users? What do those users reasonably want? How can we communicate it to them? And I believe that it's the job of accountants now to actually think, how do we play that role in society? How can we answer the questions it reasonably has that people need to know? And the first thing that I'd say is that we need to be transparent. I mean, here again, I agree with Prem, which is perhaps not surprising because we come from broadly similar positions on many issues. But I've campaigned for transparency for a long time. The thing that I find most offensive about companies' house filing of accounts is, after all these years, and as Prem referred to, a century ago, we were discussing, should we have the profit and loss account? And in the case of 90+% of companies filing accounts in the UK, I can't get the profit and loss account. I don't know who owns it, how the company makes its money. I don't know how it distributes its money. I don't know who it pays. I don't know how much tax it's paid because it isn't required to be disclosed. And that to me is just fundamentally wrong. Limited liability is a privilege granted to society to people who can literally operate with immunity from their creditors. The price of that privilege is accountability. And it's wrong that we still have the profession and others arguing that we must not put information on public record. But we need to think about how we should innovate those forms of accounts, particularly for public interest entities, to think about how we should be extending the disclosure to meet public need. Just think about that name, public interest entity. This was the whole subject of the debate on audit reform. What was the auditor going to do to make sure that the public got the information they need from the entities that are of such significance that their failure would have impact upon society at large? The recognition is there that the whole basis of accounting, that it's just for the shareholders and providers of capital, is wrong, because there is such a thing as a public interest entity, and there are now maybe 5,000 of them. And yet we aren't talking about these entities as if they are actually what they really are, and that is macroeconomic entities and not microeconomic entities. Now, here I cross between disciplines, and a lot of my work is interdisciplinary, and I think accounting has to become much more interdisciplinary. And again, I'll echo what Prem says. I think too much time is spent on accounting degrees, teaching technicalities. That's the job of the professions once somebody's left university. Too little time is spent asking about what is the purpose of accounting. And I think in that sense, accounting has failed to develop as a proper academic profession because it doesn't have that standard of introspection and questioning which truly identifies it as an academic discipline. And that should be what is really taught, not the technicalities. But what we need to do is then ask, what is that question that we are going to have to answer in a macroeconomic sense? Because the failure of this organization, whether it is a university, and there are universities who are at financial risk at present in the UK, I am reliably informed, because they simply do not have the funding they require, a situation that could be made much worse if the government decides to reduce the number of foreign students who may access to the UK for the wholly arbitrary reason of trying to control their migration statistics, when they should simply restate their migration statistics to reflect students in a separate category. But those sorts of risks are real. We should be able to appraise where is the risk of going to university so that we can be sure that this university can fulfill my 3-year obligation to me to close my course off. And yet that information is not actually readily available. And my point is, therefore, the innovation that we require is simply this. What is it that people need to know of us as accountants that we aren't telling them? And how can we provide it to make this a better, safer, more secure and prosperous place to live? Prosperous in the sense that we're all protected from harm. And I think that's where I want to end what I've got to say now. And let's deal with some questions.
Thank you, Richard.
Right. Thank you for that, Richard. I've got a quick question while Neil looks to see if we have any in the chat box or the Q&A. And that's about hierarchy. accountancy profession, sometimes there was a junior accountant recently that in the end didn't get fined for some of the work they did on Carillion. There's a hierarchy in accountancy, it seems to me, that might be not helping the situation. Is that something you think is there, or am I just thinking wrongly?
I think that was a very particularly interesting case, that a person who had just qualified as an accountant was made subject to professional discipline action, when quite clearly they were acting in accordance with direct instruction. And this person hadn't even, I think, reached the stage of their career where they could have qualified for a practicing certificate. In other words, they couldn't have actually expressed their own independent opinion on accounts. They were technically qualified, but they weren't actually at that level of stage of development. I think that was grossly unfair. It was quite clear that there were people who were responsible and people who were caught up in the crossfire in that case, and the action was brought against the wrong person. But this is very common. Look at the pages of the various professional journals where disciplinary hearings are heard within accountancy, and you will see that there are a large number of small firms who are picked up for what are frankly pretty insignificant errors. I'm not saying they should not have been dealt with, but there are some pretty daft things that are penalized in a big way. When we get to the large firms, what we discover is, of course, that they're incredibly able to delay action, to basically use mechanisms to prevent disclosure of actions for a long period of time by suggesting that there is, legal cases in progress or whatever else. And there's a massive deferral in justice being delivered. Now, thankfully, penalties are becoming more realistic than they were. Whether they're sufficiently realistic, it still remains the case. It is still entirely possible to argue that accountants in large firms treat fines as a simple cost of doing business, and that they aren't high enough to prevent that change of attitude. And I think there is good argument for that. But what we need to do is focus on where the real problems are, and that is in the failure of audit firms to deliver what is required. I go back to what Prem says here. And the big problem, and again, I go back to the presentations I made with Adam Lever to the Department of Business about auditing reform and the submissions that we made, which were very lengthy. I think we were some of the few people who actually answered every one of the 98 questions that they raised in their consultation. Sad that we are, and nerds that might prove us to be, I don't care. The point I'm making is, we said, if you don't reform what audit is, a better audit will still audit what is basically garbage, and you still get the consequence of garbage in, garbage out. You'll just have better audited garbage. So we need to sort out what the accounting is, and the two aren't separate. In fact, what we suggested was that the future of auditing should be that the auditor should be required to make good the deficiencies in the reporting that exist within the accounting framework used by the company, which means that the stakeholders of accounts don't get the information that they require. We actually put a disclosure requirement, therefore, on the auditor to ask the question, do these accounts answer the reasonable questions that a stakeholder might have of this organization? And if they don't, the auditor should make good that shortfall. A proactive role for the auditor. I don't think most auditors want that role, but it's what we thought they should have. That's real innovation.
Okay, that's good. And Neil, do we have any other questions?
We do. We've got a few to get through.
Okay.
So a question from Eunice that was flagged by Lord Sikka, actually. How ethical are accounting practices which prioritise the interests of finance capital over all others?
Unethical. I mean, bluntly. I mean, let me be clear. Finance capital involves money. And money is simply made using one of these things. You tap a number into a keyboard if you're a bank, and you increase the value of a bank account, debit on one side, credit on the other, and hey presto, we have money. But that apparently, that ability to use a keyboard to create new money gives you a priority of financial capital over all others because they have a charge over the assets. Is it right that money that is produced costlessly by banks when making loans to companies should have priority over the claims of workers, of small creditors, of companies who might go bust as a consequence of supplying? And my answer is simply no, because where is the greatest cost to society? Banks can afford to sustain these losses by and large. They actually budget for them, let's be clear. And that's normal cost of business for them, a bad debt. But if you are a major supplier to British Home Stores, for example, you were actually producing clothes for them and it was your major line of business and they went bust, your chance of surviving that collapse was very low indeed. If you were an employee, your chance of actually surviving that collapse was actually quite low indeed, in the sense you'd have major disruption in your household finances, your career and everything else. And yet you're treated as secondary. And I don't think that's reasonable. No, financial capital should not get the priority that it does within the creditor hierarchy.
Thank you. We have a couple of questions in the Q&A box. So I'm going to try and decipher these because they're not quite clear. William says, banking should be common reason for GAAP. What is the main base of this in this case?
I admit I saw that question, William, and I'm not quite sure what you mean. I'm not arguing against there being GAAP, by the way. Let's be quite clear. I see a merit to having GAAP. I don't think that actually the accounting standards we have are good enough. I think there is far too much discretion in some areas, particularly with regard to asset valuation and goodwill valuation. And research that I've done shows that that opportunity is heavily abused, particularly by parent companies where a group is using IFRS accounting for the purposes of the group. And yet the parent company of the group prepares its own balance sheet and uses UK GAAP, for example. The differences between various forms of GAAP are heavily arbitraged by firms of accountants and their clients to generate what I believe to be artificial profits, which then result in the overpayment of dividends by many companies. In fact, research I've done shows that between 2009 and 2019, in the FTSE 350, there were 183 companies that were persistently there, and 60 of those paid out more by way of dividend than they had generated by profit over a decade. Now, you would think that is not possible, given the rules on realizable profits being the basis of dividend distribution, and yet it happened. And so you have to question, is GAAP good enough? And are the gaps, GAPS, in GAAP GAAP too big, therefore allowing the arbitrage of GAAP to actually allow abuse to take place? So I'm totally in favor of there being GAAP, and I'm in favor of it being enforced, and I'm in favor of it actually being in some areas, particularly around intangibles and asset valuation, where abuse is so high, to being much more explicit, and there being much less room for, frankly, the rather naive judgments which are accepted by auditors when it comes to discounting cash flows, future value of cash generating units for goodwill purposes and everything else. So I'm not sure what you mean by the actual question, and I've now lost it on my screen, which is even more annoying.
We'll move on to the next one if that's okay, because I'm keen to squeeze one more in, if that's okay. So Usha from our business school, we talk about how we could do this and that, but 100 years on, do you think the financial statement will ever meet the needs of society? I also think technical skills are required in order to develop critical skills.
Look, you're obviously right. You can't have critical skills if you don't teach some technical skills. And I'm not saying that we can't teach any technical skills to undergraduates, because otherwise they can't appraise what they see. And I worry about the fact that actually so many people teaching accounting are not accountants these days for that reason as well, because I think that is a problem. We do actually need to have a route in academia to help accountants who are qualified become academics for teaching purposes, because I think the interface between the two is really important. So I'm not dismissing the importance of technical stuff, but I do think we need to spend more time thinking about the conceptual issues, the frameworks on which we're operating, and not just the IFRS conceptual framework, but actually this broader issue of where do we sit within society. Do I think it could change? Yeah, look, I could rewrite it tonight and it would be totally different. The submissions that I've made indicate that. Could we do it? Yeah. I mean, country by country reporting was absolutely opposed all the way through by the big four firms of accountants. I was told I was stupid. I was told it wasn't possible to identify in which countries transactions took place by one big firm whose initials happened to be EY. I can't maybe say who they are. But they told me in 2010 it wasn't possible to work that out. And I pointed out, you're in trouble then, mate, because if you think that's the case, your client is in keeping proper books and records as are required for internal control processes. I hope you're qualifying their accounts, because you have to be able to determine where the tax liability does or does not arise. Everything that is put in the way of progress is actually nonsense in my experience. I've argued this case for many years with these firms to prove that. We could deliver reform if we wanted to. The obstacle is accountants who don't want to protect the vested interests, who are frankly using the opportunity to fleece society. And I object to society being fleeced by and with the benefit of some accountants at cost to us all.
Thank you. I'm going to squeeze in one more question just because it's proving quite popular in the Q&A box. Catalina asks, do you think environmental and social governance need more stringent regulation? If you're able to just address that quickly, that'd be great.
Yes, in a word, and no, we're not getting it. What's the evidence? The IFRS has set up the ISSB, the International Sustainability Standards Board, and it is distinct and separate from IASB, Accounting Standards Board, because they don't think that the two overlap. It's as if we had a Venn diagram. There's accounting over here with a circle, there's sustainability over here with a circle, and there's this bloody great gap in the middle, if you'll excuse my language, and they should actually be completely overlapping. We do not have a separation between environmental, social and governance rules and accounting. In fact, accounting should be a subsidiary of environmental, social and governance rules, and that is the dominant standard. But the IFRS is sticking to the idea that they're separate, and this is nice stuff on the side over here is the SG. It's not even audited. It's outside the scope of the financial statements if people want. Absolute nonsense. That is the very core of the future of accounting, and the IFRS are doing everything they can to prevent that happening by yet more greenwashing. Am I angry about it? You bet I am.
Shall we leave Richard there angry? I suppose we have to.
Thank you so much, Richard. I hope you can stick around. There's a couple more questions coming through, and if you've got time to answer those, that'd be great. We are going to go for a short comfort break. Do grab a tea, coffee, and we'll be back in about 7 minutes for our next session. Thanks so much.
Thanks, everyone.
So welcome back from the comfort break, everyone. Our next session is going to be very NHS focused, and I'd like to introduce my colleague, the wonderful Lynn Hamlin, who's going to host this session. Lynn, over to you.
Thank you very much, and welcome to everybody that's taking part in this session. I hope that by the end of this, you'll have a better understanding of careers in the NHS and also some of the approaches to succession planning that are in place through placement programmes and career development. So without further ado, it gives me great pleasure actually to welcome back Claire Granville, who is Head of Finance, Direct Commissioning, Code for the COVID vaccination programme. I'm going to hand over to you now, Claire. Thank you.
Thank you, and good morning again to everybody. You may have already heard me chatting away to Lynn in the background, so I'll just say hello to everyone. So yes, so I'm Claire Granville. I am currently Head of Finance for something called Direct Commissioning, which I'll explain in a minute, and also the COVID vaccination programme. For anybody that doesn't know what Direct Commissioning is, because I didn't when I actually got the job, you'll find with me, I'm frank and I'm open on these conversations. Direct commissioning is an element of commissioning in the NHS for things like public health, specialised commissioning, which is all of the wonder drugs and the expensive drugs and the chemotherapies and stuff. So I'm responsible for all of that. And also for the last 2 years, the COVID vaccination programme. And I think quite a lot of people today would like to hear a bit about that and the NHS. But I've also been asked to say, how did I get to where I am? Where I've done my career, because I believe there's quite a few graduates on the screens today. So actually, I didn't start as an accountant. I didn't do finance and accounting. I actually was a chemist. So I actually did chemistry at Bangor University back in the day, which I absolutely loved. And after doing my degree, I worked for a few years on a chemical plant. And again, I loved it. But the reality check was, could I really do this until I'm 67? No, I couldn't do that until I was that age. And at that point, I thought, well, actually, chemistry is quite a transferable subject. And again, when you do your degrees, I think you feel, oh, I've got to go down that path. Well, actually, I did chemistry and I'm an accountant. And at that point, I applied for quite a few graduate training schemes. And I was successful on the NHS Finance graduate scheme, which is quite nice to hear what's coming next in the presentation. And part of that was on-the-job learning and training. So as part of the graduate scheme, we were asked to do SIPFA. And again, that's the Chartered Institute of Public Financial Accounting for anybody online who wasn't aware. And you did that at the same time as working in a provider or in a commissioning arm. So actually the grad scheme for me was really good. I did my SIPFA qualification and I was in hospitals and I was learning on the ground. And I can't express enough how valuable that was for me. So again, for anyone listening, the benefit for me of doing my accountancy qualification, but in a scenario where I was in a live environment, was brilliant, because you're exposed to it from day one. It helps with the studying as well, because you can put everything into practice with the exams. So actually that for me worked really well. When I finished the graduate scheme, which was a couple of years, I moved into my first professional accountancy role. So I was qualified as Sikka, and I went into my first accountancy role in a hospital. And during the graduate scheme, I'd come to realise how much I personally loved the NHS. And for me, you'll talk about it, it's my passion, it's where I am. So I went into a hospital environment, and genuinely I loved it. So for the next 7 years, I worked my way through up as a management accountant to a senior business partner. But all of the time I was doing that, I was watching patients walk past me in the corridors. I was going into theatre to see how procedures were working. So you do your accountancy qualification, you get all of that. But when you put it into practice, I just find it's invaluable. And just being able to talk to a clinician about, well, actually, why do you need this piece of kit? What is that piece of kit? And they can take you down the corridor and say, that's the piece of kit, that's what it does. And it just really helped me personally. So again, people say, why did you do Sikka? I get a lot of, I'll be honest here, people say, why did you do Sikka? It's public finance, you've pigeonholed yourself. And I haven't. I want to just take that myth away. I didn't choose to do Sikka, I'll be honest here. It was part of the graduate scheme. I did Sikka because the graduate scheme was NHS, and Sikka primarily is public finance driven. But actually, when I take a step back and think, well, Sikka for me was excellent. It's given me networks all around the country and the world for people all over public sector, central government, housing, police, NHS, everywhere, which again, even though I'm in the NHS, having that opportunity to talk to other people in your networks is fantastic. I've got mentors, I've got lifelong friendships, but actually for me, it was career relevant because I've used it in the NHS. But actually, if I wanted to go and work in private, or I wanted to go and work completely different, have my own business, that qualification is still relevant. And I just wanted to say that here and now, because I've heard a few things about, if you do Sikka, you can't go and work private, you can't go and work worldwide. You can. I just wanted to say that. What I've also gained from Sikka is I love volunteering. I'm a massive firm believer that you can be a good accountant, you can do your job, but I like to give back. So with Sikka, I've done a lot of volunteering. So if people are listening here want to do things like that, it just enhances your wider scope on the world. So I was a former, I set up, sorry, I can just see someone saying they can't hear the conference. So I hope it's not me and it's just that said person.
We can hear you.
That's fine. So I was one of the founding members of the National Students Forum in Sikka. And I've also spent over a decade on Sikka Council, which is like the highest strategic level of Sikka. So that's also helped me in my career because, yep, doing my day job in the NHS, but I'm also doing this wider exposure to understand all of the strategic direction of public finance. So again, to people on this call, if you throw yourself into it, you can do anything you want to as well as your career. So like I said, for me, it's been a great basic grounding, the Sikka and the graduate scheme, and that is kind of how I got into the NHS then. So let me go into what people probably really want to hear about and why the NHS and what's happening. So like I say, for me, the NHS, I don't know why, but I wake up in the morning and I feel I've got a purpose. I've got a reason to get out of bed, log on. I'm not just doing my balance sheets. I'm not just doing my management accounting. I'm doing something that benefits everybody on this call, my family, the community. So for me, I actually feel like that job's given me a tangible reason to do what I'm doing. I have this desire to make the NHS the best it can be. Now, that's not just about balancing the books, but actually there's health inequality issues, there's access issues, and actually as accountants, we can drive some of that change. So again, for me personally, that's why I want to be in the NHS. You use all of those skills to develop it, really. I guess the biggest thing we've had in the last couple of years is COVID. We've all lived through COVID on this call. And I recall a couple of years ago, in fact, October 2020, I was doing my day job and I got a phone call saying, we're moving you out your day job for about 6 weeks. We need you on a COVID program. We think this could be just a small project. 2 years, 3 months later, I'm kind of just coming to the end of that project. It's been a very long project. But again, for me, that was a massive impact on the world. But for the NHS, overnight, we had to change everything. We had to change how everything, I'll talk from the accountant's point of view. Financially, we had to change what we were doing overnight. So I was put into this role. It was a new role. There was no earmarked money for this role to start with. 8th of December, in fact, I'm looking at the date, in fact, 2 years tomorrow was the anniversary of the first COVID vaccination. So at that point, we were literally like, well, how's this going to work? How are we funding this? How are we governing this? How are we managing all of this? So you can imagine it was a blank sheet of paper. But for me, that was just fascinating. As an accountant, I'm given this blank sheet of paper and said, right, run with it, but make it land, make it financially viable, make it value for money, deliver it on the public purse. And it was all of that, Lynn, we had to deal with. So I basically had to build a team of people from scratch. We had to put procedures in place. We had to build massive relationships, set up whole new teams and whole new finance regimes. I don't know how much people on this call know about the NHS, but pre-COVID, a lot of the financing of the NHS was something called payment by results. So providers were paid for kind of what they did, and it was a tariff for procedures. So if you did a knee replacement, you got X amount of money. So it was all quite managed on that basis. But once COVID hit, that financial regime was paused, and the whole way of paying for services in the NHS changed. So providers were given block income. So they weren't in some ways distracted by the nuances of finance. So we had to get through COVID. So again, it was like going back to the basics and learning how to do all of this. We stopped all the invoicing. We stopped all of those processes. So you can imagine it was trying to keep a handle on the finances was quite tough. We had to make some real critical decisions at pace, and they all needed accountability and they all needed governance, because who knows in a couple of years' time whether this becomes part of the public inquiry, we don't know. But all of that had to happen. Again, people on this call, if you reflect back many, many years, 2 years ago, you might remember the news where people were saying these nightingales were set up at pace. We didn't know whether we'd need those nightingale sites, but if you can imagine these huge sites being set up in weeks and all of those processes in place, but it got done. Now, some people have questioned that decision, but actually at the time, worldwide, those facilities were needed. We weren't sure if the NHS was going to get overwhelmed or not, but all that was done. But if you can imagine all of the procurement issues, the logistical issues, but it all got done, and behind the scenes were accountants. And I suppose segueing in the innovation, well, we had to be innovative. We'd never done this before. It was a whole new program. It was a whole new global pandemic. So we had to be completely innovative on how we delivered this program, but without forgetting our core values and our core accountancy ethics on making sure we delivered this within the public purse. It's been the COVID program for me. I would say it's been one of the most rewarding and fulfilling roles I've done in the NHS. It gave me something to get my teeth into that was different to the role I'm in. If I look outside in, and I'm happy to take this challenge because this might not be the view of everybody else, I personally feel like COVID has modernised the NHS. Now that's an interesting concept, but I personally think it's modernised the NHS. The innovations we were trying to bring in before COVID, things like the telephone consultations, the virtual consultations. If you think about the digital records, before COVID, could you see all of your records? Probably not. But you think during COVID, it's just happened behind the scenes. The innovative, you go on your telephone now, you have a COVID or you have an NHS passport. You can go into all of your GP records. You can see everything. That actually happened behind the scenes of COVID, all this digital transformation and innovation. And again, if nobody's done that, please do log into the NHS app, get your records up to date. You can order prescriptions, you can do everything. You can see all of your history on these apps, and that's all the digital direction we've gone. And I know at one point people going abroad had to have a passport. I don't know what's happened with that, but actually everybody was going on and getting their digital passport, but it was there. It had all of the vaccination information on. So for me, COVID in some respects has revolutionised the technology and revolutionised the treatments we do. So for me, that is where we went with COVID. And like I say, it was brilliant in terms of a personal development, and I totally threw myself into it. But where we are as an NHS is a tricky position. I do keep flicking between my notes because I don't want to get all of this wrong. So now we've gone from the NHS doing the claps on a Thursday night at 8 p.m. and everyone valuing that, to suddenly you read the press at the moment. We've got ambulances about to strike. We've got nurses and doctors about to strike. We've got ambulance waits of over X amount of time. We've got A&E over 12-hour waits. You've got the over 2-year waiters for all of the appointments. All of that is really negative press. And actually internally in the NHS, you've still got to find a way to keep motivated, because I don't know what it is at the moment, but it's always the negative press that is on the news. None of the positive work we're doing at the moment is making that headline. So as accountants and people within the NHS, you've got to try and keep going, because at the moment it does feel like we're getting a bit of a kick at the moment. But that's, again, personal opinion. Public finances everywhere are under extreme pressure. So in the NHS, our next target is to continue delivering for our populations, our communities. We've got to deliver, like all other public financial bodies, within an envelope. We've got to do that. The countries and the world's finances are in a really difficult position. So we've also got to be responsible for making sure for that public money, we spend wisely, but we deliver well. And I'm hoping some of the technologies we were saying earlier will help with some of those efficiencies. But as an accountant, we need that strong financial governance. We've still got to deliver our annual accounts. We've still got to deliver everything. So for me, there's a lot of pressure at the moment. And again, if I think what the NHS is going through, like, we're about to go through, I don't know if people on the call have heard about integrated care boards. So the Health and Social Care Act is changing the legislation at the moment. So CCGs, as was, clinical commissioning groups, have been disbanded. We've now got these integrated clinical boards, which are legal strategic entities. And this is about bringing together commissioners, providers, local authorities into a big strategic forum. And all that's happening at the same time as all this recovery we need to do in the NHS. So there's so much thinking about how will all this work? How do I bring this together? And actually behind the scenes, the patients don't see any of this. The patients continue to get a good service. Like I say, we're recovering from COVID and we have got to deliver on the public purse. So the autumn statement gave us 3.3 billion in. Now that sounds a really big number and we will work within that envelope, but actually it's a big number, but we probably needed a little bit more. But accountants, we will work with that to make sure the decisions are right, we spend right. And again, for everyone on the call, we then have to present all of this factual information, the positions, to our boards, our directors, our integrated care boards. So actually, you might balance the books, but you've also got to have the skills to be able to do the board reports, the communication to the people and explaining all of these financial decisions. In terms of recovery and innovation, I was trying to think of some specifics for accountants. In the NHS, there's this fantastic group being set up called NHS One Finance. And it's an overarching body bringing in the Skills Development Network, FFF, it's Future Focused Finance. And I actually went on their website to do part of this presentation because there's an innovation panel for the accountants in the NHS. And in there, we've got the chair of the group and they're looking at how all of the hospitals and the commissioners can make finance innovative. And one of the examples I picked out was we like accurate, timely information as accountants, and so do our boards. When I started back in the NHS many, many years ago, I think we were reporting to our boards roughly about day 14 of a month. This innovation panel has introduced day 1 reporting. So you can see we've improved reporting by 2 weeks, which means we get accurate, timely, and really decent financial information to our directors on day 1, which means we can look at risk management, we can do so much more with that data. Now, the innovations there is, well, how can we get it through the ledger? How do the management accounts work? And it's all of the accruals type based reporting and that they've done, but it works. And actually the information to our boards has been been excellent. Another innovation, and you might think, well, that's not innovative, that's common sense, but it's been innovative, is to get our clinicians involved in some of the financial decisions. Because actually, we can sit in our office as accountants, but if we don't engage our clinicians and our wider NHS colleagues, it actually is quite tricky. So I found by including clinicians in how finance works and the decisions we need to make, it's helped their understanding and our understanding, and bringing some common ground to these decisions, and not having people going, they've made that decision, that means this patient's going to die. Do you know that quite difficult language we've had? So for me personally, for anybody listening, engage your stakeholders in these decisions, because you'll find some of the processes and decisions are much easier. I'm reminded I'm rabbiting, but I'm just going to finish on these last few bits, Lynn, if that's all right.
Of course, yeah, absolutely. You've got 1 minute, but I think we can extend to 2 because it's been such a fascinating session. So yeah, please do carry on.
My advice to anybody on this call, for what it's worth, be yourself, don't change for anybody. I nearly did that for one of my initial directors of finance, and I'm glad I didn't. Be yourself. My other phrase is work to live, do not live to work. We will get replaced in 3 months by another accountant, but I would never get replaced as a mummy and as a wife. So that's my phrase, work to live, do not live to work. Develop your career at your own pace. Don't compare yourself to other people. Do it at your own pace. Does it matter if you're a director of finance in 10 years or 20 years? No, it doesn't. Do it at your own pace and don't ever feel threatened by other people. Throw yourself in at the deep end. Take every opportunity as it comes, especially in public finance. It's key. And don't worry about making your career decisions early, or whether you make decisions now that might affect you in the future. It doesn't. I was a chemist. I'm now an accountant. I'm a head of finance. It doesn't define you. Just go with it and make those decisions based on that heart, and go with what you enjoy doing. If you don't enjoy working, it's a long time working. Absolutely. And my final advice, don't forget your personal skills and your values. Treat people fairly, be kind. And I think if you can do all of that as a rounded accountant, you'll succeed in any role you take on, and just treat anybody how you want to be treated. And that's how I'll end the conversation then.
Well, I think I just wanted to wrap up here and give you some of the comments. So we've got somebody on the call who is who actually works and wanted to follow up on your point. I'm an innovation peer reviewer for One NHS. It's a brilliant way of sharing the value of our learning multiples when we share that learning with others. So that sort of exemplifies your point. And then a lot of people actually, one of our panelists, I haven't seen Alistair for a while. Hello, Alistair. I saw Elmas very recently, actually.
Hello.
But actually, you know, people were sort of talking about the fact that was amazing advice. That was Laura Toda, who I think added the comment previously. So yeah, I think people have really enjoyed that. And to talk to your point about working somewhere with moral purpose, that really came through in what you were talking about. And I can see Alistair now works for the NHS, and I can see him nodding in understanding and perhaps even the fact, and I'm going to ask Alistair about his COVID experiences in a minute, but perhaps even the fact that you had some medical knowledge and you familiarized yourself with what that money meant in your situation, that came across as well. So thank you.
Yeah, I just think you've got to engage people, and also don't assume everybody understands finance either. And you've just got to treat and be open and honest about that. Like, I've had clinicians be so grateful that I've explained the NHS finances, because it's complicated, and you get engagement from people if they understand it. So just communicate. That's what I would say.
In simple terms, for those of us that aren't accountants, that's probably the full stop at the end of that sentence. Okay, Claire, well, listen, thank you very much indeed for your insights. I'd like you to stay as part
I'm going to stay for this whole session and listen in, so bring me in if you need to.
I actually might do, because I do want to sort of have the employer's perspective as well as the perspective of the students. So I'm just going to start off, actually. We've heard about you and your graduate placement scheme. Elmas and Alistair, would you like to introduce yourselves? Elmas, if you go first, and then Alistair, please.
Hi, good morning. I'm Elmas. I'm a final year accounting and finance student. I took a placement in CNWL, that's Central and Northwest London NHS Trusts. I'm still there part-time at the moment. So I'm a bank staff in account payables. Yeah, it's been amazing. Your advice was really helpful actually in that sense. And as a mature student who's having a career change, I think taking the placement was the right decision for myself.
I'm going to come back and probe you a bit more on that in a minute, Elmas. Alistair, to you.
Morning, everyone. My name is Alistair de Souza. I started off as placement with Lynn's help. Final moment, obviously, I was not planning to do a placement here, but because one of my friends went to do a placement, I then chose, I rushed to Lynn. I was like, I really want to do a placement here now. Luckily, she managed to find me something. So I started my placement here in West Middlesex University Hospital. It's also merged with Chelsea. And I'm currently working for CNWL now, which I will touch on a bit more.
Okay, so can you tell us, because acronyms are very famous in your profession, so what does CNWL stand?
CNWL, so Central and Northwest NHS Foundation Trust.
Okay, that's great. So I'm just going to ask you both now, and Alistair, your perspective is going to be slightly different because you've gone on to permanent work, but Elmas, you're still working for the NHS. So I'm going to start with you, Elmas. What did you gain from your placement year and the experience of that placement year?
I think personally, because I was so unsure of whether I wanted to do management accountants or financial accountants, to get the theory in practice, that was my initial first gain. And also just to get a taste of the sector itself. When I chose finance, I mean, finance is very broad. So to actually be in it and do the work and practice it, that's when you realize whether you feel it or not. That was my gain, because I decided what professional qualification I wanted to do. Other than that, I've got numerous gains, but that was the main one.
Okay, so can you just talk to us about the other gains? Just give us a couple of examples of where you feel that you've benefited through this experience. I think just doing varying from different departments, joining management accountants, financial accountants, and working in NHS, meeting the budget holders, meeting the services, just seeing how this complex trust organization functions. It's a very proud moment for myself. Other than that, to get the actual experience of how budgets are run, how they're organized, and how these are reflected to the services by the managers, how it's all sort of linked together. And I now work in account payables, and I think account payables is not seen as like accountants, like it doesn't get the value of like financial accountants or management accountants, but account payables is the little cog in this massive organization. And just being there, I think I just assume and I just hope that we are being the best cog to make this organization run, because everything flows back to us. Every little issue of invoices of paid suppliers or received from suppliers, it comes back to us. So just being that, being part of that cog, it's been great, and it just taught me how important it is, and how accountants are super busy, and they're making things work, and they're making the month ends, and how we present these to services as well as the seniors. It's lovely to hear, because we've had this very senior person in the NHS talking about this oneness of the NHS and this driving moral purpose. And there you are as a placement student, as invested. I can feel the investment coming from you. So there is something culturally working really well here. That's from my HR lens. I'm just going to ask Alistair the same question now. So Alistair, what did you gain from your placement year? What did you gain?
I always think back and I said, I'm so proud that I've actually, got this placement, obviously, thanks to you, Lynn. So my journey is a bit of, I've been to so many different departments, hospitals, roles I've covered. So I started off with accounts payables, done a bit of accounts receivables, financial statement systems, and then management accounting. But during 6 months along the line, COVID started, and it began because it was merged with Chelsea Investments, the hospital. I was given an opportunity to stay in the hotel because I stepped in to sort of help intensive care unit, accident and emergency, urgent care, ruling out the COVID-19 vaccination programs. I've sort of helped them. So you could see me sometimes doing some daytime. I was given a hotel to live because obviously I stepped in working for intensive care. It was not really safe to go home. So Chelsea provided us hotels near Chelsea Hospital. So they gave me the desktop and everything. So I was working some morning work for finance, but also at the same time was doing a long 12-hour shift within intensive care. It was crazy because I never thought that I would see how clinical, like the pressure they had. It was just, you can imagine how the pressure in intensive care and accident emergency, it was just yeah, it was a lot to take in.
There is a picture of you, Alistair, isn't there, in full PPE garb, standing at the doorway of intensive care. So your experience really was linked in the way that Claire linked with the equipment that she was looking at, and obviously your medical background, Claire, you've got that, your chemistry background. But for Alistair, you lived through COVID and actually were supporting on the front line, weren't you?
Yes, I've done that. I'm still supporting them. So I've done a bit of urgent care. And then I moved on to communications department. And then slowly I moved to a band 5 role that came across my way as a business officer for substance misuse, drugs, alcohol, and rough sleepers. Then I'm currently working in CNWL, where Elmas is working as well. I'm currently the clinical education finance manager. And just recently, after completing 1 year, I've just starting my new role next month as a business manager for CAM services in Brent. So wow, yeah, I've come along all the really hot far away. Yeah, like 2 years ago, I was in a placement. Yeah, like I was just saying, like everyone's so proud, and the way I'm so grateful for all the help that the team, I think, has given me, because 2 years along the line, I was only a band 2, started off, but working along with different departments, I'm a band 7 now, and not young people actually get to that stage really quickly. So yeah, something to be proud of.
I'll be chasing you for invoices, Alistair.
I actually saw, I use this system LDZ, but I saw Elma's name, and I'm pretty sure I know Elma's from, who's doing and studying at South Bank. So yeah.
So you can sort of see, and I'm just going to actually ask a question to Claire now, looking at this placement programme and how it works, and you can see that there are career pathways starting for people. How important do you think the placement programme is in succession planning for the NHS?
Oh, I think it's really key. I think if we look at the age demographic of the NHS accountancy teams at the moment, this won't be accurate, but it's a sense of feeling. We've got quite an older age range at the moment in accountancy. So for me, and again, it doesn't mean people have to go into the graduate scheme at the age of 21. We just need people coming into the scheme, whatever age, really, a bit younger. But I am a bit worried about, in the next 10, 15 years, that some of the directors we've got now and some of them, like me, will be retiring. So we do need people to come in, and also it's the innovation, isn't it? If I'm absolutely honest on this call, I was decent at Excel 10, 15 years ago. Now my team, who I won't lie, are a wee bit younger than me, are running rings around me. So it just shows you over time, we need to bring in our new people, our graduates, our people coming through this scheme who bring those extra skills in, because I think that's also how we'll innovate, because people are bringing in these new ideas, and even my 7-year-old's better than me at certain things. So it just shows you how technology is moving on. And I think that's key for success, really, in the NHS. But the graduate scheme really does set you up well, because, and I apologise if it's not like this now, but you go around everywhere. So I was loving the conversation about financial payments. I love my time in financial payments. I actually got to the point where I was trying to see how many invoices I could process in an hour. It became competitive. I did audit, payroll, management accounting, you do it all. And I think that's a really good grounding for anybody who wants to go into any public financial body. So it gives you all of that, Lynn. But we do need people to come through. I think the longevity of the finances in the NHS needs these people coming through.
Well, that's great, and it's fantastic. I'm gonna ask one more question to the guys, but there are a couple of questions in the chat. So there's one about placement opportunities advertised. We work directly with the NHS actually at LSBU. We work with a gentleman called Satiris who leads these programs across London, and so that's how we access them. But I believe these opportunities are available through other universities if you are outside of LSBU. And I've got a lovely question here from Usha. Elmas and Alistair, what advice would you give the current year 2 students who are thinking about a finance placement?
Should I go first, Elmas?
Go for it.
Yeah, my top tips whilst in placement, I think for anyone looking to do a placement, I think, is building networking in your everyday routine. So like get involved in everything if opportunities come across, develop your online presence. I think if not start by creating a LinkedIn page, be open to new connections. You never know what comes along your way, and most importantly, maintaining that networks. So yeah, just try. If I didn't once I did a stock take project, if I didn't go across different departments, knowing who actually they are and what they do for work, I wouldn't be in this position right now. So yeah, very important.
Okay, and Elmas, did you want to come?
I think my advice would be, if you're unsure of the area, of the professional area you want to go in, placement does really help because you get in-person experience. And that way, you know, theory is not the experience you get. It's completely different what we do at university. It's only one part of it, and when you're actually at, you know, doing the actual job, that's when you feel whether you fit in that, you know, job or not. In that sense, it's really helpful. Also, just having that experience and having that knowledge and confidence, it really does increase your personal confidence in applying elsewhere. And I do agree with Alistair, having connections in where you work, like he's stayed at where he moved to CNWL, but he got a job after his graduation. I'm now still employed at CNWL. So there is always that opportunity of, you know, your work being extended. And within the trust, I had 2 different teams contacting me, asking me if I was able to work for those teams. So there are always work opportunities. So yeah, in that sense, it's really helpful. I don't know what else. I mean, there will be costs as well. It really, you just have to weigh them correctly. And if you want to go for the experience of, you know, having the NHS placement, I can only talk for myself. It was great, and it's one of the best decisions I've made.
Thank you. So we've looked at it from your lens. We've looked at it from your lens, Elmas and Alistair. I'm now going to flip it on its head and ask you what you think the advantages are for employers to take placement students, accounting and finance placement students. So I'm going to go to you first, Elmas, this time.
I'm going to just go back to what Claire has said. I personally think NHS needs fresh brains, and those young people, they need, like with IT and technology, young people are amazing at it. They're just naturally, it's like they're naturally born with it. And investing in these people, training young people, does add a lot to the trust and the NHS itself. And by employing these people, there will be technology, there will be innovation, there will be different opportunities, because these are young people, you know, different life upbringings, different experiences in general. Like when I was doing my, I think 3rd or 4th month as a placement student, we had training on automation, and my team has built robots. And while I was struggling, I'm not an IT geek, while I was struggling, there were we've had this 23-year-old who was just like at it. Like he was just like, it just looked like he was playing a game. So I think in those senses, they need the young brains. That's what I'll say. Yeah.
So the themes are coming through very clearly here. Alistair, did you have anything to add to that?
Yeah, just to add to Elmer's, agree to that. I think it brings numerous benefits like access to higher skilled candidates. It also provides them with a cost-effective solution to staff shortages. I mean, recently I had 2 placement students that helped us in our team, and we have so many small admin jobs that it's just hanging on there. But having them actually makes us realize that the time is used efficiently, and also they gain experience and offer the fresh talent like Claire said and Elmas.
I'm just going to sort of pull that together, because what I understand from all of your perspectives is that the NHS is in a period of transformation in the way that it's organised, in the way that monies are allocated, and in the way that technology is being embraced as part of a cost-saving exercise to some degree, Claire. It's enabling more services to be delivered for less cost. And then you're bringing in this new fresh talent that's actually helping to drive some of those changes moving forward. So yeah, this has been an absolutely fascinating session. Is there anything you'd like to conclude with, Claire? We've got just 2 more minutes. We've answered the questions. Is there anything you'd like to conclude with in terms of succession planning, perhaps the benefits to organisations outside of the NHS on taking these types of graduate schemes and placement programmes?
I think for me, like I say, succession planning is key for us now. And like I say, I only have to look at my immediate finance team, and my 2 senior people are late 50s. So actually, we do need a succession plan. I'm under no illusion either that we train well in the NHS. We train really well, and we do lose people from the NHS, but actually our loss is other sectors' gains, because we do train so well, and I personally believe the graduate placements and the actual graduate scheme produce such rounded people that people can go and work anywhere. And I think whether we lose them to the NHS, which is a real shame, but they go to central government or they go to private or they do anything, it means that somebody is going into another environment with such good skills. And I think that's key nowadays. And it's like, yeah, we can balance a balance sheet. That's just technical accounting. But for me, I go back to that other skill base. For everybody on this call, pass your exams, you need to, but please put yourself out there. Do these voluntary roles. Go and try something different. I have put myself sometimes in uncomfortable positions because I feel I just need to try things to develop those skills. But just please make sure you focus on your interpersonal skills. And I go back to values again. I think when I'm looking at application forms to take people on, yeah, you might be qualified and SEMA sit for ACCA, ATAT. That's great, but what else can you offer me? What else can you bring to this service? And that's what I'm looking at as an employer. So I always go to that section of the application, do you know, the open-ended section, tell me what you can bring to this role. And I focus on that when I'm shortlisting. And I think that's the key, get that experience, get that exposure, and just become that rounded person. I think that's my only advice on all of this at the moment.
And there's another piece, there's a comment in here about bringing new talent. Somebody's commented that Alistair and Elmas are right, bringing younger ones for fresher talents is good, but innovation for talent and innovation, but only if they're not lazy. None of LSBU students are lazy, that's just not true.
Yeah.
But I do think there is a part, and I have got a couple more minutes actually. I think it's very difficult to recruit for potential, and that's what this involves, doesn't it? You're actually recruiting for what somebody is going to be or potentially able to deliver to the NHS. So we've talked about values, we've talked about sort of above and beyond, we've talked about innovation and technical skills. Is there anything else, Claire, that you think recruiting for potential involves? I'd be interested in your views on that.
Sorry, I missed a little bit. So other skills that they need to be recruited, was that the question?
Yeah, so if you're recruiting for potential, what else do you focus on other than the things that we've outlined in this call?
Just somebody that's got to get up and go, and somebody that thinks outside the box, isn't just a robot to the answers. I think, and also when we're interviewing, it might sound really daft, but please come with examples and don't use the same example for every question. And I think that's just more interview technique, isn't it? But I'm looking for someone that has done the research. So say, for example, I'm recruiting someone. You've done your research, you've been on the NHS England website, you've looked at the mission statement and the vision, and you understand all of that, and you can segue that into your answers. But also they have, when you've gone down the job description, you tailor your answers with an example that matches the requirement. And that sounds really obvious, but if I'm asking for somebody that's led a team, I want an answer that you've been a leader, not that you've been part of a team. It's those little things, isn't it? And I've been into an interview before, and I have taken a little bit of a notes thing, but an interview for me isn't a memory exercise. So if somebody does happen to take some notes in with them, it doesn't offend me, because I want to get the best out of someone in an interview, so I get the right person for the job. So if you can't quite remember your example, I'm not looking at your memory skills. I'm looking at, just give me that example and give me a really good in-depth answer so I can see more of that person. And just be human as well, be honest. Don't beef up your skills if you can't do it, because it'll come relevant in the first few weeks of your job. Just be honest in interviews as well. So
I think that's great advice. And I do think recruiting at this level is quite difficult, and you've obviously got a lot of experience at it, Claire. So I'm hoping that everybody on the call who is student facing has listened to that advice. And now I'm just going to end, and this is going to be a bit of a deeper dive for Elmas and Alistair, and I'm going to let Alistair go first. Were there any defining moments that impacted you through your placement year or your career so far? What were they, and how did they impact you?
Honestly, if I can think, I wouldn't say there was any, because everyone has different managers and stuff, but my manager was really lovely. They were really supportive of me. You know, they wanted me to do more, so they always given me the opportunity to sort of go into different teams if I was unhappy with hey, or if I wanted to learn something else. So yeah, never come across that even during my placement.
So there wasn't a defining moment where you sort of started to see yourself as a person that was going to work for the NHS. That's kind of what I'm hinting at.
Not really.
Just happened through COVID with you, didn't it?
Yeah, it was very different. Obviously 5 months in the office, and then sort of I was everywhere. And yeah, it was very sort of, yeah. Don't know if Elmas.
Yeah, Elmas, did you have any defining moments that made you sort of feel differently about yourself or feel differently about your role in the NHS?
I think being part of the auditing and the year end, I felt like I was actually an employee there rather than a student. So for me, it felt like, yeah, I now belong here. And that was in the 9th month of my work experience. And I mean, I worked from account payables to expenses to management accountants, then to move to financial accountants. And my manager has been great at, you know, giving me that chance to move around and get an all-around experience. But when I was part of the auditing, because this is, you know, the external auditing for our year-end report and the agreement of balances and that whole structure, that's when it felt like that's when I felt proud of myself. Although, you know, it was a proud moment throughout. And I did have I've told you before in our one-to-one interview, I had almost a failure of cancelling a 5 million NHS payment run, and Claire would probably know what that means. And yeah, that was at the shocking moment of my 2nd month of placement. But I gained so much from that, and I made sure that never happened. And touch wood, it never happened. So yeah, I mean, I personally and honestly don't know if I'll be staying in NHS, you know, in the foreseeable future. But the experience I've had there was amazing. And going back to Usha's question on what advice we could give the students, Excel, because there'll be a lot of pivot tables and VLOOKUPs. And those are the things that I struggled with when I started in the NHS. So if they want to go for it, I think they should make sure that they got some knowledge of pivot tables and VLOOKUPs. And they should visit their year 2 lecture notes and stuff like that for their year 3, because taking that year break is a long time, although it flies by, is a long time. So it's good to keep your, you know, memory fresh on things. That's all I could add to it. Thank you.
That's great, thank you. And it's good to know, because I do think that being in the real world of work, you are going to face challenges, you know, and there might be times when there are mistakes made, but it's how you deal with those mistakes and how you move on that actually defines you as a career professional. It's not sanitized, it's real. You've got your feet in the mud and your hands in the mud, and you're getting on and doing it. I mean, Claire, I'm just going to sort of finish this with 3 more minutes. I wonder what your defining moments were through COVID. Did you have any defining moments? Because you started with this absolute blank canvas and you had to put this whole program together. Was there a defining moment for you where you thought, yes, we're going to do this, it's going to work?
Probably a couple of months in, we'd got everything under the table. And I think on that 8th of December, when we gave that first vaccination, I felt so ridiculously proud. And don't get me wrong, not everybody's pro-vaccination, but for me, that day, I just felt so humbled. We'd got all of the vaccination centres up and running. We'd got all of the GPs, the pharmacists, we'd got it all running, and it was just brilliant. And it just felt like a whole team approach. So for me, that was a definite defining moment. And then I remember in March 2021, this will live with me forever. I was on a Teams meeting. We were just a general day-to-day Teams operational meeting. And we were joined by the Duke of Cambridge to say thank you. And honestly, I was so overwhelmed. I was still sat with no makeup on in the day of Teams when we were literally working 12 hours a day to get this working. And he joined us and came in and he asked about our mental health. He asked if we were okay. And he just asked and said, thank you. And that for me will be one of my career highlights, I think, Lynn, just have someone from like the Duke of Cambridge to say thank you. Now, I don't expect praise, but that day knocked my socks off. So it put everything we were doing, it was just great. But no, I think as well as the Duke of Cambridge, just getting this programme up and running, and in some respects, we protected the NHS. That programme stopped the NHS from falling on its knees, and I'll always be proud of that. Always.
Absolutely, rightly so. But it's lovely to hear that all of the little cogs in the wheel, as Elmis describes it, have had a part to play in making a really complex situation that required so many different elements, different structures, different ways of doing things. And I feel like everybody has some ownership of that on this conference. So thank you. It
was massive. Everybody had a part to play, and it wouldn't have worked if people didn't make that part work.
Thank you. Neil, I'm going to hand back to you. Thank you all to Claire, to Elmis and to Alistair for all of your insights. It's been fantastic. Thank you. Thanks
to you and to you for brilliantly hosting, Lynn. So thank you so much, everyone. Okay, for our next session, jobs. I'd like to welcome Evie Coultier, from content editor from GapWeb. Evie, over to you.
Thank you very much. Nice introduction. I feel like I'm on like a news channel or something. So following on from that, I feel quite emotional listening to things like the NHS. It feels, I don't know, thinking back to those years before and like listening to how far we've come and everything. And this presentation is going to touch on that kind of topic a little bit. And basically I'm going to share my screen and run through a few slides about the job market. So let me just start this up. Fabulous. Okay. So yeah, like Neil said, my name is Evie and I'm the content editor over here at GapWeb. So I actually oversee a few different job sites content-wise. So we have GapWeb, which is for our finance and accounting professionals. And then we also have one called Totally Legal, which is for the legal recruitment market. And finally, Sex and the City, which is for secretaries, PA, EAs and sort of business support professionals. So today, as you can see from the slide, we're going to be talking about an overview of the finance and accounting recruitment market in 2022. A very broad sounding topic, but I promise you it won't be too numbers heavy. And we're basically going to dive in. So we're going to be covering 3 main topics today. So the first is going to be what has changed in the accounting and finance professional in the past 12 months. Then we're going to dive into a kind of exploration of post-pandemic recovery and how it impacted the job market. And finally, going to be discussing how you can actually adapt to these changes and excel in the fluctuating recruitment landscape. So a quick overview of who we are. So like I was saying, GapWeb is a leading specialist job board for accounting and finance professionals. of every level. So we have graduates and account assistants to management accountants, finance business partners, right up to that kind of CFO and finance director level. So we work, as you can see from the slide, with a variety of specialist recruitment agencies, accounting firms and commercial businesses to source the latest roles across the UK. And we're part of Reachwork, so the portfolio of the free job boards, as I mentioned, which then ties into the larger PLC of Reach, who's the largest national and regional news brand across the UK. So to give you a little taster of our clients, so I've included a brief overview of some of our big names on the screen, so including the FA, we have the British Museum and the Home Office. So we actually display a mixture of direct employers on site, as well as recruitment agencies. So we like to provide our candidates with an expanded base on which to conduct the job search. And we also partner with some outstanding organisations such as PQ Magazine to bring our audience latest career advice, CV tips, and industry insights on our blog, which is where I come in as content editor. And we also, amongst our candidates, they've secured some excellent jobs with big names across the last year. So we have names such as the NHS, Amazon, BBC, and KPMG, so including a large proportion of part qualified roles. So how do we actually get the information we're going to be talking about? So each year we conduct a survey, and today we're going to be utilising these results to discuss with you the latest trends in the recruitment market. So back in February 2022, we conducted a survey with over 1,400 finance and accounting professionals to gain a deeper understanding of post-pandemic life and how it's actually impacted the profession across this past year. So we covered a range of salary insights, so how benefits have been affected, the gender pay gap, diversity inclusion, job security, and team changes. And it's safe to say that this year the survey revealed an incredibly diverse yet experienced audience. So 76% of our audience actually had 10 years or more professional experience, and 68% actually held a degree or had like higher qualifications. And it also revealed how cutbacks of salaries and bonuses were restored at the start of this year. So our respondents actually reaped the rewards of salary increases, bonuses, and additional benefits. Last year, we saw working arrangements and team structures dominating the conversation, with finance professionals having to adjust that new routine once again, hybrid working, flexible working, this kind of thing. So such changes in well received, a reduction in working hours, suggesting a better work-life balance following the reopening of offices. So as a whole, the industry seems to be reaping the rewards. So within this presentation, we're going to dive into a detailed discussion of our findings from 2022, focusing on the impact of post-pandemic recovery, and just having a look kind of at the overview of the recruitment landscape, as well as the economic turmoil that we've obviously experienced the latter half of the year, and what's actually been going on in the profession in the past 12 months. So main question of the day is, what has changed in the profession and why? So we're going to focus on salary increases for a little while. That's going to be broken down into a few different further sections. But just to kind of set off with a few key highlights here. So it's safe to say that post-pandemic recovery is most noticeable when we actually compare the year-on-year salary increases. So this year, as you can see, 58% of our respondents received a salary increase, compared with just 36% the year before, demonstrating that employers are really keen to hold on to their talent. So employee retention has been a big priority for employers this year, something we've seen across the kind of board. And the percentage increase received is actually typically lower than previous years. So majority of respondents, 65% to be exact, received a bonus or salary increase, of up to 5%. Amongst this, so we had 67% of our part qualified accountants received a pay increase, actually leaping from 28,333 average salary to up to 41,667 pounds. So it's actually up 47% this year, demonstrating a really kind of lucrative and restorative start to profession for our part qualified accountants in particular. So a few headlines from this graph. I wish I could actually put it the right way up, but there's too much information to put on the slide, so you have to do a little bit of a head tilt to kind of see what we have here. But a few headlines from this graph. So amongst this, we had assistant accountants and accounts payable. The roles benefit the most in terms of year-on-year salary increases. So they actually went up by 53%, and 44% in the respondents receiving an increase of their salary. Nonetheless, those working in corporate finance actually were the most likely to receive an increase in salary, with 77% of respondents reporting a rise in average pay. Addition to this as well, as you can see, the vast majority of FP and A analysts, so around 3/4, and finance analysts, around 70%, reported a salary increase. So diving into kind of like entry-level roles here, 2022 actually brought a year of fluctuation in terms of salary. So we had tax and accounts payable reporting earning a significant amount more post-pandemic, whereas those in audit, payroll and bookkeeper roles actually noticed a decrease. So audit went down by about 1/4 and bookkeepers about 2% and payroll about 5%. But on a hopeful note, so it's been really good to see this year that 2 out of the 3 job title facets that actually saw the largest drop in 2021 have recovered. So we've seen significant increases this year for corporate finance. And as I mentioned, PQ accountants, so that 47% uplift. So it's a really good thing to see kind of like for entry-level roles. Senior roles. So we've actually seen a year of salary recovery for those in senior positions. The pay for the 2 most senior finance roles has reached 6 figures again. So CFOs have reported an average salary around 123,000, and finance directors made a comeback following significant decreases last year, earning about £104,000 on average. So it's actually been up by 10% year on year. So looking at sectors, a few key highlights here. So post-pandemic recovery certainly disrupted this league table. It all kind of like shifted and changed across the past year. But this year we've seen fintech restore that top spot with an average salary of 91,000. So this year, they've actually reported a significant salary increase of 52%, which has skyrocketed, demonstrating that employers are really trying to make up those previous losses and retaining that kind of like talent within the fintech industry. And amongst this as well, we have consumer products and FMCG coming in that close second space with 91,000 on average, and that's actually gone up from the 6th position this year up to 2nd. And for those working in accountancy practicing, they actually sit at the bottom of the table, but they have actually gone up by 32% of their average salary. So all over, kind of like salaries have risen this year. And across these 21 sectors we surveyed, they all boosted, apart from the retail and pharmaceutical industries due to changes in working structures and obviously lots of post-pandemic struggles. But yeah, the majority of sectors have seen a boost in pay. So it's something that we hope to see will transfer in 2023. Yeah, it's classic with these kind of things. It's just a bit of a waiting game to see how things are going to evolve and change. So location-wise, to dive into a bit more detail. So to provide a kind of more like global overview of where the recruitment market is at, we've looked at location trends. So London retains the top spot for UK pay table, so with an average of 4% average salary growth rate from 2021. And in a close second tier, professionals working in the Southeast actually reported a 13% increase in salary for around 74,000 as an average. But as a whole, the UK actually experienced a countrywide kind of salary increase, arguably due to rise in hybrid working, because you have kind of professionals previously based in London, for example, the higher salaries, but the options to work outside of the capital. So kind of like taking the higher salaries and moving it around the country. And all other locations as well across the UK have reported average salary increases. Especially in Wales, actually, they received their largest increase in salary, up 56% kind of region-wise. As well as this, so looking at salaries overseas, we've also reported a year-on-year increase. So for those finance professionals in Australia, they took the top spot globally, offering an average salary of 80,000. And the only exception here was actually in the Southwest, which saw salaries drop by 3%. But elsewhere, they've really bounced back. So it's good to see that as well in the UK, global economies are slightly bouncing back from post-pandemic recovery. So fingers crossed, we also see this continuing sort of going into the new year. So all important bonuses. This year, 50% of respondents actually received a bonus. So reaching up to half of our audience, which is up 8% year on year. So it's still not back to those pre-pandemic levels. However, the bonus itself has improved from last year. with more respondents receiving a bonus of up to 10% or more. Amongst this, so entry-level finance professionals who are least likely to receive a bonus last year saw the biggest change. So this includes 45% of those in accounts payable roles and also 50% in purchase ledger roles, so both of which didn't receive a bonus at all last year, have really boosted here, so that's great to see. And amongst this, for the all-important PQ accountants, 33% received a bonus on top of a salary increase. So last year we actually reported that 67% of PQ accountants received a bonus. However, their salaries dropped by -23%. So arguably, despite kind of the fact that more accountants received that bonus last year, the overall bigger picture is better in post-pandemic recovery, as you've got a bit more higher salary and the bonuses are kind of like catching up as we see. But unsurprisingly, really, senior roles were most likely to receive a bonus. 77% of their respondents in corporate finance received one, and 62% of finance directors actually topped up their pay packets. So senior positions still kind of retaining the monopoly of bonuses, so to speak. So benefits wise, we've actually seen the number of respondents receiving benefits grow. So it's reached 56%, and that's up 6% year on year. But naturally with benefits, the kind of pattern we see really does fluctuate from year on year. And this year was really kind of like shifted in the priority for employers. So healthcare and pensions remain at the top. However, fewer respondents actually received these benefits. So just over a quarter of participants received private healthcare, compared to 32% in 2021. And in addition, only 7% of respondents received mental health support. So despite 2021 being the year that saw emergence of hybrid working, only 21% of our audience listed the option for remote, hybrid or flexible working as a benefit, which I found quite surprising, really, but I'll be keen to see, especially if this rises into the new year, as especially within our jobs at the moment, like those people who are applying for ones of hybrid working options seem to be a lot more popular. So we're kind of waiting to see if employers cotton on to the fact that flexible working and hybrid working is becoming much more popular, especially amongst accounting and finance roles. So yeah, we're going to see that one. Keep a sort of keen eye on hybrid working and see where that takes us. We also saw a decline for the training and development budget, and those benefiting from gym contribution decreased 3% year on year. And although offices have reopened, there's been less priority on childcare. So you can see at the bottom there, only 2% actually received childcare support. So for me personally, I think the childcare support and the hybrid working are two kind of keen starts I'm going to keep an eye on and see how that develops into the new year. So all important question about overtime and working hours. So the overall consensus actually is that working hours have stayed the same, despite the continued disruption to working routines at the moments of hybrid working. So the majority of our respondents agree that their hours have not changed, around 62%. And of those who do actually work on overtime, the change of working structures haven't really had a notable impact. So the number of extra hours worked has reduced by 22%, with the majority of respondents reportingly only working 1 to 5 hours additionally each week. So it's clear to see better work-life balance has been achieved this year. Perhaps going to the office a few days a week kind of meant more hours lost in the day to travel, or possibly having the option to remote working has given people more flexibility around kind of conducting their work when they're at the most productive hours, or that kind of thing as well. So the gender pay gap, we split this into 3 sections, starting with representation across our audience. So this year actually saw female respondents reduced to 42%, which is on par with our 2020 statistics. So female representation was higher than or equal to male representation in almost half of the surveyed job titles. However, these roles actually continue to be with the kind of more non-qualified roles such as bookkeepers, payrolls and credit controllers. However, part qualified roles actually fell in favour with female candidates as well. So 67% of our GapWed audience actually reported as female, which is on par with our 2021 findings. Efforts to achieve the kind of gender parity, they are being noticed across mid-level finance roles. So for example, management accountant, FP&A analysts and accountants have almost reached an equal gender representation this year, which is really good to see. However, once again, senior roles, this is kind of where the biggest challenge still lies. Highest paying finance roles such as the CFO and finance directors, which are very much like heavily male dominated at the moment. So women actually only represent 1/4 of each of these positions. So these stats tie into our salary findings. So the gender pay gap has closed by 3% this year, yet the average male salary is still 20% higher at around 74,000. So despite this, female salaries have seen a larger year-on-year increase, women earning 10% more on average. So almost at £60,000 compared to 21. And comparatively, the average salary for men was up 6% on year as well. Pay disparities were noticed among some non-qualified roles, such as credit controllers, but for the most part, they were most prominent among the senior finance roles, so really do correspond to those roles which are predominantly occupied by men. Looking at salaries here, we can see the average salary for males in head of finance roles was 11,000 more than their female counterparts. And in addition to this, disparities reached £11,530 for FP&A managers and up by just shy of £6,100 for finance controllers. So that said, the largest disparity was actually within a FP&A analyst role. So this is one that's actually equally represented by men and women, but males actually received a £15,000 more salary on average. For PQ accountants, so gender pay gap was actually transformed in the favour of women. So we do have a win for the women. There's lots of negative stats there. There was a win here. So 2021 figures saw women earning 20% less than their male counterparts. However, this year it's actually flipped around the other way. So the average salary falls at £35,000 for women, which is a 29% higher average than their male colleagues. So it's actually kind of flipped and 316 gone their way around. So a quick little overview just to kind of summarise the gender pay situation. So gender differences in profession are certainly amplified when we look at remuneration and rewards. So male finance professionals are significantly more likely to have received a bonus, with 59% of respondents receiving additional compensation for their hard work this year. This is an increase of 4% on 2021, yet only 39% of female professionals received a bonus this year compared to 44% the year before. Despite this, feelings toward job security are relatively equal amongst male and female respondents. And as you can see here from the slides, the factors that weigh into male and female employment hardly vary. So we had a mere 5% difference between male and females holding a degree, a matching average tenure, and the overtime hours stood at 7 hours for women and 8 hours for men. So all in all, when you compare it up, there's not particularly like a large difference between why female are earning less than males on average. So diving into diversity and inclusion in the profession. So ethnic diversity amongst respondents remains fairly unchanged, with just a 1% to 2% fluctuation across most ethnic backgrounds. So it's positive to see this year that the number of respondents receiving an increase in salary for Asian and Asian Black backgrounds increased year on year, following a 5% drop off the year before. Moreover, average salaries increased by 10% to 61,540. However, the ethnic pay gap actually has worsened, so increasing from 9% to 20% this year. So that's certainly something to keep an eye on. And those from a white ethnic background actually saw a 10% increase in average salary, whereas salaries for those in Black, Asian and mixed ethnicities took a 4% drop on average. You could say, however, it is reassuring to see that D&I seems to be at the forefront of most companies' agendas this year, with 55% of respondents agreeing that the company is an inclusive organisation. And the majority of respondents actually attribute to this D&I programs of trainings. You have friends of groups, you have team days, and other initiatives. So we really do hope to see that the statistics for diversity and inclusion are really pushed forward in 2023, and we can really kind of like go into a new era with new schemes and really kind of like tackle the big issues in the profession, so to speak. So gender and diversity and inclusion is something that we definitely want to kind of push forward with all our clients especially, and see it hopefully transform in the new year. So what's the impact on the job market? Job security. So At the start of this year, when asked their feelings towards job security, our respondents remained at the same mindset as the year before. So majority of respondents, which is around 70%, either agreed or strongly agreed that they felt secure in their current role, with only 9% stating that they do not feel secure in their current role, 41% claiming this is due to challenges in their specific sector. So the sentiment has grown by 22% over the last 12 months, alluding to kind of rising problems facing the profession, especially in the kind of latter half of the year. So almost exactly the same number of respondents that are concerned about redundancies with their current employer as last year, which kind of demonstrates that economic insecurities are really still present in the accounting industry post-pandemic. Brexit actually poses a threat to job security. In fact, the number of respondents listing that as a concern has grown by 6% year on year, whereas the threat from COVID to job security has actually decreased. So from 39% in last year to just 13% this year. So it really has kind of flipped and changed around here. Naturally, in the latter half of 2022, new economic uncertainties. So we had obviously the war in Ukraine to our current economic status, and the exponential cost of living kind of going through the roof. So that's caused massive upheaval for the job security market as well. So it's very much like a fluctuating game when you analyze this kind of thing. So at the start of the year, you're obviously going to have different kind of worries compared to the end of the year, but all in all, as a bigger picture, the majority of our audience still feels secure in their current role. So team changes. The resilience of this industry actually remains apparent. So 72% of our respondents claim that the pandemic did not stop them from applying or starting a new job. So of those who have actually moved into the roles in the last 12 months, the main reason for leaving their former job was a lack of career progression. So that was about around 23%. And other reasons included their salary, about 18%, redundancy, and changes in company culture as well. So yeah, looking at these kind of like internal changes, changing teams across the accounting profession support this. So 79% of respondents said that their team structure has changed in the last 12 months. And for the majority of respondents as well, their teams increased. So 37% of respondents revealed that a team had reduced and 21% of their teams had merged. So it's very much a changing game in team structure. We've had, you know, lots of kind of like external factors come in, like hybrid working, this kind of thing, but also a big shift in teams as well. So there is kind of like certain industries such as fintech that's actually now focused on growing their teams and, you know, really looking at employee retention. And there's definitely, I mean, it's safe to say we're in a candidate kind of led market at the moment. So it's very much like everyone's kind of bidding for the best talent that we've seen in the market. So industry changes as well, to touch on this. So manufacturing and engineering, which is featured in the first position since 2016, has grown 2% in popularity. So 17% of our respondents actually work in the sector. And similarly, banking and finance continues to hold the second position with 11%. The easing of COVID restrictions has had little impact on the sector. And the majority is sitting firm in the league table as well. So not a lot of changes here, but the largest shift has actually been in IT and telecoms, dropping 2 places, which is most likely to do with the return to the office and a bit of hybrid working as well. So to crack on and summarize of how to actually use these insights, the very words are extremely numbers heavy. So how is it best to go and look at these? So our key findings demonstrate this year has been a period of recovery for the accountancy profession. Many of our respondents having received a much needed financial reward, and employees are keen to retain their employees as well and compensate them for the hard work and resilience for a period of like immense challenge and change. So whether you're a new job seeker or a candidate looking to change, you know, sector or location, it's good to know how to utilize like these findings from our salary surveys. So in my mind, there's 2 questions you can ask. So what locations offer the greatest volume of vacancies and what sectors are performing well? So when you're looking at this, a few kind of key sites of PQ accountants in particular. So tenure for one, so almost double the response, a number of our respondents received a salary increase, with majority going to the junior roles as well. So that's 67% of accountants received the pay boost, or 47% on average. So just to go to show that even those for like a lesser tenure, so to speak, can really kind of receive that pay boost and go into the new year. And sectors wise, just a little recap. So fintech is at number 1, and consumer products and FMCG have reasserted their positions as the highest paying industries. And there's a large range of sectors on our site for PQ accountants, with jobs in all aforementioned sectors as well. So there's plenty of kind of choice for our new seekers as well. Gender pay gap wise, so for PQ, 28.6% to be exact for female applicants, with females earning £45,000 on average. And location wise, so it's always good to remember that the salaries have risen across the UK, demonstrating that the market isn't constrained to one particular position. And with the rise of hybrid and remote working as well, so PQ accountants then definitely have that kind of wider option pool to choose from in regards to location, expanding opportunities for new starters and those looking for a new role elsewhere as well. So to summarize of how we can help you, so I've popped a few excellent statistics on the screen just to really kind of big us up at the last moment. So we advertise, as I said, lots of entry-level roles and graduate roles alongside the senior positions, but the main thing you can do, you can search and apply for latest roles, and also have the chance to be headhunted and upload your CV and actually kind of go for those non-advertised roles. Or you can set up job alerts with us, receive the latest relevant job directly to your inboxes, tailored to your searches. And also you can read the latest career advice from yours truly, and industry insights and outbreaks, kind of exclusive content on our blog as well.
Okay.
So, Summer, thank you very much.
Thank you,
thank you,
Evie.
CV Magazine. Pleasure.
No, that's really good. Thank you. Have you got, just quickly before we let you go, have you got any advice for people who are putting together CV at the moment? Not the saying that, you know, now's a good time to leave your job, but is there something, you know, one key piece of advice you can give someone about their CV? And there's lots of talk of whether it should be one page, particularly for graduates, whether one page will be enough or whether two's okay. Is there things that, you know, sort of sometimes when you see a CV and you think, oh, why? I mean, I hate CVs with pictures personally. It's something I don't like. I don't know why, because I think it changes your view of things. I almost quite like the idea of not having names at all. And it's recently been proved that AI does a better job of recruiting than people, because we all have biases. Sorry, so I'll shut up and say, have you got the advice on the CV? Is there something?
Absolutely.
Yeah,
absolutely. For starters, I would say I agree with you on the picture. So I think it really does divert someone's attention. The main thing, so we have lots of advice on the site as well, if you want to kind of dive in and have a read, but the main thing I would suggest, if you do your personal statement at the top, make it short, make it like sharp and succinct, and really sell yourself. Always tailor it. That's a massive thing. So when you read a new job description, always make sure that, you know, you're tailoring it to that. And the big thing as well, and this especially goes for AI systems, is really use those like active language and powerful adjectives. So instead of like listing your job duties and responsibilities, upsell yourself. And one thing that the systems love as well is statistics and percentages. So if, for example, you know, you're working somewhere and you've managed to, you know, boost the like turnover of the company for the month, notice that and like definitely put that in and say, you know, because of this responsibility, I did this. It's like that classic thing, you have to like write what you've done, put an example, and then always link it back to your job role as well. So it's very much, I would say as well, on that kind of page length, go for 2 pages, 2 pages. Yeah, always a bit better. But yeah, short, snappy, to the point.
Okay, that's brilliant. Okay, well, thank you, Evie. I'm not sure, Neil, will we is that our time is up, isn't it? Actually, we have to quickly. We have people
rambling on.
no, it's absolutely fine. No, it's really good. But we have people all the way from Malaysia, I think, to that now, and we've got someone from the ACC as well, Clive. Amazing. So thank you very much, Evie, and I'll speak to you soon.
Thanks, guys.
Thanks, Evie. See you soon. Thanks. Bye. Bye. Hi there. So for our next session, innovation, a global perspective. I'd like to start the session, as Graham was just mentioning, Clive is going to be joining us, but with Nilu Alwis, who's going to be kicking us off. Nilu is from SEMA, the Vice President, Global Business Services at the Association of International Certified Professional Accountants in Malaysia. Nilu, thank you so much for joining us. Over to you. Oh, we can't, you're on mute there, Nilu. There you go.
Thank you, Neil. Give me 1 minute just to share my presentation. Can I just confirm that everyone can hear me and see the deck?
We can.
All right. So my topic, but thanks everyone. So good day. My topic for today's deliberation is innovation, a global perspective, as Neil indicated, which is in fact a very broad topic. So within its many spectrums, I will narrow down my focus to how one can leverage on technology as one of the levers to transform the finance function, drawing examples from our own GBS hub. So in light of that, we'll delve into the following areas, briefly explore the drivers of finance transformation, narrowing down our focus on digital disruptors, then take an in-depth view of robotic process automation and delve into our journey in driving the transformation agenda with RPA as one of the levers of innovation and transformation. So let's look at finance transformation to get things started. So finance transformation, which is now a broad topic, right, and a mainstream topic, in a nutshell, it refers to the continuous evolution of the finance profession. Since Luca Pacioli founded the double entry system around the 16th century, our profession has come a long way. Especially in the management accounting realm, we have transcended from being a cost accountant to the management accountant to the business partner and a co-pilot that helps run the business, right? So looking at the drivers of finance transformation, technology is seen as one of the key drivers of change in the finance function. These disruptors present both an opportunity and a risk. It transforms what we do as well as how we do our jobs. The volatility, uncertainty, and ambiguity in the present world we live in today is unprecedented, right? And this changes the expectations of us as finance professionals, requiring us to be more agile and adaptive. Further, growing digital economy and climate change and sustainability agenda are only few of the key drivers of finance transformation. So from here on, I'll narrow down my focus to digital disruptors or technology drivers of transformation. So if you look at digital disruptors, right, they can be categorized into two broad areas. That is the core modernization opportunities, which are now mostly in mainstream, such as cloud computing. If you take most of the modern day ERP platforms are in cloud, process robotics, which involves the automation of processes, mainly repetitive and manual tasks through technology solutions, visualizations, which refers to the usage of infographics to communicate more clearly to stakeholders, making the story behind the numbers easier to communicate and digest even to a layman who may not be a finance professional. Next, the exponential opportunities, which are still at an early adaptation stage, which some MNCs or startups in specific industry have ventured into, but not yet come to mainstream. These include advanced analytics that helps identify patterns in data that may elude the human mind, cognitive computing, which is an umbrella that encompasses areas such as artificial intelligence, speech recognition, and machine learning. In-memory computing, which facilitates faster churning of information and insights on real-time basis, and blockchain. So different organizations embraces these changes at a different pace, some faster than others. There's a risk in being the first to implement technology, just as there are risks associated with turning up to be the last to the party or too late and being left behind, right? Whether you're an innovator or part of the late majority, knowing where you sit on the innovation adoption bell curve, right, which is depicted in the right corner, will indicate organizations' risk appetite around disruptive technologies. So moving on to robotic process automation, commonly or shortly known as RPA, it comes under the umbrella of intelligent automation. It's a software that mimics human behavior, and it's not a physical bot. It operates based on a set of rules the bot can perform, but it has been taught or programmed to do. So that's in a nutshell what RPA is all about. So what types of processes are best suited for RPA? Basically processes that are high in volume and there's high seasonal fluctuation, processes which are repetitive and highly transactional, processes which are highly manual, that involves a lot of data entry, keying in, right, which prones data entry for human errors and omissions, then processes that interacts with multiple legacy systems, right, capturing data through multiple sources, then processes that are generally logic and rule-based, that involves very little reasoning, that are less ambiguous and does not require much judgment or decision making, and processes that are basically high in labor intensiveness are processes that are generally best suited for RPA. Because in a nutshell, a bot can operate 24/7 with the exception of maybe scheduled downtime, will not encounter fatigue, and it will be consistent in its application of rules that you program it with to run. So therefore, processes that are RPA'd generally have minimum errors and omissions and has a high level of accuracy and can often be turned out, the work can be churned out faster. So currently, businesses deploy RPA in multitude of areas, right? From finance transaction processing to HR onboarding, recruitment screening, to customer and employee interaction, mainly tier 1 interactions, and supply chain management, just to name a few of RPA opportunities that exist and where companies are currently investing on. So moving on to talking about our journey, CIMA has always invested in being innovative and in involving our profession and organization. In the business front, for example, we implemented digital exams in 2015 and remote examinations in 2020 with the outbreak of the pandemic. And as part of one of the many initiatives in transforming our business, mainly our internal operations, we set up a global business services hub in 2018, housing, finance, and HR services and operational excellence support activities besides other areas. As part of this centralization of processes and the central oversight of activities, we were able to standardize and harmonize a number of our processes, which gained us efficiencies and greater transparency in reporting. So from there, we wondered what's next. So as our next step of evolving our GBS model, we ventured into RPA chapter, automating several of our manual and mundane processes, and we continue to still endeavor on this journey. So in the interest of the audience, I will narrow down our focus to focus on 2 of our processes that we automated through RPA in the finance area. So the first case study that I want to share with you refers to the automation of receipt creation and cash application activities within our order to cash area for those transactions that were not supported by an integrated bank feed. So it involved people manually creating receipts and applying cash across invoices to knock off the invoices, right, when they are paid. So why did we automate this process? Basically, it was highly manual and repetitive, day in and day out. It's the same process that's being performed. It was highly labor intensive, and it was rule driven, and it operated based on a set of logical reasoning. So it's relatively a mundane task that's highly transactional, was prone for human errors, and it operated based on, as I said, predefined set of rules and labor intensive. So it seemed like a good opportune process to be RPA. So how did we go about doing that? We deployed the RPA for this process based on a 5-step methodology that involved the assessment, design, development, testing, and hypercare and maintenance of the process. So what's done in each of these stages, right? So as part of process assessment, we initially start off by having process walkthroughs with process owners, analyzing and evaluating a process to see whether it's suitable to be RPA or whether it can be achieved through, let's say, a simple macro or another integration, which will have its own cost points as well as its benefits, right? So looking at analyzing this process to see whether it's opportune for RPA is the first step that we take. And then of course, looking at all the system setups, etc. Then we define and design the process in terms of what's within the scope of RPA project and what's outside. Are we looking at the end-to-end process or part of a process? So what's in and out of scope, and what are the keystroke level process steps that has to be designed and developed. And then of course the project scheduling and planning activities also done at this stage. So next stage is the development. So this is where basically the bot is programmed, and during this phase we continue to have weekly progress meetings with the business owners so that we are very closely connected, and any hiccups that are identified along the way and are very easily discussed, evaluated and resolved, and we move forward. Then we design the test scripts and conduct user acceptance testing, and finally we move on to the go live stage where the process goes live in the new environment. And during this phase, we handhold the process owners and closely monitor the process to see whether there are any fallouts, whether there are any teething issues, and ensure those are addressed on a timely basis, and provide hypercare to the process as well as the process owners. And also we document the software design as well as the user, the new process, right? The process documentations are done and handed over, users are trained, and we have the project closure and sign off, followed by the maintenance of the bot and the activities to the future. So what's the end outcome of this project? So as I said, it was a labor intensive process. So the key benefit we received or achieved from this RPA project is the release of FTEs, right, back to business, who were able to engage in more value-adding tasks and support growth, continued growth and scaling, as well as we were able to, because the bot was able to churn out the work faster. So because of that, we were able to improve our SLAs and turnaround time. And then obviously, because it takes away or minimizes the opportunity for human errors, the quality of the process was improved with reduction of any rework. Moving on to the second case study. So this process refers to a process that cut across multiple teams as well as multiple legacy systems. And it was a process that related to payment as well as accrual journal accounting. In a particular specific category of payments that was key to us. So the reasons for selecting this particular process was different to the previous one. So that's the reason why I picked this. And actually this project is still not completed. It's being conducted or deployed in several phases. We've gone through a couple of phases and the last few stages are still ongoing, a work in progress. So the main reason here was because it was cutting across several teams, there were many handoffs and there were fallouts that led to a lot of process friction, as well as leading to errors and omissions at the end. So the main reason for tackling this process was to address the process friction and improve the quality of the end product or the end process. So how we went about is the methodology we adopt across all processes for RPA are same. So it's the same assessment, design, development, test, and hypercare and maintenance phases. And the end outcome of the areas that we've completed, the benefit we've derived is that we have minimized some of the process friction that existed, and there is better collaboration across teams and the process owners, and we have reduced and minimized errors and omissions, again improving accuracy and the quality of works that's been performed. So in a general sense, let's look at when you're deploying an RPA project, what are the critical success factors, right? So I would say the first thing is to have a proper framework. Like, how do you scout and select RPA project? Every opportunity, improvement opportunity that is identified may not be the best option may not be RPA. It could be that maybe there could be something simple that could be done, such as Excel macros or something more simpler, right? Or maybe just a streamlining redesign. Or it could be maybe something like a ERP integration would be a better option. So having a framework in place to scout and select RPAs and identify what best should be RPAs would be one of the key things. And the next thing is having a proper methodology to manage the RPA project through its life cycle. Like I said, we have that assessment, define, design, development, right, testing, and hypercare maintenance phases. So like that, it's better that you have a proper methodology to manage a project through its full life cycle. Then the next step, or the next factor to consider is it the right process to RPA, right? The suitability of a RPA project or process to be RPA depends on a couple of factors, right? So if you're trying to automate a process through a robotic process automation or RPA, right? And if the process is broken, it makes very little sense. And if the process is not standardized, again, it makes little sense, because then you would have many exceptions, because what the bot would do would be exactly what the human would do, but do it faster and more consistently. So if a process is broken, if a process is not standardized, it would be best to first fix it, standardize it, fix the broken process, and then basically automating it would actually garner you a better benefit. Next is measurement and reporting. So when you start deploying RPA project, it's important at the start itself to define what do you expect out of it, right? How do you measure success and how do you report success, right? Are you trying to achieve FTE release, process minimizing for process friction, or taking away something mundane? So what is it exactly that you want? Documenting that, tracking it through the entire project life cycle, and managing it, reviewing the process to see a couple of months down the line, are you actually garnering the benefit that you wanted to have? Is there the correct return on investment as you expected? So measuring that and reporting is another key factor. Next is structuring your rewards and recognitions around this. So the first thing, when you start embarking on the journey of RPA, I think the first thing that comes from the workforce would be their hesitance and reluctance, thinking, what would this mean to me, or what would it mean to us, right? Would it take away our jobs? Is our jobs at risk? All of that. So to encourage initial adoption, it would be good to have the right rewards and recognition framework aligned with this. And the next step is also something related to the former point that I spoke about, right? So once a process is automated and you have capacity created of your FTEs, so how do you redeploy? How do you reskill them, retrain them, upskill them, and redeploy them into more value creating activities such as, let's say, analytics, better process control, or business partnering? So it's important for you to have that strategy of resource deployment for capacity that is being created once our RPA project is deployed. Next is visibility, to again garner support and get the momentum and create a culture of continuous innovation. It's important to create visibility of RPA projects across the organization, across the teams, by sharing the success stories, the lessons learned, so that you continue to learn from the past mistakes and improve and enhance the whole project and the project management process as individual processes, and encourage future adoption. So I would say these are a couple of critical success factors. Next. So what's next in this journey of transformation, right? So it's important for a company to continue to leverage on technology and AI solutions to be relevant to business and what's going on in the industry. It's important to focus on redirecting freed up capacity to more value creating activities, such as focusing on analytics, insights that can help influence and support business decisions. And it's also important that it is done working in close collaboration and strong partnership with key stakeholders. So that brings me to the end of my presentation. If there are any questions, please put them in the chat and I will respond to them. Neil, back to you. Thank you.
Thank you.
Thank
Neil, you there?
Yeah, I'm here. Thank you so much.
I've got one quick question, if that's okay. It's just about how we counter the whole transformation thing, which we need, and business needs to transform, and it needs to continually transform all the time. Is how, you know, and technology is so important. Is how, what do you do with the people, the accountants, who you can't take with you, who are stuck, you know, stuck with their spreadsheets, want to work in a certain way? Is there a you know, is this, I'm really thinking about the increased role of CPD, really, and I know SEMA offer a lot of that, and they've started to offer quite a lot of new diplomas in social accounting, and also, but also in this area as well. So is there a need for a bit of gentle re-education, do you think, here?
Yeah, so Graham, I really think one of the key things is the mindset change. The mindset has to change from being a traditional accountant, right, to be more innovative, right, and embrace these technologies and the opportunities that it brings. And it's not just RPA. There are a lot of other tools, techniques that are there. So I think education, creating awareness, and also creating a culture of adaptation. The first step is always the hardest step. But once you take that, I think if there are early adopters within the team itself, and you have a couple of very successful projects, and you share those success stories, I think there are a lot of other people who wants to follow suit as well. So I think the culture is key thing. As you said, education, creating awareness, knowledge, all that is key in getting everyone to be part of that journey.
There's always a problem if you're first, and the risk involved in that, and taking quite a big leap. I'm not sure. Do you think accountants are ready to take the leap? I mean, particularly when it comes to RPA, it's, you know, that's going to be quite a big leap for some people.
Yeah, I mean, it is. I mean, I would think the first challenge would be actually garnering everyone's support for the project, because the first thing that would come to mind, what would it mean to me, right? What does it do to my job?
Yeah.
Will it make me redundant, right? That's kind of the first thing that comes to mind. Yeah. So I think it's very important that, again, you have that support framework in place. When something is automated, what do you do next, right? So is there growth that you can look into to scale the operations, or how do we move into next level? So some of the areas that we've automated in the P2P area, right, what we've really done is we've actually moved into more spend analytics, more controls around spend that are now being diverted against some of the transactional activities the people, like, you know, initially used to do. So it's very important to map that whole story, the whole journey, and share it, and keep on confirming that there is something greater that's there, which is not mundane, which is not routine, which actually helps retention and reduce attrition.
Yeah. Are there any other questions, Neil? Or
no?
Can I just have one quick one? One quick one. All the work you've been recently doing in this area, is there one thing that surprised you, that that you didn't think was going to happen, or some reaction, or the way that it's transformed some things? Is there one thing that stood out for you at all in all the work you're doing at the moment?
I think one of the things has been around how, even in RPA projects, right, sometimes when you cut across team, how you can draw a lot of synergies out of it. Like when you don't look at a process in isolation, but you look at the end-to-end process, I think the opportunity for automation, opportunity for the benefits out of the project is far greater. So the synergies that comes across when you look at the end-to-end process rather than looking at something in isolation has been quite phenomenal. I would say that's quite something.
Okay, well, I think we'll leave on phenomenal. I think that's the way we should leave it there. Thank you so much for that. I really enjoyed that. Thank you.
Thank you so much, Nilu. Do stick around if you can. Next up, we have Clive Webb, Head of Business Management, P&I team with the ACCA. Clive, over to you.
Thank you, Neil. And hopefully you can see some slides and hopefully you can hear me. And thank you, Nilu, very much for those comments as well. So my second half of this conversation about innovation and global perspective, is very much around building from what Nilu was talking about in terms of the tactical and trying to look at the more strategic lens of where this takes our profession to, and maybe address some of those comments Graham made as well. So to do that, I want to briefly touch on 4 areas. Firstly, to talk a bit more about the evolution of finance and how we at ACCA see the very positive story and journey for our profession going forwards. And then to hone in a bit more on one key area of innovation, which is really about our role in sustainability and how that is hyper relevant to the finance community. But then that builds out into how we innovate in more traditional areas such as planning, budgeting and forecasting, because that of itself is core to what we do in finance communities. However, it's also part of this innovation track of building in the broader role of finance. And finally, I'll conclude with some thoughts on the implications for skills and careers, because as Graham was hinting, any element of innovation really builds into the future skill set that we all need. So let's start with the evolution of finance, and Nilu touched upon this a little bit as well. This is a diagram that comes from our research partner, PwC, in some of the work we've been doing on the future of finance. And I think it's worth just thinking about these 3 key domains and what they mean from the lens of the finance community. If I start towards the bottom right as you look at the screen, and the area Nilu was talking about very much of transaction efficiency. Yes, automation is part of this journey. And what we've seen very much is the need for finance teams to continue to be effective in how they capture and report key data at the point at which it comes into the organization. Now, we need to accept also that in this highly connected world, this world of transformation that I'm sure Mr. Argent will talk about a little bit later on today, that connected boundary exists way beyond the traditional sense of where the organization is. We're seeing increasingly hyper-connected supply chains. So data flows across value chains of organizations mean that data capture isn't simply about the organization itself taking data and using techniques such as RPA, but it's broadening out how it communicates electronically to capture data in effective manners. And that puts finance teams really at the heart of the organization of data in an organization. It's not to say that we are data scientists. What it is saying is we have key skills around the completeness, existence, and accuracy of data that we need to capture, not only applying to traditional finance lenses, but other lenses across the sustainability and non-financial reporting agendas that I'll talk about in a moment. And clearly, as Nilu mentioned, the RPA bot has a very significant role in improving that efficiency and other techniques as well. We then move on to compliance and control, another key aspect. So how do we report to external stakeholders the information that we have? How do we liaise with regulatory authorities? How do we ensure that that information is robust and is in control throughout the organization? Because that integrity angle is fundamental to the efficacy and the ethics of the finance community. And again, regulators are increasingly placing importance not only on the integrity of financial data, but if you look at, for example, proposals by the SEC, bringing in non-financial data into the realms of the SOX environment or the ICFR environment. So that compliance and control function, the risk management side of things, has an increasingly important role. But at the top of my pyramid is very much the generation of insight. And as Nilu talked about, it's moving that data into information that the organization can then act upon. And that becomes very fundamental to the future of the finance team. This is the role of business partnering, but business partnering only exists if you have efficiency and compliance operating effectively. And what we've seen as a result of the pandemic is not necessarily a skew of that triangle, but actually an increase in organizations placing more effort on all three elements. But as I said, increasingly finance teams are not simply about financial information. We need to think about the sustainability agenda, the E, the S, and the G. And it's worth saying that whilst we may concentrate on some of the external elements, such as reporting, we've got to start with an internal lens. And this is where finance really does need to start playing value. We need to understand what the strategy is for the organization in achieving sustainable goals. And sustainable businesses are ones that last. The E, the S, and the G is part of that conversation, but it's the overall ability of the organization to survive in those very challenging times that is hyper important. But having a strategy means that we need to measure performance, and how we measure performance against a broader range of key performance indicators and metrics is something that finance needs to look increasingly at. Our traditional financial KPIs are not necessarily enough. It's being able to interpret the operational data in the context of the broader sustainable strategy that is important. And as I mentioned, to do that, we need to think externally about our supply chains. And organizations increasingly are being asked to report not only from the lens of themselves, but if you think about scope 3 emissions, other reporting requirements such as the ESRS that was recently published, they increasingly look at the ecosystem, the value chain that finance needs to understand not only in its own organization, but those in its supply chains. And a McKinsey report about this time last year indicated that only about 21% of organizations understand their second level suppliers, and that gets to about 2% on their third level suppliers. Yet, from a regulatory point of view, we're increasingly being asked to think about how the efficacy, the E and the S and the G is applied in our value chains. And this quote comes from the IMD Business School. And the reason I wanted to put it in here was it just highlights this point about sustainability, because it's increasingly talking about value across an organization. And finance teams are not simply now being asked to think about the financial lens. Our performance, the way that the finance leaders, the CFOs talk to stakeholders, is about the value that the organization creates in terms of society, in terms of sustainability, in terms of net zero targets, including how it relates to its financial stakeholders. So that financial stakeholder lens and that broader stakeholder lens is absolutely vital to a sustainable organization. It's also about longevity. A sustainable organization is one that plans towards the future, and finance teams and financial professionals have an increasing role in focusing on that. And it's about creating transparency, because as the investor community becomes more and more focused on achieving its own E, S, and G targets, so that cascades down into the provision of capital for investment, and also finance teams understanding more and more and more about how the ecosystem around them works. So if I could take that back to a data lens and take that back to the triangle that you saw a few moments ago, the role of finance, understanding the data flows and working with the data flows, is very, very important to its innovative future. We take financial and operational data through transactional efficiency. We report it to an increasingly broader group of external stakeholders from our compliance and control functions. But we use analytics, and as Nilu talked about in her emerging technologies, increasingly using cognitive tools in AI and ML to understand trends, because now it is not the time for finance to just look and report on what happened in the past. Finance needs to look to the future. And if you use the well-worn analogy of driving a car, it's not good to look simply in the rearview mirror and actually see what's been passed. What actually opens up is the dangers and the opportunities that you have in front of you, and the avoiding actions and the strategy and direction that you need to take. And increasingly using that data for analytics through business partnering to communicate with internal stakeholders is vital to the innovative future of finance. Now, this graph comes from a survey that ACCA, together with our partners Chartered Accountants Australia, New Zealand and PwC, undertook back in July this year. And what it says is that about 82% of the respondents, and there were about 3,000 respondents to this survey globally, saw a need for finance teams to embrace broader views of performance measures to a broader view of stakeholders. So we cannot simply, in the future, rely on financial objectives. What we're being asked to report on and what our profession needs to embrace is a broader set of stakeholder objectives and measures. So what are the implications for finance teams in terms of planning and performance, which is a key activity for many functions? Firstly, and Nilo used the phrase VUCA, and I think VUCA is highly relevant to where we are in our short term. We've got to recognize that agility is the order of the day, that the simple process, as many finance leaders will say, of going in, of doing a budget, of doing a forecast and monitoring variances, which happens across every organization almost in a boilerplate or a template solution, needs to be challenged. Because the reality is, in that fast moving world, as we've learned from the pandemic, the ability to model scenarios, to use data in intelligent ways is becoming the heart of how finance teams help organizations map successful, sustainable futures. So the implications for the finance team really are that they cannot be siloed in their mentality. They now need to be collaborative super connectors across the organization. They need to look at an organizational wide view of performance, relating finance and non-financial objectives in an integrated manner to give a holistic view of performance. And they very much need to be cross-functional business partners, which requires us to have a skill set which is both analytical, data-driven, but also it has the ability to tell the story, to communicate the story, and to influence. And they need to be masters, therefore, of how they use data to do that. Because the move for the CFO is not simply to be the chief financial officer, but increasingly to be the chief value officer and have the conversation about how the organization relates to the society, to the customers, to its stakeholders in an intelligent manner. And talking to a group of CFOs this morning, just before I came on here, they all talk about being the key advocate for change, for progress, and for transformation of their organizations, both from a data-driven lens, but also from a sustainability lens. And I haven't mentioned anything about the attestation or assurance side of this, and I think that's becoming increasingly important too, because regulators are looking for even higher and more critical views of assurance over any of these data flows. Not only is it financial and financial audit, but as I said, increasingly the non-financial data that needs to accompany the financial reports requires attestation. And it's having the expertise to understand what attestation means that will drive the future of the audit profession as we know it today. So it's about how we engage with investors, with regulators, and with communities, providing them with assured information and data that is driven by that triangle that I showed you earlier on. So this itself has implications for the careers that we have and the skills that we need to have in order to further our careers. Yes, we need a very strong technical ability, that core expertise that you see in ACCA's model of skills, the Career Navigator. And that technical expertise is absolutely the bedrock of what we do. However, we need a strong ethical lens because we need to be objective in what we are doing. And the social agenda is as much about our ethical stance as it is about furthering metrics and information, for example, on pay gaps that you saw earlier on. It's also about having the ability to turn that into insight, to be able to communicate that information, to be able to collaborate, to drive, and to use our digital skills to build that data. Well, I hope that's given you a view very quickly of how we see the innovative nature of finance going forwards. Just to conclude, the purpose of the finance function is moving from a traditional transactional financial reporting, historic decision-making, working capital-based view into something that is exciting, is predictive, looks holistically at the performance of the organization, bearing in mind the sustainability agenda, copes with agility and the constantly changing world that we live in, and is very much value-based. So not simply looking at a financial lens, but actually looking at how organizations add to society and add to their stakeholders. Now, that's a very quick canter through how we see innovation at a strategic level across the finance community and our profession. There's a lot more in ACCA's thought leadership. It's all available for you to be able to look at. And if you want to delve deeper into any of those skills elements, then please feel free to look at the Career Navigator, which will highlight some of those options and relate that to the job roles that Nilu was talking about earlier on. So Graham, I hope that's given you some very quick pointers, and I think I've got about a minute left.
You've done really, really well. Thank you so much, Clive. And there is actually, I use it a lot for a lot of my work and a lot of insight. So I do use the ACCA thought leadership stuff. It's really, really good. It's real leading edge stuff. And it's actually, I shouldn't really say this, but I often complain about universities because they've got all these research and they've got all this, do all this work, but they don't really make it very practical. And I think the great thing about the ACCA is how practical it makes its work. So you can really relate it to the real world. And I think that's really, really important, not to be underestimated. I've got a quick question for you, if that's all right, Clive.
So thank you for those kind words, by the way.
No, it's true. Unfortunately, that's I always I can't help myself but say true things. One of the things I worry about the ESG and just the whole sustainability stuff is how we're going to how we're going to drag all the SMEs with us. I think the big companies can work it and they'll I almost said play the game, which is a really terrible thing to say, but they will be able to work with what needs to be done. But SMEs they may struggle with resources. They may struggle with, at the moment they're struggling with the cost of living. I mean, how are you going to take the SMEs, which is a massive part of any economy? How are we going to take them with us on the journey for change?
I think there are actually two challenges there that you've wrapped up in one. Firstly, I think the challenge of taking that sustainability agenda at any level is hard. Even for the larger organizations, it is hard. For the mid-tier we are sort of becoming the squeezed middle, it is hard. And for the SMEs, it is hard as well. We put out some guidance on that, and I would refer people to the guidance for SMEs, because it does talk about things like using the resources like B Corp and organizations like that, where you can get advice, and in some cases free advice, that actually will help them on that journey. Because I think what the SME in particular needs to understand is what that journey is, and the best thing to do is to use trade associations and bodies to help them do that. Yes, it is about investment. And I think what worries me in part is in any of these layers, and increasingly, if you look at the European regulators' view of the layers, it's about information across your value chain, and SMEs inevitably at the end of the value chains. It's about understanding what it is that you need to do and how to do simple things like offset some of your carbon or move to more efficient power generation, etc. These are investments, and we shouldn't underestimate the level of investment that people need to make. And I think that is hard, but we're also seeing green finance coming in that helps people in part get someone on that journey and makes the cost of capital lower if they are able to prove their credentials on that journey. So it's a balance. It's about daily advice. It's about not thinking about it on your own. It's also about recognizing it happens at all three levels.
Yeah.
Is that a good enough answer?
No, that's yeah, it is difficult, and I know they're struggling, but they're also big polluters. I mean, it's if you look at the value chain as well, you know, I think it's 62% of carbon emissions are produced by smaller companies rather than big ones.
And
it's a bit
we're
weird
not going to address it unless we help them to actually do that. But there are groups out there to help them, and say ACCA's put out some guidance that will help organisations identify where the best points of contact are.
Okay, Neil, is there any other questions?
There is. I'm very keen to give people a decent lunch break, but let's just address Usha's question.
Absolutely.
Thanks, Clive. Superb research presentation by ACCA and partners. What can universities do to prepare their students for this new world?
Okay, this is always a tricky question. I think the first thing we need to realise is that the world of the accounting is broadening. That's not to say that double entry doesn't have a role. I would be shocked for saying that. And indeed, to quote one member, they said to me, double entry is the best ever problem solving technique that you will ever find. So don't forget that. I think what universities need to do is to recognise how this sustainability agenda, the non-financial reporting agenda, links very much to the financial reporting agenda. And I know, talking to some university contacts, there are always challenges in bringing this into the syllabus, but it is something that is increasingly important. You've seen, as I say, ESRS being published on the 22nd of November, which highlights some of the non-financial disclosures that the generation of accountants coming through are going to find is very much their bread and butter work. So it's about finding that balance, and I would advocate that balance.
Thank you very much, Clive. Thank you. There's been another question. Bahar asked, this is just a general one. How can we have a copy of all the presentation materials right here? This recording will be shared with everyone, so you will need to look back into the recording, and I will try and pull the website links that have been shared. Usha says, thanks, Clive, superbly answered. So with that in mind, thank you so much, everyone. We will be back after a lunch break, so do go grab some food, tea, coffee, grab a comfort break, and we will be back at what time we're coming back? 1:15. So we'll see you shortly.
Thank you, Clive. Thank you for that.
Clive. Thanks, Nilu. See you all soon.
Yep, of course. Well, good afternoon, everyone. Welcome to this afternoon's session. We have a man who really does know what he's talking about. So that's really, really good, isn't it, really? Because you're going to have to listen to him for half an hour or so. His name is Chris Sargent. He is the Managing Director of CFO Generation CFO. Gen CFO. That's
Generation
it, Gen
CFO or Gen CFO.
Thank you very much, and really has been leading debate in this country and wider for a couple of years now. So he's someone I've always been interested in listening to. He's really got his pulse. He really knows what's going on in the industry. It's really worth going to have a look at the website, and if you want to be a future CFO, it might be a place you need to go regularly too. But without further ado, less from me and more from Chris. Chris, the floor is yours.
Thank you, Graham. As always, a pleasure to be talking to the rising stars, let's call you all, of the profession. My name's Chris Sargent, and yeah, Graham's right, and I'm going to put a bit more meat on the bone. I have been talking about innovation in accounting and finance for a very long time, and it's led to what I do today, which is run a community of accounting and finance leaders, named Gen CFO, and I'll come on to that in a bit. But I do want to go back a little bit, because, you know, why do you want to talk you know, it's Chris Sargent. What is what I say worth listening to? And the only place to start for me is way back when I was a financial controller and then a divisional FD. And this is a sort of a sad tale for me, but it explains exactly why I'm doing what I'm doing today. I'm not just jumping on the bandwagon and waving the flag of technology and change. You know, this is a very personal journey for me. So what happened one fateful day quite a while ago now was I was working within a financial control team, and I was responsible for reconciling the finance foreign exchange that happened in the organization. And this was a sort of 200-300 head organization, very typical in the UK, you know, mid-tier organization, had a CFO, had a control team, had an accounting team, and we lived with a lot of bad process, poor data, poor control, and but that was just expected. You know, we were never sort of invested in, and we certainly weren't innovators. But it led to me sort of questioning everything, because on one fateful day, I discovered a transaction, and it was a transaction that I usually reconcile from GB to US dollar. And I won't go into the detail on it, but there was a transaction that popped up on the dark side of this story, which was GB to NZD. That's New Zealand dollars, if you're not aware. And it raised alarm bells for me, because I thought, well, we transact in euros, we transact in US dollar, we transact in sterling, but why is there a New Zealand dollar transaction in this? Anyway, I started pulling on that string, started to reconcile the accounts, started to go deeper into a lot of the financial transactions, the FX, the foreign exchange that was happening, and I discovered a fraud. And that fraud at first was £10,000, and then it went all the way back 4 years to £1.5 million fraud that I discovered, which was perpetrated by my boss, the CFO. And that was amazing from a professional point of view. You know, I found this fraud, and I was patted on the back for being able to do all the forensic work, and we managed to recover a lot of the money. But the other side to that equation was I had a year of pain where I had to do 2 jobs. I had litigation to do, I had corporate lawyers meetings to run as well. I had VAT tribunals to go to, because there was so much fallout from the fraud, and it was a complete personal nightmare for me. And I ended up leaving that role instead of possibly being promoted into the CFO role, because I was just exhausted by the whole thing. And you know, Chris, what has this got to do with innovation? So the reason why I'm telling you this story is because it was obvious back then that accounting and finance people were living with a lot of poor process and a lot of poor information and lack of integration and zero innovation. And that year planted a seed for me, which was that things need to improve in accounting and finance, but not just in a few areas. A wholesale change, as I saw it, needed to happen in accounting and finance. And you know, you can arguably see that from a business perspective. You know, if you go back 15, 20 years, you know, there are retailers that didn't have you know, e-commerce platforms, or they didn't have, you know, extensive ways that people could pay through their websites. Today, everything has changed. And that's an external customer business sort of transformation. But what about our own transformation in accounting and finance? And it started to happen. But it was really this moment in my career that led to me wanting to make a change. So at that time, you know, I was sort of quite alone in accounting and finance. I was I had a personal mission, but I had no way of understanding, you know, what we needed to do in accounting and finance. There's no traditional training in finance transformation or technology or innovation. And even today, the syllabuses don't really cover that. They might touch on data visualization or analytics, but you know what we're talking about is a lot more than that. So I was a very lonely voice, and like I said, it was just a seed at the time. But then in 2015, which is sort of showing how long ago this was, this bit of research came out, which seemed to put a lot of meat on the bones that I was sort of thinking about. And it was just in the back of my mind at the time, but will robots take our jobs? And this is a really interesting bit of research that came out from Oxford University and Deloitte that was publicized and distributed widely by the media. And it led to a lot of conversations around, you know, is the profession going to survive, and do we have any relevance anymore? And, you know, what are our prospects if we are automatable? And you can see from this bit of research here that 95%, arguably 95% of what chartered and certified accountants do is automatable. And it's 26 out of 366 job types, right? So if you read this at face value, this is sort of near doom. We are saying that there is no profession in the future because it's fully automated. And I sort of lapped this up. I started to look at this, not because I wanted to see the end of accounting and accountancy. You know, I had a very successful career in it, but I thought, this is it. This is the impetus that I need. You know, the seed that was planted when I suffered in poor process from the fraud, lack of information, lack of integration, could be solved with this sort of capability. So I jumped on this and I moved from core finance and accounting into finance transformation in large enterprise. And what that meant was improving processes. Sounds a bit dull. Improving systems, providing more business information. And at that time, people said, Chris, what on earth are you doing? Like, you are accelerating our doom here. And also because of the automation risk, but also people were saying, if you know you're a business person, you want to be closer to the business, right? And I said, yeah, I absolutely do. If I want to be a CFO, I need to be closer to the business. I need to move up that sort of commercial strategy pillar. But I couldn't get away from the fact that there was so much to do in this space. And I felt that I wanted to be part of the solution rather than part of the problem and focusing on a different area. So I started to work in finance transformation, places like Amazon and John Lewis and Vodafone, big companies who are investing. And I was lucky to see that there were some inspired CFOs and finance teams in those companies who were able to really put money behind some of this capability, which led to me learning a lot about the capability and believing in what the capability can provide. It also meant that I was much closer to the argument than a lot of people. And I was able to look at this research and look at this number of 95% and actually tell people that there wasn't anything to worry about, because this bit of research, and the Oxford University researchers actually have backtracked a little bit from this now, saying that the 95% number is only saying that it's possible. It's not saying that it's likely. And also it didn't take into account our kind of mix of skills that we have as accounting and finance professionals. So this was literally looking at, you know, very simple tasks and trying to rank them, whether they are automatable or not. But as we know, conversations with the business, analyzing things, acumen, understanding of industry, the business, our problem solving skills, these all trump anything in the automation space. So we were able to sort of put a bit of context to this, and I started to have conversations about this. And the conversation continues today, right? This is 2015. The seed was planted for me a good 15, 20 years ago. but it still happens today. And now this is from a couple of years ago, but I bet you if I went to the press today, I could find a similar story somewhere, maybe in PQ magazine, saying that automation will force accountants to reinvent their role. So this is, you know, people look at these statements and they're like, what the hell, you know, I have to reinvent my role. I'm learning something in a profession. It sounds like a traditional profession. It's a credible profession, but now we've got to reinvent the wheel. We've got an identity crisis on our hands. You know, what do I need to be doing in the future? Now, some people look at these and they take it with a pinch of salt because it's coming from the CEO of Xero, a very successful cloud accounting software that it's in their interest for people to align to their product. But the reality is that automation is happening from within, not necessarily people becoming sort of citizen developers, which I'll come on to, but they're buying tools, they're downloading tools, and within the tools there is, you know, automation. There is a level of machine learning, if you've heard about machine learning and analytics. There is, you know, efficiency built into these tools. So while we're not necessarily aware of the change is absolutely happening from within. And this is showing in things like reconciliation. That kind of happens at a click of a button now, where transactions are being matched. If I think back to my fraud days, this would have given complete transparency to the fraud immediately. It would have not have happened. Also within, and I'm not, you know, a spokesperson for Xero here. In fact, we don't even work in the accounting space. We work in industry and business. But these tools also have reporting capability, and they have planning capability. And again, back to my fraud days, if there was clear reporting on FX deals that were happening, then that New Zealand dollar transactions would have been exposed immediately. If there was reporting on the spot rates that were being used, whether they were good compared to the market, whether we were hedging well from a treasury perspective, these transactions would have stuck out like a sore thumb. So the reporting that's happening and the automation that's happening would have prevented that fraud, but that was my problem. Your problem is it's changing your future profession. It's changing your future role. And that could mean less people in the role. It could mean more value being created in different areas that you're not necessarily learning about today. But fortunately, you're here today to hear about all this great stuff. So that is why we must innovate. We must change our mindset. I hear there was a session this morning on sort of how we think, which is very important. We must have a sort of digital first, improvement first, continuous improvement approach to what we do. This isn't about just learning something and then it's staying the same for the next 10, 20 years. This is about continually improving just to sort of survive and keep your seat at the table as a finance person. And then, you know, this all led to me doing what I do today, which, as I said, the seed was planted. I've gone on this personal journey, this professional journey to transform, to understand what transformation means. I've led BI and analytics projects in large organizations, finance process optimization projects in large organizations, using lots of capability. And I've seen firsthand what it takes to innovate, what we should be focusing on in terms of capability. And I sort of going to pitch here a potential as to, you know, how we do it. There are many ways to skin a cat, and it's just specific to each organization, but we're trying to sort of create a bit of a model around what I call the digital finance function. And Gen CFO and the community that it is today kind of really zeroes in on these these edge talent and tech topics, and, you know, tries to get people connected to talk about that. So that's a sort of look backwards. So we're kind of at today now. So I'm going to get into a little bit of the nitty gritty on innovation. Now, what is driving innovation? This is purely within the accounting and finance space. And this is something from, we have, there's lots of IT consultancies out there, and this has come from McKinsey, which I'm sure some of you have heard about. Large consultancy, IT consultancy, strategic consultancy. And this has come from a article that they wrote called Memo to the CFO, which was directly saying that you don't have the capability that you need for the future, and this is where you need to be focusing on. And the CFO has been given a clear mandate to make this change, but there are issues around how we make that change, and that's where you as a generation are going to come in to support that. But we have a certain number of challenges that we'll go into. But first of all, let's have a look at what's driving the innovation. So get my dabber out. There we go. So automation and analytics. Now I hear there was a session this morning on RPA. So I'm not going to go into this one in too much detail. We'll save some Q&A time. But automation is all about improving in process, bringing together human and robot to improve processes. And at the start, as we saw, there was a lot of concern around automation. There was a sort of risk to automation. Now it's it was easy to sort of put people's minds at rest then, but the conversation still goes on. I think it's the Western world with Terminator in their heads and the whole Skynet thing. Put that to one side. Go to Asia, they love robots because their Hollywood robots are all friendly. So blame Hollywood for this worry. But automation is all about bringing people and a digital workforce together to get stuff done. And it is needed because there is a new generation of people in the workforce who don't want to be doing basic admin jobs for 2 years before they get a promotion. They expect that to be automated. They don't even expect that to be a job. So I'm possibly talking to those people, right? You don't go to university and get a degree, become a qualified professional, then to have to sit reconciling bank statements for 2 years before you get a promotion. So there is a huge driver behind analytic and automation, not just because it can improve things, because we've got a talent issue that sits right alongside that. So that's automation, and it is using capability like RPA and machine learning to create a sort of intelligent automation where you can have not just things going faster, but decisions being made within a process. Data visualization is the next one, sort of number 2 on the list. Now, data visualization is often overlooked because it's just it's the end of the road. It's the last mile of reporting, some people call this. But it's so important because if I am a data scientist or I have a ton of data within my organization and I've spent months creating a data set, managing data, cleansing data to come up with a couple of answers to your business questions, then if I can't get the visualization right so you don't understand, so you can understand the message, so you can understand the action that needs to be taken from that visualization, then what's the point of doing the project in the first place, right? This is all about communicating a message for action, for value add, not just providing information for the sake of it. And I think this is one of the biggest sort of mind shift changes the profession needs to take very close to home. Automation is a whole new world, but data visualization is much closer to home. People are happy creating very long P&Ls with lots and lots of data points in big spreadsheets. But if you go and talk to your business about those spreadsheets, do they get it? The chances are they don't. There's lots of finance for non-finance people courses out there for that very reason. People are trying to work out what this spreadsheet means, what this budget means, how much have I spent? Am I over and under? They don't want to be doing that. So visualization comes in here where we're saying, look, here's the message, here's the visualization in terms of charts and graphs and numbers, potentially on a dashboard, but it could just be a single metric to say that is what you need to be doing next as a business. And it's easy to overlook because we think, oh, we've got this, we work with charts and graphs and spreadsheets all the time, but this is something much more advanced than that, and it plays to the human side of decision making and the speed of reporting, the speed of decision making as well. So that's data visualization. And then the next two I'll just cover off together because really they're the same capability, but they are different data sets that underpin them. So analytics generally is about structuring data and supporting decision making. So that you could argue that's the sort of data under the visualization. So we would want lots of data, we would want lots of data points, and we would want maybe a data analyst or a data scientist to be able to find insight within that data for the business to then go and action with good visualization. So it's about, accelerating decisions. On the finance side, though, it's using finance relevant data. It's that treasury data that I talked about in my fraud years. It's the reconciliation data that maybe be used in audit to see whether there are any anomalies or outliers. It's the data within our general ledgers and all the standard sort of information that we might have, but also maybe overlaying, credit information, credit data from external sources to make sure that we're dealing with the right customers or we're giving the right terms to the right customers. So there's the finance side of things. And then there's the business data. So operational data, sales data, marketing data, they're going on their own journeys. And marketing is a really good example for us to look at because marketing obviously has its own digital marketing career now. They've moved away from pushing envelopes through, doors to get marketing messages out there. They're now using the net. And that's an entire career. That's an entire digital shift. And arguably, we're going on the same one in accounting and finance. So marketing is a good sort of use case for us when we start looking at some of this stuff. But the analytics from the business point of view is just different data, same capability. And arguably, there's a bit of a foot race between who owns analytics. Is it finance? The CFO's been given a clear mandate here to own it. But if all the other parts of the business are doing really good analytics, how difficult is it for them just to add a few numbers, to add their budget? And then how relevant is it for us to be doing that work? So there is almost like a battle here internally around who should own analytics. So this is what is driving innovation. I've talked about why we need to innovate, but this is sort of what is behind it. Automation, analytics, and I'll come on to the next A, which is agility, in a second. All right, just going to take a sip. So bringing this into our organizations, I wish was an easy thing to do, right? It would have saved me that year of pain a long time ago. It would have saved, £1.5 million going missing from that organization. And it could improve our worlds very much looking forward. This isn't just about the fraud, Chris. But we've got a couple of challenges that I'm going to call out here because what I never want to do, and this is very much the ambition of Gen CFO, is just be a cheerleader for this change. Okay, I want to operationalize this change. I want to make sure it happens and help people make the change. So that means actually staring at the problems as well that we need to fix, rather than just saying, RPA is amazing, blockchain's amazing, go do it. So the first thing that we need to do is there's a leadership, top-down leadership challenge when it comes to innovation. We have a traditional world of accounting and finance and transacting within a business, and we have a digital world which is more online and streamlined and tech focused and digital first. So these two worlds have to start coming together. And the leadership challenge is, how do I get that knowledge? Because the chances are I'm not digital native. I'm not like you guys at university who, have grown up with tablets and online gaming and messaging and an app first sort of approach. I may have been on the cusp of that as it was sort of growing, but I certainly haven't learned that from experience growing up. And the chances are it's not part of my traditional learning either. So there is a real challenge here where we need to sort of understand the capability and the competencies that we need as people, as well as the technology that we need. And that is a leadership issue. That is also, I would say, a professional issue as well, talking to the institutions where they have to understand where we're going, because obviously we want work ready people. When we say that we're qualified to do something, we are work ready, we're able to actually add value in the workplace. So that will require this digital world and this traditional world coming together. So coming down from the sort of leadership challenge to the management challenge, and this is almost like a hierarchy of people here. The people who are going to be asked to do this, right, have probably never done this before. So you might have a sort of strategic CFO who said, I want to do this. I get it. I've heard the messages. I went to a Gen CFO event or a, PQ event, and I've heard that this is the way forward. Let's make change. But then they turn to their team and they're like, right, who's going to manage it? Who's going to be the lead, the innovation lead within the team? So there's a challenge here because the chances are the management have never done this before. So we need to start constructing a plan internally to understand first, probably what we want to change, what the problem is, then have a strategy around how we're upskilling people, how we're getting people closer to innovation practices, agile practices, understanding technology. And arguably, people are starting to say, well, someone with a computer science degree might be closer to leading some of this stuff than an accounting degree. Or someone who's just interested in this rather than pushing it on someone who's not interested. They're the people who we need to find to start leading this, but we need to get behind them. And as I say it again, the CFO has been given a clear mandate to do this. So we need to start showing the business that we're able to lead innovation. So start leading small projects from within the team that you're in, but then you start to move out and make bigger change within your organization. But there is a challenge in finding those people. And again, that is why we need to innovate as accountants. And then there's a talent issue, which even when there's a clear plan, you've got managers who want to get stuff done, then do we have the right skills for today? There is a real sort of lack of focus on transformation or digital tech, all of the capability that I talked about. There's a lack of focus on what that might mean to our organizational design and the people that we might need within our teams. You start to see it happen in some organizations where accountants are being replaced by business people because we need that knowledge more than the accounting experience that's sort of on the audit side. As I've said, we've had computer science people coming in, taking traditional accounting roles because they're more analytical. They might not have the accounting qualification, but they have the capability, the technical skills to get stuff done. So we need to align on talent. And as I've alluded to on the automation side, tomorrow's talent, you guys might not want to do those roles. It might be very difficult to, fill entry-level roles or have people stay in those roles for long enough to add value. So we need to address that there is a sort of talent skills gap and that there is talent, there's tomorrow's talent, if you like, needs to be trained as well. How are we doing for time? Great. So I'm just going to wrap this up now. So let's talk a little bit about how we do this. So it's complicated. You can see that. Chris has thrown a lot of words at me, possibly a lot of jargon. I apologize for that. If this is new, then hold on to it, because this is very common language now within the accounting and finance field. About how we innovate. So at Gen CFO, we talked to a lot of CFOs, talked to a lot of people. I've spoken to people over a very long time, and I've kind of condensed it down to these 3 areas, which I've now called the new AAA, and AAA organizations in the markets are all about, how creditworthy you are and, how reliable you are at paying, being able to pay. I think this is around the AAA organization now is about how high performing you are and how sustainable you are. Nothing to do with ESG, but how sustainable you are as in terms of your operations. So managing the AAA is the first thing. So how do we manage this? How do we come up with a strategy to manage these 3 pillars, the AAA? That's the first thing that we need to do in terms of getting it right to innovate. Then we need to understand agility, and agility is our ability to respond to the business. So stop thinking about ourselves as just providing reports, providing variance analysis. We need to be partnering with the business, listening to the business, enabling the goals of the business rather than just giving them a slapped hand when they've spent too much on their budget. So agility is the first one that we really need to get our heads around. Then analytics as a capability. So that's again, it's a complex environment, but it's core to what we do now. Reporting, modeling, use of data, that's probably everything you're learning right now from an accounting point of view, but analytics is the next level. It's the advanced stage to that. It's arguably more valuable to the business. What you learn in practice and from a professional point of view might be more aligned to statutory concerns and legislative concerns. But when you get into business, analytics is where you need to be. And then automation, as we've said, to sort of make sure that we've got enough time to do all this other stuff, make sure we've got the right robots to fill the gaps if there are any gaps in terms of our talent, and automation just to improve our processes. And by improving our processes, we will improve the data quality that we have, which is then used in analytics. And then I've got a little bit more meat on the bone, just trying to bring this all back to, what we first talked about. We have the digital finance function, which is, the business engagement, understanding the business from a finance business partnering point of view. Something I like to call information science is not just reporting, but we're actually doing more here. Business intelligence and sort of deeper translation of the analytics that's being provided, because it's not always clear. It's not sort of coming straight from your list of transactions. Some of the analytics that you provide could be coming from lots of different places, even with an algorithm thrown on top of it. So you need to be able to translate that to the business. But ultimately, you're focused on value creation. The agility sits across all of this, but that's your own agility as a team. So the org structure needs to be right. The talent you have in there needs to be right. We need to acknowledge that there's a level of IT and tech business partnering in this as well, taking a digital first approach. And a citizen data analyst or developer, that is someone who is not in IT. That is someone who's focused on the business, focused on accounting and finance, but is tech savvy enough to get stuff done. Those roles are becoming more and more important. And then it's obviously all underpinned by the capability that we just talked about. So I think we're 10 minutes away from a change. I was asked to give 10 minutes for Q&A. So I'll happily take any questions there. And if you'd like to connect with me, I'm usually on LinkedIn, or you can find me on the Gen CFO community, which is on the screen now.
Thank you, Chris.
Thank you. Graham, did you want to kick us off with a question?
Yeah, I did. You said one of the big areas was accountants going to have to challenge is really who owns the analytics. And you said it's going to be a battle. And I just wondered, what tools can you give accountants to help them win that battle, Chris? I mean, well, how do you, if they want ownership of that and keep control, because, CFO is often seen as number 2 in any sort of big organization. So if they want to keep that as part of their portfolio, how are they going to win the battle to be in charge of the analytics?
So there are a couple of ways to do that. And I think, first of all, you need to start talking to the business about it's our mandate to own data and own analytics. And one of the phrases that's used quite a lot is we need one version of the truth. So if you've got marketing reporting revenue here, and you've got, I don't know, operations reporting revenue over here, and then finance releasing something in their reports, who's right, who's wrong? When you get into the nitty gritty, they could all be different and valid, but who owns the one version of the truth? That has to be the CFO. That has to be the numbers guy, right? But my point here is why it is a battle is because some of the capability that I talked about doesn't exist within our finance teams right now, but it does exist in the business. So you could come along with your analytics project and say, hey, we're going to start owning analytics. And the business are going to say, well, what capabilities do you have? Oh, well, we just downloaded this tool and we've got a small data set over here. And they're like, yeah, okay. We have a whole data lake, and we have data scientists, and we have algorithms that we've developed for the last couple of years to forecast what we do. And you're telling me that you're taking over this job. So I think the CFO clearly has the mandate. So they should be winning that argument, but they have to catch up to the business or start leaning on that business capability to make it happen.
Okay, another question I've got really is the same one I asked Clive. Really, is I think my worry is for a lot of smaller businesses, when you start talking about automation, transformation, that looks like it's a long-term investment and one that they will worry about making. If they make the wrong decision, it will bring the business down. I mean, how is there a different rules for SMEs? How can they take some of the advantages? I mean, people might say that some of them can be leading, but I mean, for many of them, sort of that they haven't got the talent within their organizations.
What I see on the ground is the agility within SMEs, smaller businesses, will save them every time. So, let's say I do a Friday project and I'll see something advertised and I'm going to download that. I'm going to play with it. You can probably integrate that immediately to your accounting software. You can immediately send out some nice visualization to your MD or something, or your clients. But if it's rubbish, you can also change it within a day. Yeah. Now you might have wasted some time, but your agility in a small organization, the fact that you own the decision, you can change it whenever you want. You're only sort of wasting your own time. And I would say that's actually a nice test and learn approach to this. There's no perfect solution. You need to test and learn, work it out, become that sort of citizen data analyst that I talked about, by playing with it. And it's no different to when people join any organization and they're thrown Excel or something like that, spreadsheets to play with. You've got to go on a journey. You've got to learn them. So larger organizations are locked up in red tape and legacy systems, and it's hard. So I think the advantage is actually with the SMEs.
And also the whole idea of real-time information, that accountants love a quarterly, they love a monthly report. This is every single minute of the day. Everything's being updated, and that creates different pressures, doesn't it?
It does, but I don't know whether the goal is real-time information, because it may be on cash flow if you're in a small business, but it's all about matching the decision that you're trying to make. So if I need 3 months to make a decision, I arguably only need that information every 3 months.
Yeah.
If you're providing it to me every day, I'm not looking at it, right?
No.
So there is an element of real-time processing which allows for real-time reporting. The processing is probably where you want the real-time stuff to happen, and then you pick and choose what you want from an information point of view, because the real-time processing allows you to just do away with month end potentially, or do away with peaks and troughs within our workload where you've expected to work a weekend or work really long hours sort of unnecessarily. So yeah, the processing is probably the real-time part that you want.
Cool. Can I jump in, Graham? Because you've held all of question time.
I'm
We've
really
only got 2 minutes left.
Sorry,
this is exactly why I said 10 minutes. So, we have a question from Elmas. Do you think innovation should be included in accounting and finance courses?
Short answer, yes. What it covers, I think, is really important. But short answer, yes. I think we need to understand that innovation is arguably an attitude and a mindset more than something that you do. I think continuous improvement, I think, is a mindset and an attitude that we need, and that's aligned to innovation. I don't expect anybody to be creating products. They might do if they get into sort of larger organizations and further down the road, but right now it's just an appreciation that we need to improve.
Brilliant, thank you. Harry asked, where would you recommend people should go to further their learning and understanding? Are there any key people or organizations people should be paying attention to? And obviously there's lots of people been here today. Where are your go-tos?
Yeah, so look, most people learn from their institutions or conferences they go to. The institutions, the thing is, they're very top-down kind of information normally. So, and at conferences, it's full of sponsors and pushing product and all the rest of it. So what's developing is community. And I'm not plugging Gen CFO here, but if you can find a community, if you can find a group of people who want to talk about this, then that's probably the best place to learn. If you're looking for hard technical skills, there's loads of people online who do this in terms of analytics and automation, all the rest of it. And there's sort of leading products in those areas, so you can go and find them, and I'll happily talk to you about those. But I think generally people are learning through their peers now because they see it as accelerating, especially in new areas. It accelerates their understanding. They can lean off each other and say, oh, you've done that, it worked, I'm going to do the same. So finding a decent community to talk about these things is probably as important as taking the course.
You and Eunice, who's one of our students, says, I think LSBU is already doing this around innovation. So thanks for your comment, Eunice. Chris, that's all we've got time for. We have to move on. Thank you so much. There is one outstanding question that you're welcome to answer in the Q&A box if you've got time. But thank you very much.
I will do.
Thank you very much, Chris. That's great.
Cheers, gents. Have a great afternoon.
Thank you so much. So we are on to our next talk. I would like to welcome Ross Thompson from Arden University. Ross is a lecturer in accountancy and finance, talking about blockchain benefits, the evidence so far. Ross, over to you.
Thank you very much. Tough act to follow. I'm just going to share my screen, if that's okay. Okay. Okay, can everybody see my screen and hear my voice, please?
Yes, we can.
Everything fine, great. Okay, thanks for the introduction. Yes, I've been an academic for 30 years now, and in recent years, I've had a new lease of life, certainly in terms of research, with the advent of blockchain. And what we're going to do today is just talk a little bit about blockchain and its impacts and potential impacts on accounting. Now, I've said the story so far. There's not much in the way of a case history, but there is plenty of experimental work going on, and I'm going to really make some predictions as to the key areas as to where I think blockchain is going to impact accounting. Okay. So I would imagine most people will have a general, perhaps, idea, conception of the blockchain concept. Some will perhaps have a very advanced knowledge. That's great. But I'll begin with just, I think, a short introduction to blockchain. We could spend all day on it, but we're not going to do that. But once we've done that, then we'll look at a number of blockchain and accounting initiatives that are currently underway. And they are specifically transactional accounting improvements and the use of smart contracts, blockchain and uses in environmental accounting and particularly supply chain audit, and the changing role of the auditor. Finally, I'll focus on a key area of interest to me, and that's how blockchain is altering education, and in particular CPD and the use of micro-credentials. And this will be, I think, hopefully of great interest to any educators in the audience today. Right, let's carry on. Oh, and finally, we'll see if we can draw together, synthesize what I've spoken about, and then that should allow some time and provoke some questions. Okay, so let's begin with the blockchain. Well, what is it? Well, in essence, it's a distributed record ledger system. It's not based on one particular computer or server. It is distributed. It is also concerned solely with the storage and retrieval of transactions and records. And this is a common misconception that many people have. It's nowhere near as big as the World Wide Web, which focuses on information, which pretty much is everything. So the uses of blockchain applications are much narrower as a result. It's also important to distinguish, between the blockchain protocol and a blockchain application. Right, the protocol is simply the architecture and the program. It's analogous, if you like, to the markup language on the web. And this protocol will support blockchain applications. And these applications certainly aren't limited to cryptocurrencies and other token-based systems. That's just one type of application. There are many, many other potential applications within the business and the accounting domain. And that's really what we're going to focus on today. So I'm not actually going to cover crypto, which is probably a little bit unusual, but it is relevant given the scope and target of this conference. Now, the blockchain applications, which we'll discuss in just a second, can run either on a public blockchain architecture, like Ethereum, or more commonly in business, on a private blockchain system. That's a system, a protocol actually built, managed, and run by a corporate, a trade association, a confederation, or whatever. The top 4 accounting firms are working on their own private blockchain systems as we speak. And there are many other examples. For example, Marsh Mac in the insurance business are doing also. I totally subscribe to what Professor Sikka was talking about this morning. Before launching into the technical aspects of something, it's a really good idea to, I think, firstly, consider the philosophy behind it. And that's kind of what I've done here. And I think this is a sort of whistle-stop tour to understanding blockchain. In terms of its aims, its philosophy, there are only really 3. First of all, it aims to get closer to peer-to-peer transactions, removing the need for unnecessary intermediaries. And you can see that in other spheres, for example, banking, where blockchain technology is quite well advanced. Second aim, philosophical aim, transparency, openness. Well, that's 4 aims, sorry, not 3. Thirdly, accuracy. This is an important part, and we'll come on to that in just a minute. Accuracy of transactions, trust in the accuracy of information on a ledger. And finally, democracy. This is about unrestricted, unfettered access. Everybody who has a right to view a transaction should be able to. And that is the aim of a blockchain, or the blockchain movement. Okay, moving into a little bit of technical detail then. Basically, information is stored on a series of ledgers. And these ledgers are often called nodes. Anybody who is a participant in the blockchain becomes a node. They are permitted real-time access, therefore, to their information. Now, the 2 most important points follow. Some of the nodes, not all of the nodes, we can call them super nodes, are responsible for validating and approving transactions using a consensus principle. If 51% of them agree, then the transaction is posted. In practice, it's a group of transactions, not single transactions, hence the term a block of transactions. Second point closely aligned to that, and this comes from game theory, is the nodes have to be incentivized to behave diligently and with integrity, so you can trust they are approving what should be approved and vice versa. And that's sometimes referred to, isn't it, as a Nash equilibrium. We need some sort of internal policing to make sure they behave themselves. And you often hear the terms mentioned, perhaps proof of work, proof of proof of stake. And these are ways that nodes can be incentivized. Won't dwell on that, but it's important that they have to have some incentive to behave. Finally, the blockchain system uses encryption and private key access to enhance security and integrity of information stored, transaction information stored. Now, the features of a blockchain are very, very familiar to people like myself, quite old-fashioned finance and accounting people, because it resembles an old-fashioned ledger, carry forward and brought forward systems. Blocks are updated and chained together using a code to chain them. Also, records are permanent or immutable. This is a key feature, but it also causes challenges, which we'll explore in just a minute. Okay, so one of the reasons why so many blockchain startups, I'm afraid, do fail is they go in with the solution looking for a problem approach. It needs to be the other way around. Blockchain has a number of advantages. These are the main ones. Should be quicker. Information stored on it should be permanent, should be more accurate. It should cut transaction costs and reduce the need for intermediaries. Information should be more secure, transaction information more secure, and it should be more transparent. And the blockchain, or a blockchain solution in business and accounting, will only work if all, perhaps several of those advantages can be achieved. If not, it's unlikely that a blockchain solution is applicable. So what we're doing is we're looking to perhaps make changes, innovate in accounting, and hit as many of those advantages as we can. There's no hard and fast rules here. Okay, so let's have a look then in the second part of the presentation as to what's going on in accounting. Now, the flippant answer could be not that much at the moment, certainly in terms of established case studies. But as I alluded to in the beginning, much of the work is exploratory and in the planning stage, the embryonic stage. And it's therefore possible to make some reasonably accurate predictions as to how blockchain is going to impact accounting in the near future. And this is my take on it. I've already covered these, and we're going to do these in some detail now, starting with transactional accounting. Okay, now this has come up in Chris's presentation. People of my vintage, I'm quite old, often used to refer to transactional accounting tasks as the grunt side of accounting, things like reconciliations and so on. Right, blockchain has the possibility, the potential to create triple entry bookkeeping. Now, in theory, that adds another layer, but it could also save time. This means that nodes are used on the distributed network to verify double entry posting, sorry. So the double entry system won't be replaced, it will be refined, and it will be housed on the blockchain. So that should allow for real-time accounting and auditing to take place. And sorry, that's an irritating email, I apologize. It should permit greater transparency and greater democracy. Those who need to have access to the ledgers can. Right, so how many of these advantages can we hit and what sort of problems? Well, the immutability, the permanent could be an advantage. But what about adjustments? If something's permanent, how do we correct it? And there is also an enormous elephant in the room. If any of this accounting information relates to personal data, it may come under the aegis of the Data Protection Act and violate that tenet, the right to be forgotten. How do we incorporate that? This is perhaps the biggest challenge in many professional services when employing blockchain. Right, we can certainly see that there'll be a reduction in transaction costs, particularly bookkeeping costs. Accuracy should be enhanced using the consensus principle, but how are we going to ensure node and integrity diligence in accounting? What consensus system incentives will we use? There's no rules on this. There are many, many systems currently in operation. Okay, but the system should certainly be secure. And perhaps there is a potential for disintermediation here in terms of the volume of bookkeeping staff needed. But I think bookkeepers, and I note there are some in the audience today, can breathe easily because also I think new roles will be created for bookkeepers. We'll touch on that in just a second. Okay, smart contracts. Well, Chris alluded to the fact that digital development was really a myriad of different projects and innovations currently taking place, and they tend to overlap and join together. Blockchain is certainly an example of this. It's possible to use smart contracts within blockchain applications. You can write an additional program into the protocol that enables certain transactions to be executed automatically without any human intervention. It's a long-winded way of saying automation. Examples include, and these are being trialed, invoice payments, hedging transactions, derivative transactions, buying and selling and execution of such contracts, and some management accounting applications as well, particularly in the area of stock reordering and purchasing. So what advantages and disadvantages can we see here from our master list? Well, the immutable permanence feature is an advantage in terms of establishing a clear audit trail. Similarly, we can note a reduction in transaction costs. There's a clear labor saving generated from smart contract deployment. The labor is kind of upfront. It's all in the design of the protocol and the smart contract, but thereafter the labor requirement shrinks. Analogies can be drawn with the transformation that's taken place in trading. Lots of trading is now algorithmic. We don't really get much open outcry anymore. But the algorithms have to be designed up front, and that is very labor intensive. But once it's done, a labor saving accrues because the labor requirement for the trades is quite small in comparison. Okay, but back to smart contracts. Yes, accuracy can be enhanced because human judgment is now removed. Okay, third potential application, environmental accounting. There are numerous examples I could actually cite here, but I'm going to focus on supply chain audits. Many UK-based folk may remember the horse meat scandal of 7 or 8 years ago, where the provenance of food ingredients was called into question. A blockchain-based supply chain has the potential to remove the possibility of such scandals by accurately recording and date stamping supply chain transactions and movements. So, could this really offer any great advantage? I mean, after all, supply chains are already audited, are they? What advantages could accrue if we audit a supply chain via a blockchain-based system? Well, again, the permanence, immutability aspect is useful, as well as a clear audit trail. It acts as a disincentive to bad actors in the supply chain, because transactions, ingredients in food, for example, are indelibly placed upon the blockchain, acting as a disincentive for fraudulent activity, food fraud, for example. Yes, we can see a reduction in transaction costs through automated auditing of supply chains rather than manual auditing. In terms of accuracy, yeah, we can also perhaps see that the removal of human judgment once again is an advantage. Okay, so on to really, I think, the area where the most significant developments have taken place. The potential role of the auditor, both external and internal. Again, Chris alluded to this, does look set to change. Right, the consensus principle on a blockchain-based transaction system, accounting system, effectively provides a pre-audit. So long as we've got trust in these nodes that approve the transactions, that's key to it. So that incentive scheme, how we encourage them to stay on the straight and narrow, is absolutely vital. But if that works, what you've effectively got is a pre-audit. Secondly, clear audit trails, indelible audit trails are established. One offshoot of this that has been well trialed in countries like Estonia, Israel, and Switzerland is establishing digital identity, either corporate identity or individual identity, using blockchain technology, verified by appropriate nodes. There are many, many potential applications then, I think, for accounting and audit. For example, this may speed up and improve the efficiency of anti-fraud checks. For example, compliance with money laundering regs. Put all those three factors together, and this paves the way for value-adding auditing. It sounds like I'm parroting Chris all the time, but I know he did make that point, but this specifically talks to it in the blockchain context. If we can put faith in the effective pre-audit of an organization's transactions because of faith in the blockchain system, this should free up time for both internal and external auditors to carry out more value-adding audit tasks. What does that mean then, really? Well, perhaps the audit profession is going to change if blockchain does take hold. Audit will still be necessary, but there will be more need for systems audits. The governance of these blockchain systems will have to be audited. Procedures, audit procedures will have to change to be more system focused. And I'm afraid the blockchain does throw up more potential frauds, different frauds, but they are still, I'm afraid, very apparent, as many people have noted if they've been following the press in this area. A particular fraud that is a major challenge, and auditors will need to come to terms with, is a potential for what is called a 51% attack. And that's when the majority of the nodes go rogue. Then the whole integrity of the system breaks down. So procedures will have to be set in place to detect that and hopefully prevent that. But we can see some clear examples, I think, here of advantages. Same rider about data protection, definite reduction in transaction costs, certain advantages in terms of accuracy with the pre-audit and the removal of human judgment. But it will create more challenges, particularly in terms of detecting and preventing new blockchain frauds. Okay, and the final one, I think we've got time for this. Yes, we have. Accounting education and CPD, an important part, of course, for all business professionals, including accountants. And this is my own particular area of interest, micro-credentials, which are often used to indicate CPD. It is possible, and this is being trialled at a number of universities such as MIT and also the university where I've actually undertaken a number of blockchain educational courses, REMIT, Royal Melbourne Institute of Technology in Australia. These institutions have pioneered the use of digital certificates, sometimes called non-fungible tokens, paperless certificates. And it's certainly happened to me. I don't know whether it's happened to anybody else in the audience. The pain of losing a paper certificate can be enormous. The cost to get a replacement can be staggering. I once lost my MBA certificate from Manchester Business School, and it cost me a colossal £150 for the replacement. It also took 6 weeks and about 15 phone calls to safely receive it. Okay. But when you think about it, this is rather illogical. That certificate belongs to me. I should have unfettered access to it at all times. So by storing it in a digital ledger, that can be achieved. I can have free of charge, unfettered access. Some HEIs, universities and professional bodies are going further, and this is being talked about rather than being done. Wouldn't it be nice if, as an alumni of a university, you had continuing access to course material? Wouldn't it be nice? I've given an example of an accounting there, but you could say the same about, say, an MBA. You do your MBA, you've had access to leading edge information, now accessible via a VLE. But of course, the minute you leave that university, it starts to go out of date. Wouldn't it be nice to have continued access to updated information from your provider? And the cost, the incremental cost to the university can be quite low, so long as you stay within your fixed cost step. It only becomes a problem if the number of alumni grow significantly, that there has to be a step increase in IT hardware. But I, for one, would certainly pay an annual fee to have access to material like that, and I think others would as well. So that's being looked at by a number of universities. And then finally, I'll leave you with this. This is the power to the people model. Some people say a university's administration function is just one large intermediary. It sits between the customers, the students, and the academics, the frontline workers, if you like. And there's a myriad of quality arrangements that have to be conducted and satisfactorily completed to comply with various regulations. What if they could be automated using a blockchain? This is reality. It's been trialed by the Wolf University. I don't think they've been particularly successful yet, but that's just what they're trying to do. It's an incredibly lean operation with much of the traditional academic quality functions being automated via blockchain. Okay, I will leave you with some closing thoughts there. but I think we're probably close to time. So I'm happy to take any questions.
Thank you very much for that, Ross. That's really, really interesting. I've got a couple of questions. One is, just how near do you think we are to blockchain being used on a regular basis by sort of big multinational companies?
That is just round the corner. But as I said at the beginning, it might not look too big. It might just be in specific areas because of this. This is the main problem. It's this solution looking for a problem scenario that goes around all the time. And I've not seen any data on it, but I suspect most blockchain ideas fail for that reason. But the simple answer to your question is yes, I do know the top 4 are very, very, very close to unveiling systems. The insurance industry is very, very close to unveiling systems, and so are pharmaceuticals.
And I've got a bit confused, but I've had quite a lot of conversations about this. But one of the things people are saying that the problem with blockchain is you can't change the figures once you've put them in.
Yeah, well, yeah, you can get around that. We're into technical stuff here, which might well send people to sleep. It's the type of thing people like me like. Yes, that's true. The actual blockchain is set up to be a permanent, indelible record. Yes. Hence the problems with things like data protection, and in accounting, the problem with journals, and corrections. You can get around this problem by shunting certain information into what is called a side chain, where only for example, the data user can have access to.
Okay. And also the other area I'm a little bit confused about is the nodes and the participants.
Yeah.
And how that works. I mean, would the accountants be nodes in this sense if they're putting in information? And then if there's just one person putting it in, how do you get 51% of? No, is it all the other people, the people who've done business with have to be a node?
Yeah, this is again, this does confuse people. There's 2 types of node. Basically, it's a distributed ledger, and everybody, there's no rules on this, but the, if you like, creators, managers of the blockchain, let's say it's a private blockchain we're creating, we decide who should have access to it. It could be accountants, it could be anybody. If it's just a distributed double entry, in this case triple entry ledger system, we just decide who's got access to it. It could extend to further stakeholders, but they become nodes. But they're not responsible for approving the transactions. They may make the transactions, but a select group of those nodes are promoted, if you like, to the role of super node, a trustee, and they are the ones who approve the blocks of transactions.
Right.
So you would have a subset of nodes of highly clever, trustworthy people, if you like, to actually do the verification approval process.
And I've just got one question here is, do you consider blockchain to be a triple entry booking that will replace double entry booking?
No. It just adds another layer to it. But in doing that, it could also save time. No. There's no indication, I think, that that's going to happen. Double entry can be operated on a blockchain system, which will create disruption in the field. But bookkeepers might find themselves primary targets to be the super nodes, the extra layer to approve the transactions. So I don't think it's all gloom in terms of job disruption, but no, there's no I'm aware of any immediate threat to the double entry system.
Oh, that's brilliant. Thank you so much, Ross. Your time is up. You've done us a great service there. That's really, really interesting. It's something blockchain is often overlooked by lots of people. Everyone wants to talk about Bitcoin, don't they? Thank you, Ross. Right, next up, we're moving on to sustainability and it's rise and rise. But how is it going to work for accountants? And we've got someone who's going to tell us how it's going to actually be incorporated into the curriculum, hopefully. So that's Ian Thompson, who you are, let's have a look, you're the director of Lloyd's Banking Group for Responsible Business at the University of Birmingham, Ian. I understand you're a CIMA qualified accountant as well?
I am indeed.
We obviously wouldn't hold that against you. So Ian, the floor is yours. We'd love to hear what you've got to say. Thank you.
Okay, just a second while I am my screen up. Okay. Okay, thanks everyone. So what I want to talk about today is it's very much one of the most urgent issues that the kind of think accountancy and the world is actually kind of like facing right now, and it's about how we can deal with climate change, and what's actually sort of going on. Now, what I'm going to do is I'm going to run through some of the reasons why we need to do, why we should do this, some of the possibilities, detail some kind of a survey which we undertaken in relation to this, and talk about the practical ways in which we have kind of already implemented this into our curriculum at the University of kind of Birmingham. And I think if we maybe can like start with a few. People may find this controversial or not, but basically right now, accounting, the way it's taught, the way it's undertaken, is actually inadvertently fueling the climate crisis. In fact, I would argue more that the way in which most people do their accounting incentivizes climate change. There's an urgent need to decarbonize what I call the hidden climate curriculum in accounting. And to be honest, doing nothing is no longer an option. This is something which I've been kind of studying and working on for about 32 years now. And the crisis is just getting worse. So there's a need for urgent action. It's important to recognize that kind of climate change and very much kind of environmental issues were often seen as a side issue with accounting, like a marginalized kind of like part of accounting. Whereas actually when we sort of like look at the impact of these transactions, it's not a kind of like a subset of all the transactions that we do our accounting for. It's every transaction we do has an impact on past, present, and future greenhouse gas emissions. All of the decisions, all of the actions which are taken by institutions, sort of governments, businesses, and communities and individuals impact on the greenhouse gas in our atmosphere. It's ubiquitous. It's kind of like a core part of what we do. And sorry for kind of like almost putting a swear in here. I get really frustrated talking to kind of like to people, and they sort of go, yeah, but this is just abstract. It's not. It's already an even reporting requirement for UK large businesses. And for many businesses, it's almost 10 years since it's been a kind of like a reporting requirement. This isn't an optional luxury. This is it. And it's not just corporations, it's large businesses as well that have to do it. And what I've kind of like found is a number of kind of like people who don't even teach what is a mandatory reporting requirement that's included in the financial reports as part of their accounting and financial reporting kind of practices. Climate change right now already is affecting costs, future liabilities, ability to pay debts, dividends, market value, goodwill, pricing, tax, supply chain issues, going concern, insurance premium, future sales, business value chains, capital investments. It's already part of all these things that determine these values. The question is how many people are actually kind of like teaching this kind of like these impact and how to deal with these things, these notions of stranded assets, stranded liabilities, which are actually kind of like challenging the ability of businesses to carry on as going concern. It's actually now being considered part of the going concern test in certain institutions. When banks are kind of like being stress tested, they're stress tested against their ability of their asset base to handle the kind of like the risks associated with climate change. This is just like an example. I could have had this 20 slides here of organizations that are already actively involved in sort of climate accounting, from banks to stock exchanges to charities to institutions to professional institutes, all the way kind of like through to kind of large energy companies to governments to climate change, are already undertaking it. It's part of practice. My question to fellow academics is, are we happy to be lagging behind practice, where practice is leading rather than educating, rather than the educators and the research? One of the things that we've discovered in our research is that applying and using inappropriate greenhouse gas accounting techniques leads to the selection of options that decision makers mistakenly believe will reduce greenhouse gas emissions when they're actually going to increase them. And what we're finding is that because of kind of a lack of knowledge, because of a lack of awareness of the weaknesses of different greenhouse gas accounting or climate change accounting, people are actually trusting flawed information to make wrong decisions, even though their intentions are justified. So just a little bit, imagine if everything came with a greenhouse gas price tag as well as a financial price tag. Imagine if every decision maker was carbon sensitive and carbon literate, if every decision took full account of the greenhouse gas consequences, and every accountant could calculate the climate impact of every decision. What would be the potential benefit? And if we take Ross's point, the value added that we could give if we were able to do that. Because really, when we're looking at things right now, we look at all of these things. Everything needs this greenhouse gas tag as well as the price tag. Every decision has to start taking account of the consequences. And every decision maker has to become more carbon sensitive and carbon literate. And I would argue that every accountant should be able to calculate the climate impact, or we're in breach of our ethical duties. Right now, nothing has a definitive price to greenhouse gas. Very few decisions take account of the greenhouse gas consequences. Hardly any decision makers are carbon literate. Very few accountants are to do it. And we have a growing global existential crisis in relation to climate change. And it's possible to do this. Actually, when we look at kind of climate change and carbon accounting, it's one of the easiest part of sustainability to incorporate. It's really quite straightforward. It uses very much the same logic and the same language as accounting. The science is linked to the accounting. Now, kind of one of the questions that I'll kind of like ask as people pose this question is that when your students graduate, what carbon accounting competencies or capacity do they have on graduation? When people qualify from professional accountancy bodies, what carbon consequences do they do to meet this demand that is actually being placed on them in relation to what they actually do? And I mean, this is very much something a personal kind of like discovery is just recognizing that, yes, we are not preparing our students for the actual types of decisions that they're going to be required to undertake. And that's why we need to do things. Now, one of as part of kind of COP26 run-up, we were kind of like commissioned to undertake a kind of a survey, a global survey of kind of climate change in accounting education. And we kind of like, we undertook this study in conjunction with Royal Society of Edinburgh, Centre for Social and Environmental Accounting Research, St Andrews University, Birmingham University, the Centre for Responsible Business and Finance, where we're actually trying to see what was actually happening, the possibilities. And actually looking at this kind of climate change accounting as part of an overall kind of like thrust across the globe to mainstream climate change education into higher education institutions, as seen as one of the most urgent pressing needs to actually do this. So it's not just focusing on accounting, it's talking about engineering, chemistry, physics, philosophy, kind of education itself, sociology, all these different things, this kind of stuff here. And largely recognizing the massive growing demand for this type of kind of competencies, as well as a kind of like a rise in carbon literacy training in workplaces, often outside formal curriculum. And to be honest, a lot of it is really poor quality training, which is actually is quite kind of like worrying in that, and often it's not backed by solid kind of research. There are some wonderful examples of carbon literacy training kind of out there as well. So it's a patchy field in that bit there. And what we found was that we did actually discover there was a surprisingly kind of large number of institutions across the globe who were actually kind of undertaking some form of climate change accounting. But it was often embedded within optional courses. It wasn't part of the core curriculum. And it was very much kind of like what we kind of call a sort of like a piggybacking type of things, almost opportunistic, finding the odd space for a lecture, for a tutorial, for a guest speaker coming in, maybe on some like contemporary issues on accounting. We also discovered a range of kind of a growth in specialist kind of like programs, particularly MScs in climate change, climate accounting, and climate finance. Again, which was there. Relatively low numbers of going to that kind of project. Highly popular, quite expensive because they've got great graduate outputs in that space. And what we found very little of was what we call mainstreaming, where actually kind of like climate change is embedded as a normalized part of kind of accounting and finance. We often found it was driven by committed individuals who work with networks, who were actually kind of driving things forward, often in opposition to institutional initiatives, and maybe doing it undercover, if you like. Very much a focus on technical and scientific literacy. But interestingly, professional accreditation was never seen as a barrier or a driver in this. But actually, one of the things that people don't recognize, often kind of recognize, is that accreditation supports the integration of climate change. There is not an accountancy body around that isn't actually making positive moves in this space, and they actually work. So rather than it being seen as this is anti-accreditation, actually no, it's kind of part of the contemporary accreditation process. However, that message hasn't necessarily got through into the kind of the educators. So right now, it's a potential driver of climate change education, but it's not necessarily recognized as this. So again, sorry, I'm rushing through lots of different things. I want to talk about what we call our CANS project at Birmingham Business School. And just a little bit about this, where we believe this to be the first program to integrate climate change throughout our accounting program. Every module, every core module in our accounting and finance program actually kind of like integrates carbon accounting appropriately into that program. So when we talk about assurance and kind of valuing of kind of like assets, that we've got material there. We look at management accounting, we have management accounting in terms of costing and pricing. In terms of finance, we look at sustainable finance. We look at kind of like critical evaluations of it. We look at critical evaluations of these different things. So what we've did is, and I'll just quickly run through how we actually did this. We started off, as any good accountant should do, with an audit of the carbon accounting teaching within our program. So we went through all the programs, talked to all lecturers and said, do you kind of cover this? And we actually did discover that it was actually taught in a contemporary issues class. It was taught in kind of a critical kind of studies class, and it was also part of social and environmental accounting. That was me, by the way, so I was kind of teaching it. But what we found was, whilst it was already taught in the program, there's no sense of progression. There was often overlapping kind of topic. The same topic was taught in different modules, and there was many topics that were kind of like omitted. We often discovered when we were talking to all of the lecturers that there was massive potential for inclusion in the different modules. However, as it stood, it was highly dependent on module leaders. The person who was actually teaching it had control over it. So what we did to resolve this was collectively within the department, we sat down and we drew up what we called a vertically integrated program, where we looked at all of the different modules, we looked at all of the different attributes that we actually wanted, and we constructed this logical kind of like program with different outcomes that actually kind of like tried to kind of identify it and then match that to the different modules, so that this vertically integrated program was delivered through modules undertaking it there. So we kind of like, we did the classic stuff. We said, well, so this program will provide the necessary skills in relation to climate change concern, carbon accounting, net zero carbon, carbon markets, carbon risks, and carbon tax. And what we then did was we then noted that this would actually kind of like equip students for their future careers and their ability to connect scientific knowledge with accounting concepts and tools, and then also to be able to critically evaluate different approaches and engage meaningfully in the development and debate of the kind of like practice. We kind of like articulated the benefits of this. We will equip students with the knowledge to develop systems, to quantify emissions in organizational settings, as well as kind of like working its way through. And you can see the little diagram on the side, which kind of like printed, where we actually made the links with the different modules that we actually kind of like had. Different colors, some are core, some are kind of optional. So we're able to actually to create this tool, which actually takes our normal educational standards and then apply them to carbon accounting and then link them in with the different program. We also identified progression. I'm more than happy to share. I appreciate I'm going through a lot of material here, but I'm more than happy to kind of share them. But these kind of the concept of ensuring progression throughout the kind of the program, where we actually kind of agreed this amongst ourselves as part of the program. And we can then sort of look at the first year requirement, second year requirement. First year is familiarization and getting concepts. Second year is really about kind of like tying it to specific applications. And the third year is very much about critical engagement and kind of like critical kind of like discussion. We also then established kind of key objectives, what we were actually kind of like trying to do. And again, we can see the if you like demonstrated here, you can see this is very much a kind of conventional approach. But what we found was by articulating it, by using the kind of the standard language we have to design courses, we're actually able to do this because this gave people a framework within which to do it. Something which is often carbon accounting was seen as maybe scary, as awkward, as difficult to do. So just very quickly, anyone interested in doing this, come and talk to us. We can share all this stuff. Big development was creating clear learning outcomes in a vertically integrated program where we actually dealt with the problems of duplication and ensuring progression, which actually was really important for doing it. We created a carbon accounting expert group, which was not necessarily filled with experts, but was a group of people who had a shared interest in discovering things to support colleagues and actually to build a little community of practice. We developed carbon accounting teaching material and case studies, which are available to all members of department, and members of this expert group kind of worked as internal consultants to help people develop material. We had topic-specific workshops where we coordinated. We just talked to each other. We talked to our colleagues and created an ongoing support program in there. And the kind of like the link there is I created a series of like 8 mini lectures, which actually kind of like anyone can use to understand the topic and also use it in their teaching. And so we have, and I'll just really finish here, but we've got kind of lots of resources. We've got international survey, we have a book, we have kind of like essays addressing climate change, we have our kind of program, we have online lectures and discussion points, policy stuff, and we have a number of reports that we're actually kind of like more than happy to share and talk to people, either directly through kind of like Birmingham, or perhaps through this Centre for Social, Environmental and Accounting Research, who's actually taken a lead on this area here. So basically, we need to do it, we can do it, you need to do it, and I can help you do it. Thank you.
Wow, thank you, Ian. That was fantastic. Not what I was expecting, and quite scary to start with. So thanks for that. But I can see how you've really used what we need to do and made something really practical with it. One of the questions I've got quickly before we have to move on, because we're just getting a little bit behind time, but I didn't want to stop you, to be honest. You could talk for more, is about greenhouse gas and the price tags. As Jessie J would say, it's all about the price tags. Now you think, I mean, accountants have always been worried about they can't actually put a price on certain things, but you think we can put prices on things, yeah?
We can put a carbon price on things.
Yeah.
that's actually relatively, it's not simple, but it's relatively straightforward. There's a massive global effort to basically, particularly to look at the embedded carbon in any product. In the same way that we do costing, we can actually put a carbon, like in kilos, embedded carbon on products that can actually form part of the ledger system. And there's a number of kind of like companies and institutions that are already doing that. Quite alongside something like, you know, like the most lorries now that work in the EU that have a black box, you know, that they can produce a kind of like a really accurate carbon account of their journey at a press of a button that can go alongside the delivery invoice.
Yeah.
How much it costs, and here's how much carbon we've used. That actually is related to the energy management system, how far they've driven, how kind of like much they've kind of like put on their foot on the pedal, how many kind of bad braking, how many kind of like stops and stuff like that.
I think there's also a bit of confusion, you know, particularly for me, so about how, because I'm, you know, a novice in this, is how it all works. Because how can someone who, you know, sort of like Virgin fly airplanes all around the world and then say we are set to be carbon neutral? I don't understand, but other than offsetting, I mean, that's just a fallacy, isn't it?
One, if we had more time, and I suspect that David, because he's the net zero, will kind of come into this, is that they're not net zero. If you like, that there's about 4 different categories of greenhouse gases. There's like embedded carbon, there's purchased carbon and energy, there's direct emissions, and then there's the emissions as a consequence of the product and service. Most people who talk net zero are ignoring their whole value chain, ignoring all their past assets, ignoring all the kind of things like employee commuting, business travel, all that sort of thing, any consequence of what's actually going on, and only looking at a tiny proportion. And we've done some studies possibly about they're zeroing about somewhere between 5 and 10% of their carbon emissions. Yeah. They're not net zero, they're a wee bit net zero, and that they're often there. And it varies by sector. If you've got something like Apple, they would, if they're zeroing the same emissions that Virgin are talking about, they'd be zeroing 1% of their emissions. So.
Yeah, no, thank you for that, Ian. That was really, really fantastic. Thanks for your time. We're going to say goodbye and say hello to David, if that's all right. David, are you there? Hi.
I'm here. Yeah, no, hi. And yes, I will touch on some of the things that Ian mentioned, which is great. So yeah, thanks for having me.
Okay, well, without further ado, David from Net Zero Now, who we've been working with. Hello, and the floor is yours.
No, thank you. So I will start by sharing my screen. So just give me a second. Let's have a look. Okay, is that all coming through for people? Cool. Okay, so yeah, so hi, I'm David. So I work with Net Zero Now, and I've been here for almost a year, and I head up our professional services sector and our professional services net zero initiatives. And our main aim really is to help organizations of all shapes and sizes to go net zero. And something that, you know, was touched on at the end of Ian's segment right there was, well, going net zero in the right way and making sure that organizations are including all of the correct things in their scopes 1, 2, and 3 greenhouse reporting. And we can talk about that a little bit later on. One of the other things that we try and do as well, and adding on again to what Ian mentioned, is really to work with all organizations and in particular with accountants, hence why I'm here, and help them to become comfortably more carbon literate, because we see that being increasingly important in the future. So over the next sort of 15-20 minutes, you know, I'm going to be covering really what we really mean when we talk about sustainability in business, why that matters now more than ever, and we've obviously heard a little bit more about that just now, how we've worked with the accountancy sector to define what net zero means and why that's important for accountants. So to start off with, really, so what do we actually mean by sustainability in business? You know, this is a term that's thrown around all over the place at the moment. So what do we really mean by that? So, you traditionally most people really still think sustainability is really a business that survives and is financially stable. Obviously, I think we all appreciate that that's extremely important, but over the last few decades, it's been realized that this is a really quite simplistic view. And it's really kind of become obvious that this isn't quite enough. Businesses need to have a more explicit consideration of delivering social value, as well as shareholder value and financial success. It is about businesses taking more responsibility for the things that it influences and impacts beyond its financial return. In simple terms, this is what we mean when we talk about sustainability in business: a consideration and active management of not only financial, but also social and environmental impact and potential to business. When you hear the phrase triple bottom line accounting, this is what those three ledgers are. So you've got the people ledger, you've got the planet ledger, and a financial ledger. And once we get into the detail of how to actually do that, it quickly becomes really, really complicated. And so a universal integrated accounting system for all of these things has so far eluded us. And one kind of really clever system we haven't quite reached that yet. We currently have a variety of ways in which businesses report on all of these. And obviously we all hope that, someday these will converge and align in the near future. So there's no denying that this approach represents a significant diversion from business as usual for most organizations. And much of the last 20 years has been focused on making the case for why sustainability matters for business. Now, from a business success perspective, this is about remaining relevant and responding to key stakeholders, customers, employees, investors, and in the future, well, currently some regulators, depending on the size of your business, but ever more so in the future. Let's move forward. I know we've all seen the stats, and maybe there is a disconnect between intention and action, but survey after survey shows that an increasing majority of consumers would change their purchasing habit decisions to reduce their impact on the environment. And it's not just consumers. Business-to-business customers are, if anything, ahead of the curve on this, requiring suppliers to demonstrate their sustainability credentials with environmental policies, science-based targets, and social commitments. In the last 2 years, the government produced a new PPN that requires any businesses bidding for public sector contracts over 5 million to provide a carbon reduction plan. So whether your customers are consumers or businesses, an increasing number of them are interested in whether you as a business are making a positive contribution to people and the planet. And it's not just customers. In the current labour market, it's perhaps even more important for business continuity and cost management to maintain an engaged workforce. And the research shows that employees want to work for businesses that share their values, whatever those may be. Recruitment and retention will be easier for businesses that are able to credibly articulate a sustainability plan. If there is one stakeholder group that has led the way on this in the last few years, it is definitely the investor community. This is seen both in terms of access to capital, where screening and ESG requirements have made securing funds easier for sustainable businesses, but also in terms of valuation at exit, where a credible sustainability strategy can attract a 10% premium. And this is actually something that we're seeing a lot with the customers and businesses that we're working with. And finally, there are regulators. Much of what we are talking about here is voluntary action by businesses. But even under 10 years of conservative rule, regulations on many aspects of sustainability are tightening. The CCC report in the last couple of months has outlined how the policies currently in place are insufficient to deliver on climate change goals. And so we fully expect further regulation to be brought forward in the near future. So that was a high-level sort of view of what we mean by sustainability and why it matters and how to go about building a plan. So for many people over the last few years, it's been all about climate change. So we're going to spend 5 minutes looking in more detail at how businesses can take action on climate change. So the good news, because there's lots of bad news at the moment, is that after many years of indifference, businesses are increasingly alive to this challenge. They increasingly recognize that having a credible climate strategy is no longer something they can kick down the road. Whether it's their staff, their customers, their investors, their kids, parents, partners, it feels like everybody is wanting to do something. And there's an awareness of the risk that doing nothing is going to start to hurt. Maybe not today, but very, very soon. This appetite for action is partly driven by the idea of net zero, which for the first time has given businesses a clear goal. However, despite the good news, lots of research shows that while there seems to be lots going on, there remain some key barriers to participation. What we hear whenever we talk to businesses that we work with, that the guidance is too generic and it's not specifically about their business. When we look at the way the businesses are reacting, they're all doing it differently, making different claims, using different language, and it's really confusing. And that's something that Ian was sort of talking about before too. We've also seen what happens when businesses, even with the best of intentions, get it wrong. And we don't want that to be us or any of the customers that we work with. And even for businesses that have taken the next step and really looked at that guidance, what they say is that there's still so much they have to do and go and find and work out on their own. And because of all that, expensive consultants have found this fertile ground, which is fine. You know, my Net Zero Now owes a lot to the consultancy sector, but it's also galling to pay for a solution and then see a business just like yours pay another consultancy just as much for essentially the same service. There is a growing sense that climate action needs to be much more collaborative, and one that's undertaken to deliver competitive advantage. Right. So, you know, Net Zero Now really was created to address all of these, you know, these barriers and make it really much more simple for not just SMEs, but all businesses in certain sectors to go net zero. So instead of generic, generic solutions, we actually spend a lot of time focusing on things that are relevant on a sector by sector basis, so that we're making sure that net zero is translated into the language of the businesses that we work with. Instead of businesses plowing their own furrow, we aim to provide a consistent industry endorsed methodology and approach. We remove the risk because we've done the climate science bit, so everything is credible and built on global best practice and above all claims of greenwashing. So this is incorporating methodologies such as the Greenhouse Gas Protocol, SBTi, and so on. We strip it back, remove what's superfluous, and provide standardized methodologies to make the system accessible and practical. And then by creating a shared collaborative approach and using intuitive software, we can share costs and create value. So that's what we really set out to do. And the way that we do this, as I mentioned before, is on a sector-based partnership approach. And we do this in a number of ways. So in the accountancy sector, which I'm going to talk more about now, you know, we actually developed the Net Zero Accountancy Protocol, and we did this with a number of development partners. So this was with AAT, Sage was one of our corporate sponsors, ICAEW, ACCA, and the Good Business Charter. And we're actually now have been approached and working with others in this community. And so the protocol really there is a foundational, kind of piece of work that takes into account all of this all the global guidance that's out there, but makes it easy to digest and translates it for businesses. And, you know, if everyone who's listening is obviously fully aware of the climate crisis, net zero, and we've heard things like carbon neutrality. But just if anyone's really thinking, what do we mean by net zero? You know, as an organization, you have a carbon footprint, and everything that you purchase and every activity that you undertake has an amount of carbon associated with it. So when you know your total carbon footprint and taking everything into account, that is your sort of climate impact. If you were to try and offset that using mechanisms, then you offset your full carbon footprint, then you would become carbon neutral. And we hear a lot about that. But net zero is really that step beyond, and it's about making progressive change and reducing your environmental impact. And once you've reduced, and hopefully as much as you can in line with the Science Based Targets Initiative, if you then offset, that is when you are a net zero business. So it's not about sort of just standing still and operating as usual. It's about becoming a more efficient business in a way. And we'll talk about that in a minute. So when we go about working in any sector, so we always develop a bespoke and unique sector net zero protocol. And we do this over around, it normally takes about 6 months to develop these. So it goes from undertaking, research with our development partners and looking at actually what the specific challenges for that sector are and what key things do we need to take into account in order to have a credible carbon footprint at the end of it. We draft the protocols, and then we always test them with a pilot base. So we were quite lucky to test with a nice kind of wide group of accountancy firms. In this case, we measured all of their carbon footprints in line with the protocol, and fortunately, all of them, even to this day, are enacting upon their net zero strategies that came from this process. We make it widely available during a sort of consultation process, so everybody can have input and make sure that we are, truly representing what net zero means for an accountancy business. And then we publish it, and it's free for anybody to download from our website, and it's also hopefully soon enough going to be live on websites, from ICAEW and the other industry bodies in this area. So what do we actually put inside these protocols? Now, I've touched on some of this already, but the protocol itself really lays out a pathway to net zero, and we try and make sure that it covers everything that a business needs to do. So, going from calculating your carbon footprint in line with the greenhouse gas protocol, but also what needs to be included in that. And as Ian mentioned, this really does vary quite a lot. Some people focusing mainly on the gas and electricity usage and perhaps some business travel, and then choosing to ignore everything else. So we make it really clear in these protocols that to have a credible net zero, and carbon footprint, a range of things need to be included and calculated. Once we have the carbon footprints, we set targets and we give advice on how businesses can actually, meet those targets. And, alongside the protocol, we also develop reduction guides, which are free as well to download from our website. And they give lots of actual practical advice on what businesses can do to reach their targets. Now, offsets has become a huge topic and actually sometimes leads to a lot of controversy. Now, we believe that actually offsets are not only one of the only mechanisms we have to try and, minimize the impact of, how businesses are operating, but done in the right way, they can be quite powerful tools. So in the protocol, we outline that actually offset should be purchased and to a quality that's in line with, there's a set of principles called the Oxford University Principles. Again, it's very easy to sort of go and find, and it talks about the level of, offsets that businesses should be purchasing. And then because we have a standard, we actually do offer a net zero certification. And I think this is really where the sort of commercial side and the commercial benefits for businesses really come in, because if you're going to go and do all of this hard work and, go through the effort of measuring your footprint and putting in plans to reduce, then, you want to go out and shout about it, and you want to go and do that in the correct way. And that's really what the protocol is there to do. It's about how do you do everything and do it in a way that, where no one is hopefully going to accuse you of greenwashing. And if they do, then that you can defend what you've done. And so, coming back to why is this really important for accountants? And I am a little bit conscious of time, so I'll try and go through these slides a bit more quickly. But, really accountants do sit at the heart of everything. You are there in a trusted position, and businesses of all organizations and businesses do look to their accountants and trust them to advise on the best way in which they can operate. And so you're, by being in this position of trust, you're in a really good, position to actually influence the decisions of others. So by going through a process or a net zero process yourselves and really becoming more understanding of how this works, it's only going to help you provide an additional service and provide additional value to all of those in your sphere of influence, which is going to be increasingly important over the next sort of decade or longer term, more, the next few decades. And not only that, the accountancy sector it is responsible for a proportion of our current emissions. We estimate that to be around 1% of total business emissions in the UK, or around a city of 80,000 people. So it's not a small amount. It's nothing compared to perhaps the oil and gas industries or some of these large tech giants, but it is considerable, and everybody will need to do their part if we want to reach our UK targets. So in terms of what we actually believe, are important for accountancies to include in their carbon footprint. So we, mentioned things like, direct emissions from things like fuels managed and burnt on site. So like your gas, mains gas, any, fuel burnt by owned vehicles in the company and so on. You've also got your electricity, which is fairly standard, and that's your scope 2. So and this is fuels that are burnt off-site, but you're consuming the energy generated from that activity. But then really the main source of emissions for the majority of companies that we find is their scope 3. And what we're currently seeing with the businesses that we work with is that this can account for anywhere from 80 to 100% of a business's total emissions fall within scope 3. So it's really actually quite harmful if businesses aren't reporting on scope 3 effectively. And this is looking at all of their purchased goods and services in a given 12-month period, their waste, energy used from home working, leased offices, and then things like employee commuting and business travel. And, actually with the data that's available nowadays, it's becoming actually increasingly easier to calculate the impact that these have and assign it a carbon figure. And that's really where we specialize to try and make this an easy process for customers and for accountants. And so I think just to kind of round it off, I just wanted to sort of show you, the kind of what a carbon footprint really looks like. So, this is just an example of some of the companies that we've worked with, and then compared to some of the biggest companies in the industry. So we kind of touched on what scope 1 and 2 and 3 are. And as you can see, and like I said, scope 3 tends to be the largest proportion of a company's footprint. But what we have found is that a typical accountancy firm, more in the SME range rather than sort of your big, your big sort of 4, the emissions for them will approximately be about between 1.5 to about 4 tons per employee on average is what we find. So in this instance, where the biggest sort of, where the biggest emissions come from are things like your procurement. But in both cases, travel are enormous, and it really depends on where you're located. We do find that there's a big difference in sort of, employee commuting emissions if a business is based in a city versus a more rural outfit. So it will vary slightly, but there is a general trend that we see in terms of the split between procurement activities, operations, and then business travel. But then when you compare that to businesses like Ernst & Young and KPMG, you can see that actually the total per employee and total overalls is enormous. KPMG have quite a good reporting methodology, and this is nearing 9.5 tons per employee. And Ernst & Young is a good example to kind of reiterate on what Ian said. They're currently, for the 2020 period, reporting about 3.32 tons per employee, but they were missing a huge chunk of their scope 3. So of course, we're going to see that change as it becomes kind of more imperative for them to accurately report on their emissions. And so, we, like I said, we do try and make this really easy. We have an online platform to help companies do this, but there are lots of companies out there working with businesses to make this as straightforward as possible and really get them on the right track, understanding how they can calculate their emissions, setting them reductions plans in line with SBTi, and really guiding them on this general process. And what we're seeing is that there's, the demand for this is increasing rapidly. And I think the biggest thing is, and we've touched on this a few times, it's really about, actually equipping businesses to do more and be better, and making sure that actually they're not left behind in the future. So I think with that, I will stop that there because I know I'm running out of time and hand it back.
Thank you for that, David. Have we got any questions, Neil, or can I ask one? Is that okay?
Go for it, Graham. You're fine.
Yeah, I'm still not sure, David, 100% if 1% of business emissions by the accountancy profession is good or bad. I can't quite work that out yet. I'll have to get my head around it. I mean,
deliberately ambiguous.
Yeah.
Yeah.
Is there a? I know you're working with the ICAWAAT and the ACCA, which is fantastic. We need to get the other bodies involved because they do. Everyone needs to be. It needs to be really joined up. But do you have a figure of how many sort of, say, accounting practices? How have you got a figure of how many you want to get to net zero, or do you think it just everyone has to, or do you have a project of sort of this is we want 20% of practices that we deal with? How are you playing planning to sort of measure how well you're doing in accountancy?
Yeah, it's a really good question. I mean, and also there's a big difference between, kind of the really small practices, which, they have a lot of challenges to face on a day-to-day basis, versus moving up to sort of your super large practices. So, I mean, for us at the moment, we don't have a particular figure in mind. We obviously want to see as many practices go net zero as possible in the next sort of five to 10 years. Our big aim is to get as many as possible on the sort of pathway to before 2030. But one of the big initiatives that we're kind of undertaking with ICAEW in particular, they've just launched a Climate Champions program. So anybody going through and using the protocol and calculating and going net zero is automatically recognised as a climate champion in that sense. And we have similar initiatives that we're talking to with other bodies. I don't know off the top of my head how many we currently work with. We actually only launched the accountancy initiative back in May, so it hasn't been going for too long. But so far, I think it's 50 plus that we're currently working with. It's building quickly, and we'd love to see, at least 100 to 200 by the end of next year, and hopefully more. So I think it's going to become increasingly important, and it's going to become imperative to start doing something like this as soon as you can.
Yeah, and you can read David's thoughts every month in PU magazine at the moment, can't you, David?
Yeah, lucky people.
Don't be embarrassed. Don't be embarrassed.
Yeah,
it's a great magazine.
It's a great magazine, and thank you for having me on there.
Yeah. Now, well, we think it's quite important as well, especially if you listen to what Ian had to say. It was, sort of, we'll be picking up on that next month in the issue, and we're picking out a lot of the themes that have been happening. So thank you very much, David. I think we have to move on, don't we? Is there any? I did see one come through, but we might have to.
Just a comment from Usha saying, brilliant presentation, David. A lot to digest and get my head around. So thank you for that. Just to let you all know, the session will be recorded, so you can dip back into it, which should help you get your head around it, and we'll make that available. Tomorrow, I'll try and summarize all of the links that were shared in the chat box as well. So handing over to our final roundtable discussion, which is going to be wonderfully chaired by Graham, as always.
We hope so.
Absolutely will. So I'd like to invite our panelists to join us on the screen. There's Usha, and there's Kate. So Graham, I'm going to hand over to you.
Anna, that's brilliant. Hi, everyone. There's just the three of us today, which is lovely. David, I like to see your background. It is quite cold, but where we are, you must be in a different country.
I am.
Great background. Are you really? Right, so
Forest Hill.
Yes, exactly. Right, everyone. So let me quickly introduce everyone. We have Anna Haitvellen, who's head of product. Got that title right this time, Anna. For Eintech, we are a top edtech company. We've got Usha, who helped me run this today and put everything together, and she's a senior lecturer at LSBU. And we've got David, who I was reading your bio just the other day, and you've got written 4 books, co-authored 2, ex-president of the AAT, but you have a day job as well at Marcus Bishop Associates Limited. So if anyone needs a will done, if you were thinking about dying, and obviously after what Ian was saying about how bad we are at carbon and everything else, then David's your man. So we have someone in practice, someone in education, and someone actually in the private sector who's doing some really great stuff with the accountancy bodies. So I hope some of you have been watching today. I mean, it's been really interesting about how innovation, one of my questions, and we'll go to it, was actually, I might as well come to it first because it's what I'm talking about. Is the first 2 speakers were Richard Murphy and Lord Sikka, and they said accountancy has to, if it wants to innovate, has to be much more self-reflective, has to be thinking much more, and actually they talk much less about the figures than they did about all the tech. And the tech, and just thought about how people need to think about things differently. So on that note, I'm going to ask Usha, I'm going to ask you first. When people think about innovation, they often think about tech, but are there other things accountants can do to be ahead of the game?
Well, we had most of our speakers talking about integrated approach to innovation, and it would be great to have the accountants sort of have that collaborative, innovative sort of environment where you have the culture of innovation and everybody thinks about innovation, and accountants' role would be to actually provide data and track efforts of those innovation. And that includes what Ian was talking about in terms of net zero and actually providing information. So we're looking at short-term survivability of a business in comparison to long-term investment and achieving the 2030 targets of the UN. I think we can do a lot more, not just looking at technology or financial data, but also look at non-traditional data, which kind of looks at the supply chain. We talked about carbon print, we talked about logistical and operational data, and that can actually support innovation because it provides data that can add value to organization. So I think our role as accountants, we can help with product innovation, we can in terms of what products, whether we should use plastic or whether we should use paper. We can help with service innovation in terms of looking for efficient and affordable ways of doing things. We talked about process innovation and ways of doing the task. We talked about the business model innovation and how to target different customers, market innovation, how we can use these existing products to actually, rather than reinvent the wheel, we could actually use those products to market at a different sort of location or different customers. We can have social innovation. We talked about, you know, how net zero could actually be communicated in not only education, but also, you know, in terms of products and labeling. And don't forget risk. We are living through the biggest crisis of our lifetime. We talked about the health crisis and the pandemic. Currently, we've got the war crisis, the cost of living crisis, the climate crisis, the economic crisis. There's a lot of risk sort of challenges that we as an accountant need to keep you know, sort of abreast of and keep ourselves safe. So we need to stop thinking linearly about profit and loss, and from, you know, when we saw it happening to now actually kind of looking at the forecast of, you know, let's kind of like stop thinking linearly, and yes, we can see things coming and we're going to do something about it, and we're going to take action. And we also need to actually innovate our standards. We looked at, you know, various standards which are looking at more closely towards tangible assets than intangible assets. So we might need to think about, you know, all these blockchains and all these digital innovation, and how would we recognize that? Because at the moment, what's happening is we're recognizing tangible assets, and what we need to do is recognize the intangible assets that are increasing. Because at the moment, what's happening is you only recognize it if you purchase it. So the economic reality is not being reflected. So there's lots of exciting things, lots of drivers of change that can actually, you know, accountants can actually foster innovation in. So we need to think about the planet first. We talked about the 3 Ps. I would put the planet first, the people next, and then the profitability, the 3 Ps. So I really am passionate. I think we hold the key to make a world a better place as accountants. So in terms of innovation, I think there's no stopping for us. That's my answer, Graham.
Okay.
Hopefully I've said it within time.
You have. David, what do you think?
Well, I think the first. Can you hear me?
Yes, I can.
I think the first thing for accountants is, as I was saying since 2020, is our mindset. You need to get our mindset straight, okay? Because we accountants and accountancy training has been obsessed by accounting for the balance sheet. And I've been telling people we need to stop accounting for the balance sheet and start accounting for the business in the broadest possible sense, okay? And that's what the beauty of COVID was. It should have taught us at least one thing no one's concerned about yesterday, and no one's concerned about an audited set of accounts. We need to be aware of where we're going. Yeah, preparing for where we're going in all the broadest sense, and also as well the stakeholders. I mean, I was quite chuffed when I heard Lord Sikka speak this morning, because he mentioned something dear to my heart: philosophy. And I remember when I spoke to my head of department when I was in the university sector, and I said to her I wanted to do a master's in philosophy. She said not in my department, because she didn't quite get it. Yeah, but philosophy is a bedrock of understanding, reasoning, and communication. And we are in the business of communicating, although we communicate with metrics or numbers sometimes. But it's about how we communicate to the audience and move away from our traditional P&L balance sheet and all such wonderful things and move beyond that, because the new intake and tomorrow's leaders are going beyond that. The accountancy is changing, and we need to be understanding the importance of how we as accountants integrate and play a key role within organizations, holding it all together. And I mean, as Lord Sikka says, we've come no further forward with our depreciation and goodwill accounting. It's still poor. Yeah, it might, I mean, until we start to account properly for human resources, we've got a problem, because we don't account for labor, because labor is a cost to a business. However, it creates goodwill for companies and so forth. There's that dichotomy we need to be resolved as well too for ourselves. And that's one, when I was wearing my academia hat, I was always questioning and so forth. How do we account for labor? They say because it's not tanned, we can't account for it, but surely we can. So there's those issues we ourselves need to be happy with as well too. And also our standards, our accountancy standards, whilst they're really useful, they need to go beyond true and fair and all that goes with it. The market today is quite different from 5 years and 10 years ago, and it's radically different how it will look in 2 or 3 years time, forget 10 years time. So we must be prepared to constantly be on that change plateau and accepting change and going for change, because change is not bad in itself. It's how we respond to change in that respect. That's the important thing. And you hear it every day, for example, MTD, the end of accountancy. No, it's not. It's changing the nature and how we're doing. And that spans the whole plethora of changes that can impact on accountancy, and more of a how we as accountants can impact and play a role on the world as well too, across all organizations.
Okay, thank you, David. And Anna, sorry to get your name wrong there, but I can see it on the screen. So Anna, particularly in your industry, which is really the tech industry and making that work for people, where do you see it intertwining with people?
Well, first off, I want to say Lucian and David have given a brilliant analysis there, super interesting. I think particularly when it comes to the accountancy space, I can say that a trend that I've noticed tech-wise is automation, the automation of more transactional tasks, tasks that can be done over and over again. And I feel that utilizing that technology will give more remit and space to really give proper credence to this, these kind of leadership concerns, risk management concerns. And so I think that's super important, that technology can enable the accountancy industry to fulfill that by just giving everybody a little bit more time and space. So it's not taking away from accountancy, it's just kind of evolving it and making sure that accountants have, you know, that remit and the time to look at more kind of high level issues, leadership concerns, and that sort of thing, and really analyze the data that they're presented.
That's what I mean. The robots are coming, but they are your friends, is what you're saying.
Exactly.
Yeah, which is nice, isn't it? You know. Yeah. Yeah. Now, going back, I'm always I'm put the world in a sort of pre-pandemic, pandemic, and then post-pandemic world. I think I've forgotten what year we're in sometimes. I've not been very good on one of those tests that my dad has to take all the time. So when it comes to innovation, where in your organizations particularly I'm really interested in is what did you see happen very quickly in your organizations, or what innovations happened? Particularly, I'm more interested in the pandemic and moving forward from there, really. So 2020 onwards. So Anna, I'm going to come straight back to you and just say, so what innovations did your organization do that you were quite surprised about? I mean, and you can put hybrid work in, and you can say, you know, whatever you think you felt particularly for people working mainly IT, but you know, the accountants you deal with lots of accountants every day. So what do you think were the real interesting innovations that you saw?
The pandemic was an enormous catalyst for change within the industry, particularly when it comes to awarding bodies and how they assess students. So we went from a situation where we had a test centre model for most awarding bodies, where a student would go in and take a test in a test centre. It was tried and proven, and you know, it had its positives and negatives, but nonetheless, it's a modality that's existed for hundreds of years. And there was this thought of remote invigilation bubbling along in the ether in the background for years, and we'd had discussions about this with various organisations. You know, would you like to do it? Would give students a bit more flexibility as to when they could take their exam, and they wouldn't have to go into a test centre, and you could have everything kind of all in one when it comes to the logistics of your exam. So the marking, you don't have to send the scripts away and you don't have to distribute them. It could all be there. And there was obviously some interest in that because there's some great benefit to it, but the drive wasn't necessarily there. But come 2020, all of a sudden, this tried and proven model out of nowhere in a way that nobody really could have anticipated, just gone due to health concerns, the public health concern, nobody could go into a test centre. And obviously we still need students to become qualified, to become the great accountants they're going to be. So we had to make a quick kind of change and think, okay, how can we approach this? You had so many different awarding bodies making sure that they were servicing their clients, essentially their students, by getting them online. And we now have a model that really stands up to test centre. In many cases, awarding bodies have replaced the test centre network with remote invigilation, and there's many benefits that we see. There's less stress from students, and they don't have to go far distances to a test centre, and they can do it from the comfort of their home, and we've seen that works. So I think in many ways that was a positive kind of a change and a great catalyst to see that quick pivot. And then I suppose overall in the tech centre, everything moving online, certain actions that somebody would perform, suddenly, okay, I will do 100% of that online. We see e-commerce booming and the high street sadly declining. And all of those sorts of aspects came into play as we thought, okay, how can we speak to each other? How can we communicate? And I'm sure we all have memories of these Zoom parties that we were all on that I'm reliving right now.
Yes.
But now, exactly. But now that's all quite a reasonable way to interact and engage. I know from a way of working point of view, previously at Eindhoven, we had a lot more meetings in person with people, and it wasn't the norm necessarily to have a video call. It was a lot more prudent to go in. And, you know, usually the office would be, we're based in London, the client's office would be somewhere in London. You'd go over there and you'd come back. But now we have so many people working from home that it really makes more sense for us to chat on Teams. So that's been a massive change.
Yeah, and do you think that's a change that's going to continue?
Definitely, it's that ease, and I think so many people are moving to a hybrid model of working where they're going into the office some days and maybe for more high level kind of key decision making in meetings internally all together, and then for the rest of those days, you know, they'll be speaking to their various partners online, and that's perfectly sufficient. So I think it's working well.
Yeah, and David, you know what's the last 2 years been like, and how's innovation been in your office?
It's been great, because I mean, the joys of COVID was it saw the paper-based operatives have to either fall by the wayside or come on board, because before COVID, we had positioned ourselves full paperless with a portal. And it was amazing how many people who before COVID found it a challenge to use. But surprise, surprise, when we made it mandatory during COVID, they soon stepped up or fell by the wayside. So it therefore meant this attitude of we've always done it this way and have bag of receipts to go to the accountant has long since gone, and hopefully it's gone for good.
But it was the same with cash, wasn't it? We all carried cash around, and I can't remember the last time I had any cash in my wallet.
Yeah. And also as well, it changed and our relationships with our clients in how we communicated So we can now communicate with our clients more regularly without being going to them, but face to face online and without staff. The challenge we think there is for the future, though, is we need to make sure, whilst we move to this virtual way of communicating, we need to make sure it aligns itself with our zero or near zero carbon footprint. Because whilst digital virtual communication is deemed to be saving in time, money, and etc., we need to make sure we get to grips with the actual carbon cost of it as well too, and the carbon metrics. But overall, the changes that's happened, has helped us bring the future back to the present much faster, and even much more for the future as well too again. So it's been a great game changer the last period.
And how about you, Usha? Obviously in academia, it's been tough because the students haven't got to see you.
No, I mean, exactly. I mean, there is upside as per Anna, as it was said, because she's in education in terms of exams being flexible online, you can sort of access them and so on. I mean, pandemic has accelerated the use of technology, but every innovation does have the downside. So what the social distancing meant to our students is that they weren't getting the social interaction from the community. They were not learning the interpersonal skills, so what they would learn from academics, from their peers, that wasn't happening. There was a bit of sort of depression going on there, and lack of motivation. Some of our students do not have technology accessibility yet. I mean, we supported them with lending them laptops and so on, but there's internet issues and so on. So I mean it has the downside. I firmly believe learning, fine, it's great, not to travel, you save time and so on, and it's great, you can contact people at the click of a button and so on, but I still think we need from the academic side, we still do need that community to learn from. So I think interpersonal skills for students was lacking, and they were feeling less motivated than they would do otherwise. So when we went from on open book exam with 24 hours and submission from anywhere in the world, because some of our students were stranded, what happened when we went back onto on-site campus exam, that skill of writing and the things that we would do together in terms of games and things, physical games, sort of in a classroom, discussions, and just sort of working on flip charts and so on, all that was missing, all that interaction. I mean, you can do that on MS Teams. Yes, we did play games on MS Teams and group sort of breakouts and so on, but it wasn't the same. So there was the downside of it, and I think people do need people as much as technology is there and so on. So as much as I do share the passion of technology and remote learning and online exams, but we do have students who were disrupted by doing exams at home because they were disturbed or the technology wasn't working. So I mean, there's flip side, upsides, downsides of every innovation. So when we think about innovation, I think we should think about long-term impact it's going to have on people and skills that we will lose out as a result, Graham. That's me personally. I don't mean to be doom and gloom, but that's the feedback I got from my research, was that students wanted hybrid learning in terms of, yes, it was good to have that recordings, they can rewind, they can play it again. It did increase accessibility to students who were learning at a different pace because you had that learning panopto video recorded and so on. But the downside was the fact that they missed their friends, they missed that uni life, and hence all those protests you had with various universities and students sort of not having that life. And I felt it. I think it's good to go out to work maybe a couple of days, but it's also good to be at home and catch up on your work because you get a lot more done at home.
Okay, one of the other things when I was putting together, and we're talking about the whole concept of accountants being innovators and stuff, was whether innovation is always a good thing. I remember particularly in accountancy exams, students, and I've said this story many a time, is when I've got two small businesses, and when an accountant comes to my office, and rarely so these days because it's hybrid working, I was always disappointed they didn't bring their own calculator. The idea that they had to borrow one of mine just seemed, as an accountant, I thought that one of the key tools would be your calculator, and you'd take it everywhere with you. And so it's one of my stories, sort of that I love to tell. And actually that translated into the fact that when they had exams, and they went into exam halls, they like to use their own calculator rather than the on-screen calculator. Because they had scientific calculators, they knew how they worked, and instead of practicing online, they hadn't, and they got this calculator. They'd taken them all the way through their AAT exams, maybe to ACCA and CIMA, so they'd had these calculators all the time, and so they weren't prepared to sort of change. And I just wondered, so it comes down to the question is, are innovations always positive? And what about sort of innovation and obsolescence? And I don't want to be a Luddite. I mean, I really do believe that, sort of, as I said earlier, I started my career on a typewriter in the 80s, and we didn't have computers and we didn't have, mobile phones. It just seems bizarre that I'm surprised I got anything done. And so the world has changed so much for the better. But is innovation always good, is what I want to say. And sometimes do we just chase things, because everyone else is doing it? I mean, I'm not saying, Instagram is bad, but I'm just it's just an example. So, David, I'll let you go first on this. Is innovation always good?
No, I mean innovation on anything. There are, as Usha said, there are good and bad. I mean, and the example you quoted there about the exams is one that is exercising my mind right now, because you've got students who are doing tax exams and they're being assessed by different skills. Traditionally, you write exams on paper. You're now writing lots of exams on a computer, typing. And if you like me, I write fast and I can type. So there's that challenge to deal with as well too. Also as well, as you said, the calculator online, whereas we had your traditional abacus or one of these machines, you can tap and you're okay. But with,
I like to see that, David. You've got that right next to you. That's what I like to see. It's almost strapped to you. Have you got a little special belt that you put the calculator in that you carry around with you? Look like a gunslinger, When you go into someone else's office, you just whip it out. Is that what you do?
Most definitely. It's part of the trade. I mean, we traditional, yeah. But also as well, I mean, no, but there are some drawbacks, but we need to balance that with some of the good that comes with it as well too. Often the speed, greater efficiency, and also as well too the learning of new skills and broaden the mindset. So we need to balance them out completely and recognize, yes, we are changing, and sometimes we need to change for the right reasons rather than just change for the sake of it. One of the greatest change, I'm still not convinced was the best change. We had a change in currency in the 1970s from £12 and pence to this new currency of pence in decimalization and so forth.
But it's so much easier. Surely it's so much easier to add things up. It's money it's just because you could show off, isn't it? You know what 12 12s are, 144. Yes, it's like it's just like as accountancy showing off, isn't it? 1 to 10 has got to be better. I mean, I must admit, my dad used to run 100 yards and I could never quite work out if it was more or less than, I shouldn't remember it, but less than a meter, but I've forgotten yards now, so it's a bit like, sort of, I don't suppose we get the pint. Is that okay, David? We get the pint, didn't we?
Yeah.
Sorry, I got distracted by your I've never heard anyone say they actually wanted to go back to the old threepenny piece.
No, I mean, lots of people you speak to still are happy with the pre-decimal currency and so forth. So again, it's horse for courses. So the change going forward was easier in tens and so forth, but some people had their minds in that respect, and that's the change per se. And
was that 1973 we're talking about, isn't it? Was it the 70s that the decimalisation came about? 71. Okay. I get confused. It was such a long time ago. I was alive though. I must admit I was alive. So that's two old men talking. Sorry, Anna. About what before you were born. and you're in a different country, so you wouldn't have had.
We had shillings.
You had shillings.
We had the Irish pound. It was the punt. But yes,
of course it was. Yes, I remember that. So our innovation's always positive, Anna, and you know, sort of, we worried about, you know, obsolescence, and you know, I think we touched it a little bit. You know, the robots and all the other stuff. Innovation's always good.
I would mirror David's points, maybe not necessarily about the shilling because I can't speak to it, but innovation for innovation's sake is not a good thing. There needs to be a clear benefit derived. There needs to be some sort of analysis, and usually that can kind of happen quickly. It's not necessarily an analysis, but the market goes, okay, this is clearly the better thing. So something like CD to MP3, kind of a clear that's a better model to store your music, to listen to your music, that sort of thing. Where you're getting into issues, I think, with innovation sometimes is if people aren't brought along the journey, if there isn't that skills training, if, you know, people feel like they're being left behind, and I think David touched on that as well. So people need to feel like they're brought along with the innovation. And no matter what your background or age, like that everybody goes along with that, I think is super important. And then what you really want to avoid are aspects like planned obsolescence. So where you see that quite frequently is the iPhone and a new iPhone out every year.
Say. Yeah, that's exactly what I was going to, the commercialization almost of innovation. Isn't it? The pretense that you're getting something slightly different, you know, and someone stands up once a year and tells you we're now on 12 or 13, and then that means I have to go and get in a queue somewhere in Regent Street, don't I? So I can get the midnight, I can get this new phone that looked a little bit like the old phone, but don't tell anyone. And you know, but I can pay £1,000 for it instead of £900 because it goes up by £100 every year as well. And seem, you know, it's almost like fashion, consumerism, innovation, isn't it? All melded into one. Apple have done a fantastic job on us all. It says a man who owns an Apple phone.
Pixels.
Yeah. So yeah, you're absolutely right, Hannah. It's so true. And exactly as you were saying that, and we all thought the same thing at the same time. It's amazing. And Usha, innovation always a good thing?
Well, I mean, I agree with all three of you. Innovation has its positive, and it can also harm the fabric of society. So I teach a module on sustainability, and we talk about end of product life cycle and, you know, dismantling of, whether it's nuclear waste or mining cleanup, and what I saw a program actually on how UK actually shipped its plastic wastage to Turkey, thinking it was going to be recycled, but obviously, you know, the organization in Turkey felt it was easier to burn it than to recycle it. So there are gaps between the rich and the poor countries and innovation. There's also environmental degradation. We talked about the melting of Arctic, Antarctic, the coral reefs, the rainforests, the deserts, the expansion of what Somalia went through, is going through now, the droughts and the fires and so on. That's something as a result of innovation, we are sort of destroying, you know, the biodiversity of our planet, and then there's innovation and accidents that occurred in the 80s as a result. The standards sort of came into disclosing that's the Bhopal gas tragedy and the Chernobyl. So there are innovation that can go wrong, and there are sort of innovation where, you know, where we use too much pesticides and too much antibiotics, causing viruses, super viruses and super weeds. So innovation has sort of downside to that, because you've got to keep innovating in those areas of, keeping up with the viruses and the different variants that we've kind of learned. And then digital technology, they still has hidden biases of humans within that. So that, you know, there'll still be sort of discrimination of whoever puts in the data and how it's being used. So there's that sort of area. And I am one of those. I know, the rise of the machine and Terminator, and, you know, the social media and the impact it has with fake news. So social media has sort of harmed society, the younger generation. interaction with what's being posted on there. So there's that element as well. There's also harms to society with, I don't know, where was it, on one of the organisations where they had the wristbands on workers in warehouses and they were being monitored their every move. So that was a bit of a scary thing with innovation and how people move and what they did and so on. And there's also patents and innovation and the monopolizing of that. Does it breed competition or does it kind of prevent competition? So there's that element as well. So there are pros, there are cons.
You found quite a lot of cons.
Yeah, I did because
I was getting depressed just listening to that list. It was
when I look at it, I think I've been watching too many Terminator movies.
we need to change what you're watching on the TV. I mean,
I'm more of a Star Trekky fan, but since Terminator,
it's funny you should say that. You made me. I've changed the question. There are some questions coming in, and we'll get Neil on in a minute. But you've changed. I've changed the question. I'm going to ask each of you for one innovation you want to see in the next 10 years that you think will change your life, the world. Something nice and positive. So Usha, I'm going to leave you to last because you need to get rid of that negativity. And I want lots of positivity about, sort of an innovation. I'm trying to think my innovation, or while I'm talking out loud, I'm trying to think out what my innovation would be. A long time, there used to be a man, with the jetpacks. And it used to be out, and now they're actually, and it was a bizarre thing in the 50s. You just see this guy and he just fly into a building and almost kill himself. But now they've got that guy who can actually fly. And unfortunately, of course, it's being used for military purposes, which is always one of the problems about innovation is, the people who can afford to pay will pay for it. So I thought the idea of just being able to just fly to my next meeting would be absolutely fantastic. So off the top of my head, that's not a very good one, but that's an innovation I'd like to see becoming much more, there are going to be air taxis. So when you fly into Heathrow, I think Heathrow's one, and then there's a couple of other airports in the UK that have been put aside to actually, they're going to have a sort of flying car that you can, and then the car will fly into London. And just to avoid all the traffic. So that's going to be a reality. There's a couple of companies who have just painted in ideas for that. And so, but that's probably about 30 years away. So you'll be able to fly into London and then fly into your hotel probably, and there'll be a pad at the top of the hotel. So you won't have to see any of London at all, which I always think is part of the fun when you go to a foreign country is, go through in the outskirts of Rome and actually see what real Rome looks like before you see all the Colosseum and stuff. So Anna, I've chatted long enough, I hope, for you to think of what fantastic innovation would you like to, and of course, everyone, it could be in accountancy because, that's what we're looking for. And also people, if you're watching, if there's an innovation you'd like to see, I'd love to see what ideas you've got. I mean, last year I asked everyone what they were going to get, what was an ideal Christmas present, because people were starting to get a bit Christmassy. But this year I'm going to ask you, so what innovation would you like in your Christmas stocking? Anna, there you go. I'll ask you first.
It's interesting because I think somebody has just put in the chat what I'd like to see and what's already happening with the metaverse. What Usha was speaking to earlier about students feeling a bit disengaged from that classroom experience when they were at home. Obviously, they couldn't have that on-campus experience, but if they had something like the metaverse, I'm not saying it would have been a replacement, but maybe it would have gone 50% of the way there. The idea that, you could put on a headset and speak directly to your classmates, engage directly in the classroom environment.
How would you catch glandular fever though? That's
another downside.
The first month at university, everyone catches glandular fever, don't they? Anyway, okay, so the metaverse, an interesting concept. I mean, Facebook's share price has been bombing since metaverse was introduced. I don't think.
I'm not quite sure if they're going to make that work, but the concept, I think, in at least 10 years, maybe it could work. When you see what the little kind of previews that they've given and what it actually looks like versus what they have ads on TV showing, this actual madness.
People who don't know, Anna writes a monthly column for me as well. And we're talking about, I was told by someone not to mention this, but there's Elon Musk, and they've got this idea of putting a chip inside your head, haven't they, at the moment, where you could have all your information. So if you're a lawyer, you could have all the test cases, or if you're an accountant, you could have all the international accounting standards, and you could just, if you called them up, they would come into your brain, sort of into your eyesight and stuff. That was a sort of, I haven't put that on my innovations I want to see particularly. So David, an innovation you're really looking forward to?
I suppose global travel without aeroplane. You can tap your chest and you can go to where you want to.
Oh, you really are going Star Trek then?
Yeah, I was going to say energized.
And we have to sort of disassemble your cells and then put them back again and then send you somewhere.
Carbon free as well too, so it'd be wonderful, I think.
Well, we're 80% carbon. As long as you get all your carbon back, you'll be fine.
That's what I was going to say.
Okay, so you really are going Star Trek. That's fantastic. So yeah, we'll see what we can do for you, David. Yeah,
that was great. Yeah.
And Usha.
Wow, I mean, brilliant ideas there. Flying, being a Superman to having holodecks. It's a holodeck, isn't it, to have that virtual environment and then energize and going on to a different planet or different place. With me, I love food. So I would like to have a Star Trek replicator, which you just say, I want Earl Grey at this much temperature, and it just energizes. They're a bit like a microwave where you speak to it and it comes out the food. Saves the hassle of going shopping, buying things, cooking, and so on. So I would love that, especially on busy days. I mean, I do love cooking, but I would love to have that instant food that tastes like food and not processed food. So. Yeah,
it's interesting that none of you chose any accounting stuff. I mean, the blockchain is, I find the blockchain really fascinating. It will change the work. It's incredibly interesting because the way about the freedom of it, the transparency of it, that everyone can see it or you can't, and people always explain it, and Ross did a really good job today, but I'm never 100% convinced that it works. But then, sort of, I'm not 100% sure about Bitcoin myself, but there you go, it's still there. It doesn't mean that we won't. I mean, I suppose one of the things we will get a digital currency. So innovation, the fact that Bitcoin's here will actually mean that we will get, the Bank of England will actually introduce a digital currency for us, and because they have to, so that's going to be when we have national digital currencies, and people will, like Chris will, explain, we'll be able to find the fraud in that, and if you have to watch all the whole of today to find out all my references. I'm really sorry about that. It's been a really great day, by the way. Have you been watching all of it, David?
Most definitely.
Yeah, I think it's been our best. I really do.
Yeah, enjoyable.
Yeah, who would have thought innovation would bring out the best in people? There you go. Neil, do we have any questions?
So there was a couple come through. There was one that came through this morning actually from Alice, and it's very much related to what you've been talking about. So what do you think are the biggest innovations in the accountancy profession in recent years? I know you've just covered blockchain, but what are the other ones that we can be proud of to look back on, and then maybe that might impact the future?
I'll help people out no, perhaps I won't steal your thunder. Is David, I've got one, but I'll let you talk, David, if you want to.
I think for practice, and especially small practice, it's cloud accounting, but moreover about paperless, where you can actually upload receipts without having to go through those famous days of endless bag of receipts and stuff. Because this morning, I think it was was it Chris who said that you don't spend your career after university going through these menial tasks. So now that we have the ability to actually upload their data, their receipts and so forth, and we can analyze it much better. So you can develop much high level skills in that respect. So we're moving away from reporting what's happened, but helping them analyze and project where they're going to in that respect.
And that's all done on the cloud, isn't it? So it's so it's you don't have to worry about someone else is doing all that storage for you. I mean, I think Chris mentioned Xero, but you've obviously got Sage and QuickBooks all offering really fantastic services that and they're really pushing the boundaries on that. So they are actually the software providers are really innovating, aren't they? That's great. What about you, Usha? Is there any innovation?
I mean, there's lots. Cloud accounting's been mentioned, artificial intelligence, machine learning. What Nilu talked about today about the RPA, optical character recognitions, where you just kind of scan things on your mobile. I mean, now you can actually have mobiles on demand reports. Just look at your mobile, and you can sort of do your accounts. You don't need laptops. You don't need access to sort of anything else but your sort of a mobile phone. And hence I think the new developments of mobiles are allowing more and more tasks to be done on your mobile as opposed to laptop. They're as powerful as your laptop. So I think there's a lot going on there. I haven't used all of it. I haven't got iPhone 14 yet, but yeah, there's quite a lot going on.
Yeah, and I know it's particularly in the ed tech field. Do you see innovation looking at? I'm just looking at the way you test people. You could have vivas and stuff. That hasn't really come in yet, has it? You're still. I'm not saying it's two-dimensional because it's not, but I mean,
I mean, from an innovation point of view, we're seeing all sorts of kind of moves to certain changes to mirror how people are working now. So a lot of integrations with those software providers to make sure that somebody can learn using that platform. And also awarding bodies are looking to kind of mirror their questions and link in with those softwares to make sure that their accountants are, tip top when it comes to that. So seeing a lot of that, and I think more generally, seeing a lot of the use of AI for real-time kind of assessment. So we could be in a scenario within a few years. I think I saw a great talk by the University of Manchester. They're working on some software to test medical students, and it's basically they're in a hospital environment. They have a sick patient that they're talking to, and the patient is responding, and they're diagnosing that patient.
Yeah,
and that's all done through AI. So I think that's brilliant.
Yeah,
that was in the news today. Yeah.
Yeah, I've seen some universities. We've seen those around. Oh, obviously, my one, Neil, is about the finally the international community, accounting community, is trying to get its head around sustainability and introduce a separate body that will look at introducing standards. It's taken too long. It's 20 years old, too late, but it's there. The LSBU or whatever it's called. I should remember its name. We live in a world of acronyms, but I've got too many in my head these days. So that's, for me, it's about sort of the green and accounting. We have got to save the planet, and it was one of our this is our 6th conference, and it was one of our first ones, I think, if you remember, it was 3 years ago, is Accounts Will Save the Planet. And we had a fantastic day. I think it was one of the last ones we were live, actually.
It was in person, yeah. Yeah,
it was in person, and we had we had Professor Atkins talking about saving bees and why bees are so important. If you don't save bees, then they don't pollinate. They're the pollinators. Then we all die. So if we don't look after the insects, and this was done completely from an accounting perspective, saying, sort of how you crop yields and all the other things you were looking at. There's no point worrying about anything. If we haven't got bees, we haven't got anything. We can't sustain life. And that's the sort of conference we have, isn't it, Neil?
It is.
Yeah.
We've got a final couple of points in the chat box, if you're happy for me to dip into those.
Yep.
So in terms of innovations people would like to see, Deborah says innovation that can detect and stop deadly disease before they materialize in people to enhance perfect health system. And Baha says, my inspired innovation would be to replace cryptocurrency with the fiat currencies for global economic purposes. Final question from Baha again. I conclude, since starting, that innovative accounting is to take in consideration the traditional accounting functional system with transition into a clear, agile mindset, open to the inherent change of tomorrow. How do you all see that conclusion?
I'll leave that question to the academic first.
Sorry,
Usha, that's yours.
Can you repeat that question? Sorry, went a bit.
It's quite a complicated question, isn't it?
Yeah, just a question.
So yeah, Baha concludes that the innovative accounting is all about taking into consideration the traditional accounting system with a transition into a clear, agile mindset open to the inherent change of tomorrow.
Yeah. So what do I think about that?
Yeah.
Okay, right. I mean, it is, as I said, when I answered the very first question Graham asked, it's about not linear thinking. So we have to take into account risk. We have to take into account various things in environmental reporting and net zero. We have to take into account climate change as well as changes in health situation in terms of changes in cost of living crisis and so on. So all those risk things that I mentioned, they have to be all embedded. We cannot have a mindset that's kind of linear. We don't want to sort of say, well, we never saw it coming. We want to have a mindset saying we saw it coming, we took action, we were accountable, and we provided all the information that was needed to support the organization and people within it. So accountants, data, the more data there is, hopefully the more sort of that data translates into action. So that's how I see the future in terms of that question, answering that question.
Okay. Anna, do you want to give that a go, or is that outside your remit?
It sounds right.
Oh, you're happy with Usha's? I'm not sure. I'm going to leave the last thing for David to say. But before I think we need. I think what people are saying, we need the technical expertise, but with that you need to add self-reflection, and sort of between the two of them, I think we want a thinking accountant, not an accountant that just follows the rules. There's a rule book and there's the book, away we go. For innovation and accountants to actually make a difference in the world, we need them to be thinking, what does this actually mean? The information they provide needs to be useful to not just one person in the, it doesn't need just the MD. I think sometimes they're producing stuff that only one person wants to look at, and they're the only ones who understand it. And I think those days must be gone. So use the technical stuff, but but try and explain what you're doing, and it's about ownership as well. Who owns the analytics, as Chris was talking about, is provide that information that people can understand. Your job really is to translate the figures into a world that everyone can understand, so everyone gets an equal chance of making the judgment of what's right and wrong. David, is that giving you enough time to answer that? Think about an answer.
Yeah, I mean, I think really the question is quite correct. I mean, we have the traditional accounting, which is built on our core principles, but we need to make sure we approach it for today and tomorrow with an open, flexible mindset. And key to that is demystifying accountancy and our language as well too.
Yeah.
So we are agile in how we can move between positions. I mean, and we saw our agility tested during the COVID period. So we moved from backward accounting, the balance sheet accounting, and started accounting for the business. So we're now going forward now and embracing all the add-ons to where we traditionally were, and start communicating for the purposes of all the stakeholders, both internal and external, and not just to the directors or shareholders in that respect. So the future tomorrow is where it will be in terms of accountancy will become not just standalone, but be an integral part of the business and other sectors, other professions as well too. So we'll be key around the business, and we'll be integrating with other partners as well within the business world. So yeah, we will have had our foundation, but we broad enough to have moved and helped businesses grow to realize their long-term goal.
Okay.
And I think that foundation is very important. I don't think we should forget the basic. I mean, double entry still stands, and to have that basic skill, but to grow for tomorrow is great.
Yeah. So part of any innovation, don't worry, you'll still have double entry bookkeeping. It's almost a way to end, really, now, if that's okay.
Yeah.
Can I just make a few thank yous? I want to thank all our partners who worked with us, which is the AAT, the ACCA, SEMA, SIPFA, ICAW, ROGO, GapWeb, AMLCC and FA Sims, who all helped us make this such a great day. I also want to thank Neil. Thank you so much, Neil. That's our 6th time working together. He has put up with me for 6 whole years. So we must be doing something right, eh, Neil? That's great. So thank you very much, Neil, for everything. Yeah.
Thank you.
And thank you all for watching. Thank you for listening. As Neil will tell you in a minute, it's all going to be available tomorrow. I don't know why I'm whispering tomorrow, because like that's special, it's secret. And just thanks for staying with us throughout the day. I hope you had a great day and you at least take something away from it. Thank you.
Usha, any closing notes from LSBU Business School?
I think it's I've worked with you guys now 2 years. I've thoroughly enjoyed it. You're very approachable. You're easygoing. You all got heart of gold. So thank you for welcoming me and making me feel great. So yes, thank you to everybody else for coming and playing their role and part. Thank you so much. That's brilliant.
Brilliant. Well, thank you, everyone. As Graham mentioned, this recording will be live tomorrow on our LSBU YouTube channel. Please do share it with anyone that you feel might be interested in watching. Your support can help us bring the many important conversations that we've had today to a much wider audience. Continue to share your thoughts and comments on Twitter as well. And I'll pop the hashtags and Twitter handles in the thank you email tomorrow. But have a lovely evening and thanks for today. Over 600 people registered. Wow. We've had hundreds of different people drop in from all over the world today. So it's fantastic to provide spaces like this to celebrate the profession. So congratulations, everyone, and we'll be in touch soon.
And the final thank you to Graham as well, too, for organising as always. Thank you, Graham.
That's all right. Thank you.
Bye. Bye.
Bye. Have a good day, everybody. Bye.
Thanks, everyone. Bye.
Thank you.